and the disinflation story should, in theory, continue. So where's the biggest risk to that disinflation narrative?
So I think the biggest risk is that we see that it's going to be a bumpier path than what we saw over the past 6 months. So I still think that disinflationary trend is in place, but it's going to be slower.
여러분 안녕하세요. 뉴스 읽어주는 여자입니다.
In terms of what could be driving that, I think it's really going to come down in the near term to what we're seeing in some of those core services. So how much those have come down, I still think that those are likely to be relatively sticky.
오늘도
And in the back half of the year, I'm going to be looking more at goods
이렇게
prices. So of course, we've seen
하려고요.
some tremendous benefits from the normalization of supply chains, the better inventory picture. But now that we've seen
오늘도
more
오셨어요.
normalization in supply chains, and if anything, more stress coming with some of the recent shipping issues, that disinflationary impulse that's been helping bring down overall inflation so dramatically that fades and makes it harder to get all the way back to that 2% in a confident and sustained way.
오늘도 라이브를 조금 일찍 시작했어요. 어제 보니까 좀 결과가 나쁘지 않아서 일단 시장 열기 전에 조금씩 돈을 모았다가 나중에 시장 열 때쯤 그때 이 모든 돈이 좀 어떻게든 쓸 수 있으니까 오늘도 그러려고요.
That's weighing on demand, but at the same time you have seen those supply and inventory improvements, and so it's a bit muddled in terms of how much the Fed's doing work on that. But we've also seen it in housing. So of course, with how high mortgage rates have been, that's been keeping a lid on further home price appreciation, and we have seen shelter inflation begin to roll over, and we think that has a lot more to run through this year.
You talk about cracks in the consumer. You specifically say cracks are starting to appear in the household sector delinquency rates, especially on auto and credit cards. And we've seen delinquency on credit cards, I think just last week, ratchet to the highest level that we've seen in 10 years. Is that a slow-moving car crash?
I think it is a slow burn that you see as the longer
rates, not a crash.
The longer rates stay elevated, you're seeing consumers get increasingly squeezed. So if you haven't had to buy a car in the past few years, you haven't been affected by these rates. But as the longer rates stay high, you have to step back into the market. Now you're feeling it. And so you're going to see this continued stress when rates stay high. And I think that's going to weigh on consumers at a time when we've seen that their financial position has worn down over the past few years. So they spent down some of those excess savings. And now with the labor market, that doesn't seem to be on quite a solid footing either. Suggesting that you're going to see a slowdown in aggregate income, which is also going to affect the spending picture in the year ahead.
Yeah, well, Manus is finally going to buy that Aston Martin he wants this year now that he's in New York. So
I'm hoping somebody's got a cheap one to sell me, yeah.
He'll certainly add to that. Hey, Sarah, thank you so much for joining us early this morning. That's Wells Fargo's Sarah House. We appreciate your time. Coming up, merger blocked. Why a federal judge ruled against the $3.8 billion JetBlue Spirit merger, with President Biden praising the decision. We have that.
미안합니다.
나의 실수?
사실은 맞습니다. 단목님이 좀 많이 늘었어요. 어제 시작하자마자 조금씩 5만원, 6만원 이렇게 모았다가 나 이따가 한 10시 30분쯤에 그 어떤 발표 사실 잘 기대 안 하지만 아무튼 발표하고 나서 되게 큰 롤러코스터 겪고 나다가 마지막엔 좀 괜찮은 금액을 뽑았어요. 한 62만 원 정도? 그러니까 지금은 기분이 너무너무 좋아요. 단문금 계속 늘어나고 있어서 그러니까 이거 할 수밖에 없죠. 계속 할 수밖에 없죠. 그러니까 여러분 초보자들도 이렇게 할 수 있어요. 조금씩이라도 이렇게 할 수 있어요.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
뭐 역시 자트 보니까 예측할 수 없고 그러니까요, 좋으실까요? 오늘은 일단 지금 괜찮은 타이밍을 보고 그때그때 알려줄게요. 아직은 감이 안 와요. 신이시여, 감 좀 보내주세요. 먹는 감 말고.
We are employing at the end of this year around 320,000 people. So the number of people that we employ has been growing and not shrinking. So I think that where we see opportunities and we can help our clients for sure, we will focus on that.
뉴스를 이제 막 검색하기 시작해서 지금 주식 시장에 뭐가 벌어지고 있는지 아직은 잘 모르겠어요.
Bloomberg's Charlie Wells. So 2024, Charlie, the year of investment banks finally see a deal-making rebound. I can't get a cup of coffee with some of my buddies here on Wall Street. They're just too busy. They're on planes. They've got no time for their friends because they can smell the deals.
Yeah, Manus, I mean, look, this is a year that a lot of people have been waiting for, but I mean, it is the 17th of January, and it's easy to be optimistic this, not far into the year. But we did hear some of that optimism in some executives' comments yesterday on earnings reports. So David Solomon, Goldman CEO, talking about optimism about his pipeline. We heard the CFO of Morgan Stanley, Sharon Yeshaya, talking about positivity with some CEOs in boardrooms. But of course, we heard this last year, right? 2023 was supposed to be the rebound.
이렇게 좀 많은 사람들한테 저 같은 초보자들한테 좀 그나마 조금이라도 됐으면 좋겠어요.
You also have Schwab, U.S. Bancorp, Citizens Financial. A lot of these regional banks that gave us a headache last year are going to be reporting today. What are we expecting?
I mean, look, they're going to be so happy to see the tail end of 2023. And I think what we're really interested in looking at is net interest income and credit and asset quality. So when you think about some of the banks reporting today, Charles Schwab, we've got U.S. Bancorp, we're expecting to see some, negativity around net interest income. And that's something that could, not bode well for their earnings, but also credit and asset quality. So I'm thinking here in particular about M&T Bank. They are reporting on Thursday, and what's going to be really interesting there is they have a lot of exposure to commercial real estate, which we know has been under strain for a long time now.
Well, you teed it up beautifully there. Now, let's talk a little bit more about Charlie. Thank you very much. Let's talk a little bit more about real estate and where the banks have a fair amount of exposure, because it's Blackstone, isn't it? Blackstone Real Estate Income Trust posted its worst yearly performance in history. Danny is asphyxiated, first of all, because Colin Keller has put a death knell into private credit, and secondly, because B-REIT has come under pressure. So come on, talk us through B-REIT. How bad is it? I mean, how much pain, the worst loss ever, how much pain was it?
It was stunning. I mean, look, they lost 0.5%. It was a 0.5% loss last year. Compare that to 2021 when the return was 30%. So that is a really striking difference. And it really comes back to a bad hedge. So, I mean, B-REIT was really kind of bragging rights for wealthy investors, allowed them to invest in real estate, which, of course, is famously illiquid. There was about $70 billion there at one point. And look, Blackstone hedged high rates, and that actually really did not bode well for them last December when some key rates actually fell, and that lowered the value of some of those hedges. The December loss was 1.2%, so that really dragged them down. And I mean, look, when you think about this, in a memo, Blackstone said that a lower rate environment could actually be helpful going forward. Again, that sense of optimism, hopefully going forward into 2024. But look, we saw over the past few years, clients trying to pull money about $14 billion pulled out since, November 2022. Redemption limits having to be pulled. So they are really hopeful that, there is going to be a lower rate environment. But of course, analysts have been talking about how potentially that could be pricing in too many lower rates in the year ahead.
Yeah, it's still not easy for them. And Manus, let me just say, I know I've been obsessed with this because, I mean, it's been a thorn in the side of Blackstone. Schwartzman even told me how much he disliked how the media was paying attention to it. But also just can I just say, a bond guy who doesn't do real estate at all, like a treasuries guy, sent this to my inbox saying that we're worried about this. Everyone, no matter what market you swim in, is fascinated about BREIT.
Listen, everybody's just trying to find the canary that died in a coal mine and find it early so that they can be ahead of the curve. Don't worry about that. Everybody's looking everywhere under the rocks in terms of where the risk is.
Yeah, that poor canary. Hey, well, Charlie, thank you very much. That was Charlie Wells joining us. Let me move on from that sad
Charlie
imagery.
looks suspicious on the canary.
Wait, does the canary die? I thought it was supposed to like tweet or something like that. It dies? That's the canary in the coal mine?
Usually you find that it's a dead canary. By the time you've got a massive error on your hands, I assure you, this is from reality. You find the canary not only died, but it's gone to canary heaven by the time you're dealing with a mess. I assure you.
I truly thought it was when the canary made sound. I didn't realize it died in the metaphor. Okay, anyway, Manus, let's move on from my naivete. It's Spirit Airlines. It's extending a decline in the pre-market after plunging 47% as a federal judge blocks JetBlue's $3.8 billion acquisition of the airline, saying it violates antitrust law. President Biden reacts to the decision, writing the ruling is a victory for consumers everywhere who want lower prices and more choices. My administration will continue to fight to protect consumers and enforce our antitrust laws. Joining us now is Bloomberg's Sid Phillip on this. Sid, we'll talk about the Spirit side in a moment, but when it comes to JetBlue, without this deal in hand, can they compete with the Uniteds, with the American Airs, with the other big behemoth American airlines?
So it's really difficult for JetBlue to compete with the bigger carriers, especially in terms of setting price. And I think in terms of setting prices and sort of being able to be a market maker. And so essentially in an era when prices are sort of the biggest factor for the airline industry, especially with your cost being so variable. I mean, being able to compete with the big four was really JetBlue's aspiration with this deal. And without it, it is much, much harder for them to sort of break out of the league of smaller carriers and become a much bigger airline.
Look, what does this mean for the industry, for the other carriers? You've got I was going to say top tier, but that's debatable when you get on some of the planes. You've got those larger bulk carriers at the top, and then you've got everybody else. I mean, they must be going, this is great news. This just consolidates our position.
So it does sort of cement the position of the current big four, but it also sort of blocks the carrier's acquisition. I mean, it makes things complicated for the likes of Spirit Airlines. Where do they go from here? They have 200 planes, and what happens next to them, as well as other potential M&A in the industry. I mean, we've seen Alaska talking about their takeover attempt at Hawaiian Airlines, and so we don't really know where it goes from here and what that bodes for the larger industry as a whole. But it does sort of cement the position of the big four carriers and sort of relegate the other ones to sort of second tier status.
It could be a call to Michael O'Leary at Ryanair to come and help the system out over here. I think he nicked the model from here. Or no, he built the model from here. I should say, not nicked it. So thank you very much. Maybe it's time for Michael to come to America. Bloomberg there on the JetBlue $3.8 billion deal with Spirit. That is turning into a nightmare. Coming up with Danny and myself, we're going to take a look at what's on the slate for today. What's going to move your market? It's just gone 5:51 a.m. in New York. Good morning.
봅시다. 코스피 인기 아무튼 다 떨어지네. 다 발견뿐이네. 나스닥도 지금 계속 갭 들어지고 있네. 그러네. 어제는 좀 재밌었어요.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
한시침 이렇게 많이 떨어졌구나 그때. 쭉쭉 떨어지고 있었어.
The reason why Warren and I got to know each other is he insured my contract, the 252. And I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years,
어제 제가 매수했나? 매수하고 잘 빠져나왔어. 진짜 잘 빠져나왔어.
And then the two rules of investing are: one, never lose money, and number two, don't forget rule number one.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's Bloomberg Brief. Danny Berger in London, Manish Cranny in New York. Okay, let's get you set up for your trading day on this Wednesday. Here's a look at what's ahead. Economic data releases pick back up. U.S. retail sales at 8:30 a.m. Eastern. Then we get industrial production data at 9:15 a.m. Then it's more Fed speak. Barr, Bowman, and Williams all on deck, plus the Fed's beige book that's out at 2 p.m. And President Christine Lagarde speaks again at Davos at 10:15 a.m. Eastern. Manis, it was already that central bank speak, the data that's been moving markets. It's been bad for stocks, but there's also more bad news for Tesla that's moving shares this morning.
Yeah, I mean, the whole sort of tech complex is adjusting to this jolt higher in rates, so that growth to value narrative. But Tesla, they cut their model Y prices, Danny, in Europe. And again, we talked about this a lot last year in China. Musk really having pressuring the board there for another massive stock award. So there's a couple of different things. I mean, Tesla's had quite a battering this week because there is angst, of course, between Musk and the board there as well.
Yeah, Apple's also under pressure this morning. You can see they're down 1%. I mean, they've had a tough go of it this week. Again, it's the entirety of the tech complex having a hard day. Apple is also going to allow for outside payments for apps after a U.S. decision on an antitrust lawsuit. But I will say Dan Ives out with a note overnight saying that they expect a strong fourth quarter tech earnings season. So maybe things will get better.
Don't forget, Dan Ives is the evangelist that sees a $4 trillion valuation on Apple in the near term. PayPal dips, Mizuho cuts down to neutral on competition pressures. And you just think of the raft of technology companies that are coming into this payments business. And this is where the Fed is really, really grappling with what are these businesses, how to regulate them, and how it's going to upend U.S. banking, global banking.
Yeah. No, it's a very good point. Manis, also oil declining quite significantly. It's caught up in that risk-off move. Again, Manis, despite the concern about geopolitics.
Yeah, I mean, look, the geopolitical situation has yet to really be priced aggressively. Oil drops in China
님들이 오늘 날씨가 좀 어땠어요? 우리 같은 경우는 오늘 낮은 눈이 왔거든요. 그때 진짜 예뻤는데 조금 있다가 비가 와가지고 날씨가 진짜 너무 별로였어요.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive,
광고
starting
보시죠.
at the top with a pair of CEOs.
What we realized very
블룸berg
early
광고
on is if
보시죠.
you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
I am a believer that we are going into a soft landing. I think that there's a lot of cash on the sidelines today that even at these rates is going to come back into the system.
The markets have now priced in what I think is probably excessive interest rate cuts in the U.S.
The Federal Reserve, if anything, is going to err on the side of holding interest rates.
The 6 rate cuts, that's a pipe dream if we have a soft landing. That's not happening.
The market is now calling for a 175 basis point cut by the Fed. Really? How about this? No way. No way at all.
This is Bloomberg
아니,
Surveillance,
그러니까
live from the World Economic Forum in Davos.
계속 떨어지고 있었는데 근데 좀 숏으로 하면 괜찮지 않을까 싶은데 근데 최근에 롱으로만 계속 했으니까 그리고 결과가 좀 나쁘지 않았기 때문에 롱으로 계속 하는 것도 나쁘지 않을까 싶어요.
Or you have the soft landing and no rate cuts. Pick one, and no one really wants to.
The last 24 hours has been absolutely fascinating. You've had President Lagarde here in Davos doing a wonderful sit-down conversation with Bloomberg's Francine Lacqua, pushing back. You've had Governor Waller in the last 24
이 사람들이
hours,
뭐지?
back. Not on the idea of rate cuts this year. We should say that up front.
일단은 역시 매수는 역시 런으로 가는 게 좀 괜찮은 것 같아요. 지금은 좀 떨어질 수 있지만 그래도 가자. 매수로 가자. 위로 가자.
And if that's the case, where are those rate cuts going to come
그쵸? 일단은 보니까 지금은 타이밍이 괜찮은 것 같아서 어제처럼 이렇게 조금씩 모았다가 나중에 팍 돈을 벌면 되죠. 그러니까 지금 좀 괜찮은 것 같아요. 근데 지금은 좀 애매한 상황일 수도 있으니까 저는 차트 안 볼게요. 지금 차트 안 보고, 왜냐면 지금 같은 상황이면 다 파란색이네요. 마음만 아파요. 우리는 일단 그냥 뉴스나 보시죠. 근데 이 사람들이 진짜 웃기는 사람들이네. 그러면 어젯방송 아닐까요? 똑같은 장소에 똑같은 사람들이 나도 옷도 똑같은데? 아닌가?
And we do get, of course, retail sales in the U.S. coming up later this morning, but we do have a roster of incredible guests, so that really is front and center. We talk about international policy. John Kerry, U.S. Special Envoy for Climate for the United States. We do believe that he is going to be stepping down. We will have a discussion with him. Ronald Kruszewski, CEO of Stifel Financial, Dave Mackay of RBC, the CEO there. And right now, I gotta say, Ann Walsh, the CIO of Guggenheim Partners, speaking about why she's pushing back also against market expectations, but maybe not in the same direction as everybody else.
Let's start that conversation right now. Ann Walsh, the CIO at Guggenheim Partners Investment Management. Ann, good afternoon. How are you?
I'm well, thank you. Thank you for having me.
Hey, thanks for being here. Let's get straight to it. We've had some people call it a pipe dream, other people call it laughable. The amount of rate cuts priced in for 2024. Where are you on that one?
Well, our camp is that we still see a recession coming, and although our base case is a mild recession, and as a result, we still see rate cuts. And we are actually predicting that they start sooner rather than later. And I know now that's not exactly the mainstream opinion, but we see a lot of softness in the economy coming ahead, and that leads us to our outcome.
Where do you see that weakness right now?
So I think there's really two economies happening in the U.S. right now. We have the established markets, the larger businesses, those with access to capital, and then we see the 50% of the GDP.
제가 어느 정도 빨간색으로 옷을 좀 입었는데 이렇게 빨간색 부분이 있는데 오늘 좀 기운 주려고 이렇게 매수도 해봤는데 뭐 아직까지는 소용이 없겠죠? 근데 괜찮아요. 지금은 소용이 없어도 나중에 한 10시, 11시쯤에 그때 좀 도움이 됐으면 좋겠어요.
The large banks, the SIFIs, I'm very much concerned about the small and mid-sized banks. They've got several risks happening at this point in time. They've got commercial real estate and a refinancing wall in that space and a refinancing wall in their commercial and industrial loans. And I think that this is going to cause them to have to, really take risk considerations very carefully. And I think the lending capabilities that they're going to have and the capacity that they're going to have to lend is going to be very limited.
From an investment perspective, how do you express this? Do you just avoid regional banks? Do you just avoid commercial real estate? Do you just pile into money market funds?
So as a fixed income investor predominantly, it's a good time to buy investment grade fixed income. The up in credit quality trade has been a good one. You certainly are
지금 뉴스 보니까 워스크씨가 홍해 무역 자질 수개월 예상. 지금 주한씨 어제 얘기하듯이 홍해 상황이 좀 안 좋은가 보다.
Credit has been a popular place to be and will be, I think, a very solid place to be in 2024.
I want to talk about the geopolitical risks, and we have what's going on in the Red Sea that's affecting global commerce. There's also this war in Ukraine. Yet, when I talk to foreign policy experts, they say, and foreign policy leaders around the world, they say the biggest risks are emanating from Washington, D.C., the stable of democracy. Do you take that view?
Well, I think there's a very significant increased geopolitical risk. At this particular moment in the markets, tail risk is higher, and it can come from any number of places. That's one area. The uncertainty. Markets do a poor job of pricing in geopolitical risk until the event of whatever the triggering event occurs. And so what we see right now is a great deal of concern over what's coming. That's going to introduce volatility. I think that's going to continue in 2024. So it's not going to be a steady rate of anything. We're not going to see inflation come down on a perfect trajectory. We're not going to see markets perform perfectly. We're going to see volatility, but the trajectories are in place for lower rates, for less inflation, but not on an even keel, if you will.
This is the difference between shocks coming from within the financial system and outside. So let's build on the shocks coming from outside. I joked at the top of the program that if you've got an American accent this week, you'll be asked about former President Donald Trump. You've experienced that firsthand at this forum. What do you say back to people?
안정적으로 가고 싶으면 이런 방법을 써야 되죠. 그러니까 초보자들 참고하세요. 아무리 지금 심심해도 아무리 지금 졸리기 해도 너무 졸려. 그래도 이렇게 안정적이 가는 게 괜찮은 것 같아요.
Let's get into that. What does pricing in another Trump term actually look like? We all remember that moment overnight in 2016 where initially equity markets sold off, and then there was this acceptance speech and the former president started talking about infrastructure investment, and I remember just sitting down the Bloomberg terminal and watching futures start to click higher. Then all of a sudden, next couple of weeks kicks in. Price sets narrative. It's the Trump trade. Is it that all over again, or is it different this time from your perspective?
Well, I think it's different this time because we do have some sense of what the policies look like. There will be more exported oil. There will be more. There will be deregulation, presumably, and there will be other aspects to the policy. I would anticipate the continuation of the tax cuts, the Trump tax cuts. So as a result, I think we'll have at least some playbook, and the markets will have an expectation built in.
How much do you feel like people are trying to get deals done now? Ahead of that's almost the pressure that's getting people to galvanize their activities in the moment before November.
I'm not really sure I'm seeing that, and if you think about M&A activity, I'm not really seeing that. It's picking up a bit, but I'm not sure that it's going to be back to pre-COVID levels. I don't really anticipate a whole lot of energy to try and get ahead of the election at this particular time.
Do you think the Treasury market would accommodate these kind of policies again? I think what we've witnessed in the previous administration and the current one is they're very comfortable with big deficits. Do you think this market is very comfortable with big deficits for the foreseeable future?
I think we're paying a lot more attention to fiscal policy than ever before as a result of the fiscal spending that's going on in D.C. And I don't think either party, being elected is going to change that. Both parties spend. The question is, what do they spend on? And so President Trump was not a hawk on spending. So I would consider that would be the market should build in an expectation that will continue.
So just to come full circle, you were saying that as one of your hedges or as one of the havens for you from some of the geopolitical risk, from some of what we might see with smaller and regional banks, you're going into high quality credit. You're going into fixed income. At what point is that no longer the hedge?
아니요, 오늘은 항상 그랬듯이 런이죠. 보니까 제가 런만 가면 제가 기운이 좀 나쁘지 않아서 어제도 사실 엄청 많이 제 기준에서는 엄청 많이 뽑았어요. 어제 런 하면서 62만 원 정도 뽑았어요. 그러니까 오늘은 좀 그대로 가면 괜찮지 않을까 싶어서 그리고 오늘도 하염없이 롱으로 가버렸죠.
But at the same time, probably puts a floor under any further rally.
You've been cautious on risk assets for a while.
지금 분위기가 좀
saying you've been expecting the pain to become more apparent.
좀 그래요.
What surprised you most about
근데
why we
이거
haven't seen that?
시작이니까 시작이라서 괜찮아요.
volume
지금 뭐 마이너스 55,000원인데 17,000원인데
For example,
뭐 어쩔 수 없죠.
global central banks have pulled $5
기다려야죠.
trillion out of the system globally since quantitative tightening started, and that's an immense amount of liquidity.
뭐 러스컷까지 안 갔으면 해요.
Of that. And I think that delayed the impact of the tightening and rate hikes that we saw from global central banks.
Favorite trade this year outside of credit and investment grade?
Rates. We're positive again on the Treasury curve, and I do again anticipate the short end will be coming down as well as the Fed
2만 원?
starts.
야, 잠깐만 왜 이렇게 떨어지네?
It's good to see you.
Thank you so much.
Thank you for
어떻게
joining us
이렇게
to kick off day
떨어져?
two. Davos at the World Economic Forum. That was Anne Walsh of Guggenheim Partners Investment Management. Lisa, we need to think about this, the new policies that we could see from a new administration, if indeed the former president becomes the lead candidate. Looks
뭐
like that right
일단
now for the
지켜봐야죠,
Republican Party
일단.
and wins again. Do we see a repeat of what we saw back in 2016?
Christine Lagarde seems to think so. We've heard from others saying that they seem to think so, which means a more sort of nationally focused, more tariffs, and a lot more sort of investment in fossil fuels and other things like that. At this point, do we also still see a rally?
지금 맞아요. 지금 잘못되고 계세요. 잘못되고 있어요.
Trump loved to spend. Nikki Haley continuously mentions this $8 trillion under his administration. So to say that
잘
Republicans
모르겠네요.
want to rein a
일단
deficit, someone
그냥
like Donald Trump, that's not always true. But this
놔둘게요.
protectionism,
놔두고
that is the concern
안 볼게요.
of the Europeans and some other members here.
For about 5 minutes, I think we were super fearful of what was happening with Treasury markets, Anne-Marie. Is that even a campaign issue out of Nikki Haley? Outside of Nikki Haley, is the electorate excited about the prospect of someone coming forward and doing something about the deficit?
Fiscal hawks within the Republican Party and potentially some hotshot donors are very interested in what she has to say because they're watching this. And I continuously come back to this stat. In about 10, 12 years, the United States will be paying more on their interest payments than even their massive defense budget. This is a problem that Washington loves to talk about, but no one actually wants to get down to the nitty-gritty and deal with. And it's because voters don't want their Social Security cut. They don't want any of their Medicare and Medicaid cut. So if you don't have any discussion around that, how can you have a real conversation? This has been a huge issue amongst all these town halls DeSantis and Haley are doing because on Bloomberg, Joe and I asked Haley about this and she said 65 is way, way too young. And now she's backtracking because people at 65 say, hey, I want to retire. I'm not waiting till 70, 75.
They vote and it's not popular. It's as simple as that. Coming up in the next hour, Steve Tannenbaum, the founder and CIO of Golden Tree. Plenty still to come this afternoon from Davos.
지금 일단 안 보는 짝퉁이에요. 보고 싶지 않은데 봐버렸네. 자꾸 중간중간에 한국 광고가 나오네. 죄송해요. 여기도 한국 광고 나오네요. 오늘도 주식 시즌이 다 빨간색이네요. 나스닥도 떨어지네. 저도 지금 보고 있어요. 지금 떨어지고 있네.
Ways on the heartbeat of the tech sector across global markets.
Real-time data aspect is going to be.
We're going to bring you expert analysis on that. Don't miss Bloomberg's interview with the.
지금 한국에 계신 거 아닌가요? VPN라는 앱이 있는데 전 지금 한국에 있을 수도 있고 영국에 있을 수도 있고 어디 하와이 쪽에 있을 수도 있고 아무튼 VPN이라는 프로그램이 참 좋네요.
4 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off to New Hampshire.
Bloomberg is live on the ground, bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
And at the end of the day, that's what the American people want.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
It all starts Monday in New Hampshire, only on Bloomberg.
또 트럼프가 나오네. 아우, 참 거슬리네.
Crooked Joe Biden, we have to beat him. We are going to win on Tuesday at a level that maybe could even be.
아 진짜 트럼프 아저씨가 할아버지 대통령으로 뽑았으면 진짜.
In the Iowa caucus, now setting his eyes on Tuesday's New Hampshire primary. I think we should get straight to it with the next conversation. Governor Brian Kemp, Republican from Georgia. Governor,
설마 또 다른 전쟁 발생하지 않을까 싶어요.
Fantastic to have you with us. I'm going to go with the line from the former president Donald Trump. It's time for the Republican Party to unify, to come together. Are you ready to unify, to come together?
Well, I don't think we're seeing that from the other candidates right now. I mean, look, that was a strong win in Iowa, no doubt, but some really bad weather, very low turnout. So we'll see what happens here in the next week.
When you look at the election, what are you looking to understand whether Trump 2.0 is going to be the same as Trump 1.0? Is this going to be a different type of presidency from everything that you've gathered?
Well, look, I don't know. You probably have to ask him about that. I've said for a long time now, we need to be forward-thinking. We need to tell people, what we stand for, what we're going to do. We don't need to be looking in the rearview mirror and relitigating the 2020 election and really, lay out for the American people what it is we're going to do for them to help fight through, 40-year high Joe Biden inflation, disaster at the border, the weakness that we're seeing in the world, and a lot of other things. And that's what I've been urging the candidates to do, and that would go for former President Trump as well.
But former President Trump wants to relitigate 2020. He was just talking about it last night. He goes back to your state of Georgia. As you know, he wants Fani Willis, the district attorney, to be removed. There's lots of questions about potentially a relationship she had with the prosecutor. How are you going to weigh in on that?
Well, I didn't say always listen to what I said. I was just saying what my thoughts were, and that's for every candidate to decide. But look, there's some... months ago I was warning people there wasn't evidence to go after Fani Willis, but now there's some troubling things that have been, accusations that have been made, and I think the judge will get to the bottom of that. That's playing out right now. We've got a legislation we passed for district attorney oversight that ended up in the courts, and so we're going to have to re-legislate that this year, which we're in the process of doing right now in our legislative session. But there's ways to address that, and we need to let the legal process play out.
But do you think Willis should be removed?
Well, I wouldn't be able to speak to that because I haven't seen the evidence, but I think at the very least, if the accusations are true, it is very troubling, and I feel certain that the judge will rule in the right way to make sure that, President Trump and anybody else is being treated fairly.
So let's go back to what the timeline's going to look like for the political space in the United States. You say a lot of those candidates are not ready to coalesce just yet around the former president. What I'm hearing is everyone's waiting for New Hampshire. Let's give Ron DeSantis, Nikki Haley some space.
계속 보니까 어제 방송이 아닌가 보다.
Is that a time when you're going to say, okay, I'm ready to endorse him?
좀 봤는데 그 빨간색 코트 입는 여자가 어제 다른 코트 입었어요. 근데 다 왜 이렇게 다 똑같이 생겼어? 빡빡해 아저씨도 완전 똑같이 생겼어.
We hold our majorities and keep our state moving in the right direction, like cutting taxes and we've sent $5 billion back to hardworking Georgians to help them fight through this bad policies in Washington, D.C. and 40-year high inflation. And you look at Georgia right now, we've got a $16 billion surplus. We're working on cutting our state income tax. You look at California, they got a $35 or $45 or $55 billion deficit, depending on who you believe, and they're raising taxes. And so I think it shows really what's going on in the states, and that's what I'm focused on to help our legislators and help us just let people in Georgia and around the country see what the Georgia way is and why we've been productive, why our state's doing great economically.
Governor, that's what we want to talk about. I think what's amazing to us over the last couple of days in Davos, Switzerland, people want to ask about who's next in the White House. What are they going to do? When you talk to American businesses, we had Mike Worth of Chevron sitting in your chair just yesterday. He's talking about policy at the state level in California and the ease or difficulty of doing business, difficulty in California. How do you want to position Georgia versus, say, Texas, Florida? Do you think you are the next big state to attract that kind of talent the same way they have done?
Well, we have been doing that, and we're competing
아니
with
좀
Texas,
골라줘야 되는데
Tennessee, and South Carolina, and a lot of other great
어제
southern states.
어제 파란색은 아예 못 봤어요. 아예 못 봤는데 지금 계속 이러네.
To think about that. So you've got a lot of people that are fleeing places like California, New York, and Chicago, coming to right-to-work states like Georgia, states like Georgia that have good business-friendly environments that are cutting taxes, states like Georgia that has a lot of clean energy. I mean, we have 2 new nuclear reactors we're building. One of them's online, Vogtle 3, Vogtle 4 will be soon. We're doing as much solar, for our size of state as anybody in the country. And so that's why you're seeing major corporations from around the country and around the world that want to have a presence, and we've been visiting with a lot of those here in Davos, great partners like Hyundai and others.
How much did the Inflation Reduction Act of Joe Biden actually help your state? Quite a bit.
Well, it's really kind of hurt us in a lot of different ways, believe it or not. When you think about this, we had the Hyundai announcement, we had Rivian, we had the SK battery plant, all before the IRA ever passed. I sent a letter to our 2 U.S. senators explaining to them Washington, D.C. right now is picking winners and losers with the IRA. They're helping the union-backed automobile producers, and they're hurting the folks that we have coming to Georgia. My worry is that, them manipulating the market, forcing the market on people is actually going to hurt more than it's helping.
오케이. 조금 올라가고 있네.
A lot of these corporations now that's passed are taking advantage of it, and so we're just making sure that people know that Georgia's a place to be if they are going to do something like that. And that's what we've seen. I mean, we've seen like 40 different projects come since we did the Hyundai announcement.
Yeah, you're becoming almost this bastion of green energy. How is you as a Republican governor talking about climate change? Because that's part of this electrification of the American grid.
Well, it's because we're letting the market work in Georgia, and people that wanted to build electric vehicles came to us and said, hey, we're looking to build a plant. What can you guys offer in the state of Georgia? And we told them we can offer, cheap, reliable power.
이 아저씨가 말이 왜 이렇게
We got a great workforce.
말을 왜 이렇게 지루하게 안 해?
In the country, at the Meta plant that Hyundai chose, and also the East Atlanta mega site that Rivian chose. We got Kia that's expanding an EV line. So it was not the government trying to force them to do something like they're doing in states like California. It was basically saying, what does your company want? What do you need? And how can we help you achieve that goal?
You appeared recently with Governor Glenn Youngkin of Virginia, who I recently interviewed as well, and you sat with him, and everyone on Twitter was saying this should be the ticket. I know you're sitting out 2024. What's your future plans? Is it the Senate? Is it the White House?
Well, my future plans is to make sure that Georgia legislators and the state of Georgia
말하는 태도가 그리고 생긴 게 좋고 딱 봐도 미국 사람이다.
We cannot get distracted. We need to stay focused on 24. We can worry about 26, 28, whatever. Down the road after that.
Governor, that was a politician's answer.
That's the truth.
I'm going to offend the rest of the South. Best barbecue in the South, Georgia.
No question.
Without a doubt. Without a doubt.
Mail begins.
Governor, thank you. Good to see you.
Thanks for having me.
Governor Brian Kemp for Georgia. I think it's a big theme for us this week, guys. We've got to be talking about
시청자분들 좀 늘어나고 있는데 여러분 다들 안녕하세요.
It's far more interesting right now if you're running a big business.
Especially when you look at what Governor Kemp was talking about, this union labor. Some of those plants, they're driving to the South because they don't want to use union workers. They want to go to a right-to-work state. But it's the push from this administration to open up battery plants, to open up solar plants. What's interesting to me is that we talk about the national dysfunction, but on a state-by-state level, that's coming to a place like Davos, which is where deal-making gets done. And people are basically saying, we're not going to focus and wait on all of that. Come to us because of X, Y, and Z.
그러게 말입니다. 지금 완전 박살을 나고 있어요.
Afternoon in Davos, Switzerland, at the World Economic Forum for Policy. The conversation continues with John Kerry, the US Special Presidential Envoy for Climate. That's next. This is Bloomberg.
그러니까 뉴스 읽어주는 여자 아니고 매서만 하는 여자다. 아 근데 오늘 좀 진짜 잘못했나 보다. 뭐 아직 기다려야죠 뭐. 아직 좀 시간이 많으니까 좀 기다려보죠. 그래도 봐요. 좀 올라가고 있어요. 지금 뭐 16,000? 일단 괜찮은 것 같아요. 쭉 이렇게 올라가면 조금씩 이렇게 올라가면 돼요.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it.
조금 있다가 상황 보고 좀 올라가면 진짜 계약수 좀 늘리고 늘리고 좀 그렇게 하면 좀 괜찮을 것 같아요. 근데 아직은 좀 아직은 좀
Live from Davos, Switzerland, for our audience worldwide. I hope the mics weren't hot just then. I hope they weren't. Equity markets look like this afternoon. Equity futures on the S&P 500. Negative again. We're down by 0.5% on the S&P. Negative yesterday as well on the Russell, the small caps. Bit of drama. No drama, Bramo. We're down about 1.3%.
Everyone's just focused on what's going on in Davos, clearly. No, I mean, honestly, the story's all been about sort of pushback from some of the rate cutting expectations and also pushback from some of the enthusiasm that we started the year, or end of the year, I should say, with last year.
So we're in the commercial break, and I don't remember saying whether it was off the record or on the record, but we asked Secretary Kerry what his next move would be. I'm not going to tell you what he said. He's joining us now. He's going to tell you himself. John Kerry, US Special Presidential Envoy for Climate. Secretary Kerry, good afternoon.
Glad to be with you.
It's good to see you. I won't repeat that. I won't repeat that. I want to start here. This is a delicate time. You're a seasoned diplomat. We've got wars in Gaza, wars in Ukraine, and seemingly from the outside looking in, I think perhaps an inability or lack of willingness to restore order from the US perspective. Is that what's going on? Can you tell me your perspective on things? I think it's deeply valuable. Can you tell me whether you think this is an inability or a lack of will to restore global order?
Well, I'm not yet out of the job of climate envoy, and that's my lane, is dealing with climate. So, but I will tell you unequivocally that President Biden, I think, has done an extraordinary job of holding people together in the midst of a very complicated period of time, perhaps as complicated as any of us have seen, certainly in recent years. But if you look at the difficulty of sort of rebuilding NATO, which is what he had to do after the last administration, and then holding NATO together with respect to Ukraine, and simultaneously managing several other potentially explosive situations,
봅시다. 와리가리 하긴 하는데 조금씩 지금 방금 뭐 봤어요. 오케이. 빨간색 좀 보이네요. 드디어 제가 애타게 원하는 빨간색. 오케이, 올라갑시다. 오케이, 삼각김밥 2개 8,000원. 음료수도 사야죠. 올라가자.
So I think the president has been very clear here, but also thank God that he has the years of experience he has from the Foreign Relations Committee and as vice president, now as president.
There's a lot to unpack there. Can we just start with NATO? You mentioned NATO and rebuilding NATO. When the former president said what he had to say about NATO, he wasn't wrong. There were a lot of members who had promised to invest in defense that were falling short continuously. Has that changed?
It has changed, but it still has to be fulfilled. The promise has to be fulfilled. The 2%.
아이고, 보니까 어제 같은 경우는 어제 라이브가 노래가 그러니까 좀 불법적이는 아니지만 그래도 노래가 나와가지고 영상이 영상에 딱지 붙였네. 좀 더 조심해야겠다. 저도 옛날 가요 음악 같은 거 듣고 싶은데 들려주고 싶기도 하고. 근데 보니까 너무 위험하네요. 저는 뉴스 읽어주는 여자, 내서하는 여자, 빨간색 좋아하는 여자입니다.
195 nations strong, including oil and gas producing countries, including ours, all signed up to transition away from fossil fuel, to do so in keeping with the science, which means trying to hold 1.5, that's a pretty rigorous standard, to do so keeping 2050 net zero, and finally, to accelerate our efforts in this decade. That's a pretty big mandate, folks.
At the same time, the U.S. is pumping more than 13 million barrels of oil per day. It is a record amount. It has been credited for offsetting some of the geopolitical risk. Do you think that that's a policy failure or a policy success?
It's a policy necessity because you obviously can't shut down the economies of the world and be ridiculous in sort of saying, oh, okay, we don't, you're going to affect demand without affecting supply at the same time. You've got to have a broad approach. That's what the administration is trying to do. For the moment, you have to try to keep the economy stable and keep the price low enough that you don't have revolutions in countries all around the world because the gas prices are $10 a gallon, whatever it's going to be. So you've got to have some reasonableness. But that has to be accompanied by a very clear set of policies that are moving in the direction of this transition away from fossil fuel, that are therefore deploying renewables faster, that are putting new technologies out there in order to mitigate. If we don't do that, then it is a mistake and it contributes to the problem.
But
I think we're going to do that, and I think we're doing that already right now in many parts of the world.
A lot of people talk about what the future is. Joe Biden's talked a lot about electric vehicles, but we've seen a lot of companies pull back from electric vehicle production because there isn't the demand. Do you get the sense that there is a successful, coherent policy that has been prescribed by Joe Biden to achieve what you're talking about while also pumping record amounts of oil?
Yes, there has been a very, very clear policy, which regrettably has been attacked by people who are engaged in high levels of disinformation. They've been trying to scare people about the range of vehicles, so there's range anxiety out there. But in addition to that, you've had some pullback because communities aren't moving fast enough to give permitting to deploy some of the renewables that we need. So you've had wind farms that were going to be built that have now taken years longer than was calculated in making the deals, and people have had to recalculate now how that deal's going to work. So the answer is we have to, all of us, embrace this transition. If we're going to take 5 and 10 years and have years of litigation over whether or not you're going to have a renewable plant somewhere nearby, we're in trouble. We're not going to get there. And we have to accelerate that, and that's a lot of the message right here in Davos.
Just to jump in, it's difficult for me to believe that the poor EV sales are a consequence of a misinformation campaign about range anxiety. Let's take Hertz. Not my view of the car rental company. They come out and they've got to dump 20,000 EV cars. They don't just talk about rebalancing supply and demand. They talk about the cost to carry. It's really expensive to keep these vehicles.
Sure.
It's really expensive to go and buy one. I think what we're seeing is a reality check, not just about the ultimate destination, but the pace at which we get there. A reality check because for most everyday Americans, they can't afford this.
Let me tell you what's happening. The price is going down as the price of renewables has gone down. The price of renewable solar has gone down 83% in the last years. The price of wind has gone down 50% in the last years. The price of lithium has gone down something like 97% in the last years. And we do need to send stronger demand signals to the marketplace. Now, we have an entity here that we've created a number of years ago called the First Movers Coalition. We have 100 of the top corporations of the world in this First Movers Coalition. That includes Apple, Microsoft, Salesforce, Boeing, FedEx, Ford, General Motors, a whole bunch of major American and other international companies. And they have agreed they're going to pay a green premium voluntarily in order to send a market signal to have green steel created now. Volvo has said, we'll buy 10% of our steel that's going to be green. So they're making green steel. Cement is now on sale in Lafarge Holcim, largest cement deal in the world. They're making green cement. And it's better cement. People are buying it not because it's green, because it is better. So we're seeing a movement towards a rational transition with those biggest companies. And I'll tell you, if the CEOs of those companies can persuade their boards and their shareholders that this is a valuable enterprise, then more people are going to buy into this over a period of time. This is a transition. It doesn't have to happen overnight. There will be ups and downs. There will be bumps in the road. But I'm telling you, EVs now, there's sufficient level of penetration, about 92% in Norway. Major levels in China. The front page of The Economist has a big picture of, electric vehicles from China coming in towards the United States. And those are selling for something like $22,500, and it's going to become the bone of contention. You watch. We'll have some discussions about that. But the point I make is this will even out over time. General Motors and Ford and Mercedes and Volkswagen and Hyundai and Toyota, these companies have all spent billions of dollars retooling their plants. I'm telling you, I don't care. It doesn't matter who comes in. Whoever the President of the United States is or a public official is, those CEOs are not going to suddenly go back and say, oh, let's go back and we'll make...
Of course not. They're already on a plan. But we talk about the materials to make an electric vehicle and the negative externalities of these. These raw materials are in Africa, and then they're processed 85% in China. We're talking about serious manufacturing issues, labor issues, human rights issues. How do you weigh that against carbon emissions?
Well, we always, President Biden, I think, more than any president in recent time, has been fighting for the rights of workers, and he is constantly, as you know, referring to unions and union workers and defending the rights of workers to be able to do better. So, but those materials you refer to, sure, that we're going to go through a transition. There's a lot of lithium in Mexico, by the way. Cobalt, nickel, these are the things we need. They're not all in Africa. And now the National Security Council of the United States, under President Biden's direction, has focused in on these critical minerals. And I think you're going to see the balance of where they come from and who has them change, mostly because of market forces. The marketplace is going to support this transition. And I think it's irrevocable now. There's no question about whether or not the world is going to get to a low carbon, no carbon economy. We're going to get there. The only question is, are we going to get there in time to not be ravaged by the worst consequences of the climate crisis? And that's not me talking. That's the best scientists in the world who have warned us. You got to do these things now, or it's going to cost you more down the road.
Let's end on President Biden. There's reporting that you're stepping down to actually go work for the campaign to get out the climate vote, the youth vote. How successful do you think you can be in that position when the youth think that this is a president that is too old and too out of touch to lead them, especially also when it comes to a foreign policy issue like Gaza?
Very fair. It's a great question. But let me begin it by saying I'm not stepping down in order to go to the campaign. I'm stepping down because I think that what we've done in terms of Dubai is so powerful in terms of encouraging this transition that it's going to open up a whole new set of opportunities which are important. And in my judgment, I came for a year. I've been there for 3. I think it's time. I will campaign for President Biden. I will certainly, because the stakes could not be higher for our country, for the world. The stakes are as high as they get, and as high as I've seen in the course of my public service. So I am going to campaign very happily because I think he's done a terrific job. He's shown experience. He's kept us from, having a complete breakout of uncontrolled war in many regions. But at the same time, he stood up for American values, global values, universal values, for America's obligations with respect to Ukraine, the Middle East, and elsewhere. And if you've listened to Secretary Blinken and the President in the last days, they've been crystal clear about expectations for what needs to unfold in the West Bank, in Gaza. And I think young people around the world will see an administration fighting for the rights of people to get the medicine they need to have, to be safe, and for the Palestinian people to have a future, even as Israel is absolutely protected as it needs to be.
Secretary Kerry, we appreciate the robust exchange. Thank you, sir.
Thank you. Was that a robust?
Tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware. And that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action at a new time, 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything. The new Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
I'm very concerned about the regional banks. I'm not concerned about the large banks, the SIFIs. I'm very much concerned about the small and mid-sized banks. They've got several risks happening at this point in time. They've got commercial real estate and a refinancing wall in that space and a refinancing wall in their commercial and industrial loans. And I think that this is going to cause them to have to, really take risk considerations very carefully. And I think the lending capabilities that they're going to have and the capacity that they're going to have to lend is going to be very limited.
Still very concerned. That was Ann Walsh, the CIO at Guggenheim Partners Investment Management. Just in the last hour, Bramo concerned about regional banks, which for many people we've spoken to so far this week feel like that was just the story of last year and the banking sector is in a better place.
Right? What did we hear from Cantor Fitzgerald, right? It's going to be an amazing year for the banks. Everything's going to come back. You're going to have a real strong recovery even without rate cuts. Some people, including Ann Walsh, still worried about commercial real estate, about smaller businesses, and that really is still a question mark.
And looking for Treasury yields to drop to about 350. Check out the market right now. Equity futures on the S&P 500 lower again. Equities lower yesterday. Soft start to the week. We're down 0.4%. Yields just in at around 4%. The range is pretty tight to start the year, I've got to say, on a 10-year, Lisa, 4.058% this morning.
And the yield curve compressing. It's sort of de-inverting, right? And what does this mean? We don't know yet. And that, I think, is one big point of contention at a sort of tipping point in terms of economic data.
It's pushback week in Davos, Switzerland.
잠깐 나갔다 왔는데 역시 결과가 나쁘지 않네요. 6만 원이면 지금 딱 좋아요. 안정해. 안정하기도 하고. 우리 강아지 계속 산책하고 싶네. 계속 지죠.
With Ron Krzyzewski, the chairman and CEO of Stifel Financial. Ron, good afternoon.
Good afternoon.
Good to see you. I think you told investors recently that the slump in deals was like Groundhog Day.
강아지를 좋아하시는 분.
Actually, I don't think it's going to be Groundhog Day. Last year was. I had earnings calls 5 in a row where I said the same thing I said the previous call, which was green shoots, the market's going to get better, everything's great. And then
너무 적은 거 아닌가요? 저기요. 알렉산더 씨. 본인이 돈 많은 건 모르겠는데 저는 초보자라서 그리고 월급이 적은 편이라서 저한테 딱 좋아요.
Where we stand on this is that we think earnings are growing. The street thinks 11%. We think half. The street thinks that rates are going to be cut 6 times starting in March.
좀 땀봉금도 지금 그렇게 많지는 않아서 나중에 큰 돈 벌고 그때 여유가 생기면 그때 좀 레버리지도 낮춰보고 계약수 좀 늘리고 이렇게 하려고요.
Well, Ann Walsh was on earlier, and she thinks that we are probably heading toward a bit of a harder situation, and that's why we will get rate cuts sooner. She's concerned about regional banks, particularly because small and medium-sized businesses are not doing as well. Do you share her concern?
Not really. I think the banking system has gone through a very difficult 500 basis point increase in short rates, the related deposit sorting, the some of the credit concerns. I mean, there's always concerns, but today the regional banks are stronger. Of course, if you have a real credit meltdown, it's going to impact a lot of people, not just the regional banks.
When you talk about credit meltdown, I was just noticing that we're having the busiest January issuance for investment-grade bonds going back to 2017. How much are companies front-loading this ahead of the election? Are front-loading all of their deal-making ahead of what they're expecting to be a lot more turmoil later in the year?
I don't know if I'd call it front-loading. We've been in a recession in investment banking, equity investment banking in the United States for almost 18 months. And the uncertainty with the rate curve, the inverted rate curve, all of this put an absolute damper on capital raising, whether it be debt or equity. And
맞아요, 돌부님. 꿈은 되게 긁는 거죠. 맞아요.
What you're saying is activity picking up. That's why your guy from Canada.
맞는데
That's what I'm telling you. I think the
지금
next
그런
year
여유가
will
없어요.
be
그러니까 일단은 꿈만 크게 크고
People were gearing up for a lot of activity. They were hiring. You talked about the
실제로는
recession
그렇지
banking, certain
않아요.
parts of banking. Are we done with the so-called right sizing? A word that here at Bloomberg Surveillance we hate because ultimately it means.
뭐 물론 사실 어제만 비해하면 어제 62만 원 벌었는데 뭐 지금은 조금씩 하면 되잖아. 근데 지금 시간이 너무 애매해가지고 그러니까 지금 스릴러가 없어요. 스릴러나 뭐 롤러코스터 같은 것도 없고 지금은 그냥 이렇게 해놓고 포지션을 유지하면서 다른 일 하면 돼요.
Are you hiring?
We always are hiring.
Okay, I figured that you might say that. I'm curious, as you look forward, what's the potential risk case that you entertain most aggressively right now to this case? That we're going to get a soft landing, that you're going to get business come back up, that the certainty that people have now maybe gets shattered a bit?
Well, the market is being aggressive on rate cuts, all right? And I believe that the Fed is going to take its time, especially without a recession. We just had rate cuts, 11 straight rate cuts, and we're going to have 5 going the other way in a matter of months. I'm sorry, hikes.
It's okay. I confuse it all the time.
Yeah, yields go up, prices go down, something like that. But right. Sunplay, the long basically, yeah. I only run an investment. I can get that right. But the point is, I think one of the risks is that the market is pricing in some aggressive rate cuts, and that supports PEs and that supports valuations. And if you don't see that, you could see some of the PEs and the big tech stocks get hurt a little bit. But the real risk is probably geopolitical. And
여러분들 뭐 취미 같은 거 혹시 있으세요? 물론 아마 해외 주식 하는 사람들은 해외 선물 하는 사람들은 아마 좀 나이가 있고 좀 그래 바쁜 사람이지 않을까 싶은데 그래도 사람이 취미 같은 거 있으면 좀 사는 맛이 낫지 않을까 해요. 그러니까 사실 지금 같은 경우에는 제가 얘기한 것처럼 이렇게 계약 지금 매수해놓고 포지션 유지하면서 다른 일 해도 되고 또 취미 생활 하면 되고 물론 제 취미 생활인 컴퓨터랑 관련돼서 제가 이렇게 컴퓨터 앞에서 뭐 할 수 있는데 근데 사실 뜨개질 같은 경우는 뜨개질 하면서 그 차트 계속 봐야 되고 이런 게 좀 집중력이 떨어질 수 있으니까 이게 좀 어려울 수도 있고 그래도 이렇게 본인이 일하면서 돈 벌 수 있다는 거 좀 되게 괜찮더라고요.
40, 50 people to service that market. So we have a big presence in both the Valley and on the East Coast, and we're filling that void. And I see that picking up. What really happened in that market was all the money that came into the economy in 2021 just got pushed to a lot of companies that didn't need it and at valuation levels that were not sustainable. So we're working through that as these companies' cap stacks get redone. Again, it's going to lead to activity in the business. So look, I'm optimistic. You can, have me back, and then you can tell me how wrong I was. All right, I won't come back. But no, I am optimistic. I think that. Well, look, last year wasn't fun. All right, so let's be clear.
Ron, it's good to see you.
Hey, good to see you. Thanks
Yield
for
up,
having
price
me.
down. Fantastic to get the education from Ronald Krzyzewski there of Stifel Financial. It's good to see you, Ron. Coming up a little bit later, Steve Tannenbaum, founder and CIO of Golden Tree. The market conversation will continue with equity futures pulling back just a little bit here, Lisa, on the S&P 500 for a second day.
With the biggest risk really coming to fruition just a bit, or at least hoping for some of the Fed officials and ECB officials hoping that, which is maybe not as many rate cuts as people previously.
Yeah, real pushback in the early part of this forum in Davos, Switzerland. The conversation on markets will continue. Stay tuned for plenty more. Throughout this afternoon, we'll catch up with the Dutch Prime Minister and the British Foreign Secretary a little bit later in Bloomberg Surveillance.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto.
I'd like to kick off with a very simple question. Has the whole Brexit process been messier, less messy, or as messy as you expected way back in 2016?
Was it as messy as we thought it would be? Probably was, and I tell you why, because of the fundamental mismatch between, if you like, rational policy in the UK and what was, in a sense, performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, is the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 or 15 years putting some kind of trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into a European budget. I think they will have no choice.
이런 방송 안 해요.
The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
재밌는 거 없나? 근데 뭐 해외 선물 말고 뭐 다른 거 하는 사람이 있나요? 뭐 로또 같은 거? 매주 로또 사는 사람이 분명히 있는 것 같아요. 저 옛날엔 좀 많이 샀는데 항상 나가리 돼가지고 한 푼도 못 벌었어요. 그러니까 제 길이 아니구나. 이런 게 있어서 운이 제가 없구나 생각해서 더 이상 안 하고 있어요. 안 하고 있는데 근데 지금 왜 해외 선물 왜 하고 있는지 모르겠는데요. 이런 거에서 소질이 좀 있는 편이지 않을까?
Visit Bloomberg.com webinars.
음, 80만원까지 올라가네. 지금 한 직당 16,892, 93 이렇게 왔다 갔다 하긴 하는데 어제 17,000원 좀 넘어갔나?
Live from Davos, Switzerland, for our audience worldwide. Good afternoon, good afternoon. This is Bloomberg Surveillance, the second hour, alongside Lisa Abramovich and Jonathan Ferro together this week with Marie Horton. It is day 2, and on day 2,
어제
in the last 10 minutes,
매수했나
I have to say, Lisa,
매도했나
just a bit of optimism from the CEO of Stifel.
못 따고 근데 주원 씨 얘기 들어보니까 매수만 하는 여자, 빨간색 좋아하는 여자. 그렇구나.
It's hard to be optimistic beyond that when you start talking about policy and marine politics.
Yeah, absolutely. Especially when it
그쵸,
comes to
이렇게
geopolitics. President
조금씩
Zelensky
하면
his last shot
수익이
really at begging the
오죠.
business world to help rebuild Ukraine's economy, and also to the U.S. Secretary of State and National Security Advisor Jake Sullivan. The president today is going to make his own pitch
아직은
to
TX
Republicans in
늘리는
Congress for
거
this.
좀
Big push with Zelensky in town.
애매한 것 같아서
The foreign policy issues
일단은
and how
쭉 그렇게
participants are going to
가볼게요.
think about them. You know how these conversations go, and I think a lot of people at home are frustrated with them. Big risk this year. Response: geopolitics. Tell me what that means. What are you doing with that in mind? And then it's like blank face. Blank face.
Well,
Don't know.
That's essentially what it is. It's just a deep uncertainty. I mean, it was oil prices, right? Well, oil prices have fallen to about $70 a barrel. If you take a look at other issues, whether it's gold, okay, gold's been a mystery asset class for quite a while. If you take a look at disruption to risk assets, and the debt didn't happen. So at what point are you looking at something that is an exogenous risk that you can plan for, or that you simply just ignore and hope for the best?
Looking forward to the conversation through the next couple of hours. Lisa will give you the day ahead in just a moment. I want to turn to the markets just briefly. Lisa, looking at equities, down again on the S&P 500. Down yesterday. Pushback from Governor Waller yesterday. Pushback from President Lagarde this morning. We're pricing in too many cuts, seems to be the feeling from policymakers.
So instead of an 80% chance that we're going to get a March rate cut, we now have a 62% chance of a rate cut. So, I mean, it's not as if this is exactly getting priced into the market, but a little more anxiety sort of coming out as people parse through just how much of a price to perfection market we're looking at.
In the bond market right now, the yield's up by not even a basis point. We're totally unchanged on a 10-year, 4.058%. Bit of a shift in the last 24 hours. I'm not going to completely sweep that to one side, but I'd say some stability in the Treasury market in the last few weeks relative to what we saw, let's say, in October 2023.
Things haven't been swinging around by 20 basis points every day. Today we're going to be having fantastic conversations. I've got to say, it's been a tremendous lineup. We're going to speak with the RBC CEO, Dave McKay, Chuck Robbins, Cisco CEO. But right now, I've got to say, Steve Tannenbaum of Golden Tree Asset Management, I'm really excited to get his view on the private credit craze that we've been hearing about here, as well as where some of the incredible opportunities are.
Did you hear the whistle of the train?
Yeah.
That was pretty wild.
That was. I thought that was the craze that you were alluding to. I was like, wow, that's good. You have
Sound effects?
a craze to order.
Steve Tannenbaum joins us now, the Golden Tree Asset Management founder and CIO. Steve, good to see you.
Thank you, John. It's great to be here.
Let's talk about that massive gap between markets and what the Federal Reserve seem to be implying, what their plans are for 2024. Everyone's weighed in on how we're going to reconcile things. How do you think we will?
So, starting the year, it seemed like you could, at best, get only 2 out of 3. You could have unemployment below 4, growth in the U.S. in the mid-ones, and 6 rate cuts. So it was trying to square that, and that's against a backdrop of a deficit of 5 to 6%. So it just didn't seem to make sense. And then you had a melt up into this belief. So now we're having a walk back. You know, if it was close to 80% at the beginning of the year, now it's 60%. There's a walk back. I think we're probably halfway through the walk back. So I think there's more to go, but you certainly have the easy move right now.
You wonder where that leaves markets. Equities close to all-time highs. Credit spreads still pretty tight when you look at high yield on any given day.
You know what? On the credit spreads, I'm fine with them. In terms of single B, double B, you're still getting pretty good value. One of the ways I like to think of value is what's your spread versus expected default. And at 350 and 7 3/4, given what we expect for the default rate, you're still getting around, call it 200 basis points of excess yield. So I think you could be 50 to 75 tighter in a more benign
이렇게
environment.
쭉 갔으면
So the
좋겠어요.
actual spreads don't really
오늘도
concern me.
좋아요.
You're talking about how people are saying the biggest risk is that the Fed isn't going to cut rates as much as people expect. You would disagree, and you would say it's that the economy turns down, and that would be a bigger risk. Am I taking that a bridge too far?
A little bit, because there's always stuff to do. But right now, it was priced nirvana, perfect environment. So if the economy slows down, there'll be winners and losers.
사실 좀 지루하긴 하네.
지루하긴 한데 there was just too much broad optimism.
지금 이 시간 9시쯤 되긴 하는데 9시 1시간 반 있다가 좀 재미지겠죠?
You've been dealing in markets that are less liquid for a long time. Does it concern you that everyone's piling in
저는
without
뭐
necessarily the same kind of
시작하자마자
quality checks that
종통이를
you might get
좀
in a public, more
봤는데
transparent market?
다행히 제가 다행히 잘 적은지 모르겠는데 제가 항상 얘기하는 것은 제가 쓰고 있는 업체가 있는데 그쪽에서 많이 도와주고 있어요. 많이 소분하기도 하고 언제쯤 들어갈까 좀 항상 고민하고 있는데 그쪽에서 좀 도와주고 있어요. 그 사람들 덕분에 좀 맨날 수를 보고 있어요. 궁금하시면 거기 제가 메시지를 남겼는데 거기 들어가시면 그 카카오 채팅방에 들어가시면 좀 상담 받을 수 있으세요.
Now, when we look at our private credit returns, we had a great year last year. We're
뉴스
seeing interesting
읽어주는
stuff.
여자,
There are gonna be
맥스 좋아하는
solution
여자,
providers,
빨간색 좋아하는
providing
여자,
acquisition,
똥 따는
financing,
여자.
asset liability financing, reliability management financing. So I think there's certainly needs for it. It's
뭐 아니요, 뭐 업체는 안 알려주긴 하는데 근데 어떻게 하면 좋을지 이렇게 좀 도와주고 있어요.
Right now, private credit has a lot of innovation, but generically, the excess return, I'd be surprised if the next 5 years resembles anything like the last 10 years.
Solution providers, let's build on that. You're a solution provider if you buy AT1s, and you were last year. It felt like that market might have been killed off by Swiss authorities. You took a different view. A contrarian bet had paid off big time. Can we just start there before we talk about contrarian bets for 2024?
Sure.
What did you see that maybe others didn't?
You know, it's simplistically the AT1 market's vital. Having owned banks, and we've owned a couple banks where we've been large equity holders, it's of private banks. It's a really important financing alternative, and particularly when you have situations which are precarious and you don't necessarily want to put down more equity. Having a hybrid security is a really valuable alternative. So the idea of, well, if you of eliminating that and having the hybrid security actually be a hedge you lose and tails I win type of investment, because if it doesn't work, you get the same downside, and if it doesn't work, you have no protection. And if it does work, your upside is less. Doesn't seem like a good alternative for the regulators. So our view was simple. Simple names are already working. This market's going to come back. The regulators, and we had a strong view since we've had a couple of these banks that have already been regulated, that they are very much in favor of having a lot of choices. So we felt that it was a relatively easy trade. In fact, what I felt my biggest mistake was thinking it might last longer than it did.
It sounds easy now looking back at the time. It was not easy. I think, Lisa, you and I were talking about this at the time. It felt like maybe we'd see a real loss of faith in some of these products, these securities.
I just remember just seeing the valuation tank.
Big time.
So it sort of goes the whole
좀
idea of easy money being made. It's really easy to say that in
근데 아직은
So
아주 좋아요.
one of the interesting things, this was against a backdrop where the return on equity of European financial stocks was going to be the best it's been in easily since 08, since the crisis. So that was also another nonsensical. So you have really good earnings. The profitability, whether it's through cleaning up the balance sheets, we saw that during the pandemic, there were in excess charge-offs, to being levered to higher rates. So the return on equity had gone from, call it, if you look at the SX7E, had gone from, call it, the mid-single digits to the double digits. And then the AT1s weren't going to work. That just didn't seem to me fundamentally to make sense. Or maybe to put it a different way, I've never seen that happen in my career. You know, where the junior securities haven't done well when the underlying profitability is improving.
So is there anything else that's like that right now? Just you can tell us. There's nobody.
숏 팔면 떨어지고 롱사도 떨어지고 아이고 어떡해요. 아 이런 경우도 있구나.
I think the preferred market. So when you look at DirecTV just did a deal.
할 말이 없네요.
I think that's reasonable. You look at a Valeris.
저 따라오세요. 는 말할 수 없고 저 그렇게 책임을 못 져요.
That I think are very reasonable compared to equity values. If you look at the preferred stocks, also very reasonable for some of the larger issuers that are trading around 9-10%.
Do you think that credit is going to materially outperform equity this year and has the potential to for a prolonged period of time?
It usually does early in a cycle, with the pandemic being the one exception. If you look at the past few cycles, I think it's certainly a reasonable asset class still. When you look at it's a higher quality asset class than it's ever been in terms of the mix of double Bs versus triple Cs and single Bs, and you're getting the index is yielding about 8%. So that's not to say you won't get better opportunities, but as a entry point, I think it's a reasonable entry point.
Steve, everyone in Davos has been talking about the elephant in the room, which is the former president potentially coming back into power. How are you thinking about business if that was to be the case?
So I view this as like game 4 of an NFL season. Okay, so it's really hard, to think about who's going into the Super Bowl, who's winning the Super Bowl when it's only the 4th week. So I think there's just too much to be decided. If you look back the first time, there was a lot of concern, apprehension that didn't necessarily materialize. So, but there's just a lot of data points to look at, who the running mate is, etc. He's proven to change his perspective, and so it's really hard to. In the 4th week of the season, to be placing too much conviction in anything.
There's a guy I've got a lot of respect for, marked out.
좀 떨어지네.
And he always said back in 2016 it's really difficult to divorce your political bias from your market views.
오늘 임페션이 호피인가요? 아니요. 호피면 진짜 위험한 여자로 볼 수 있는데 호피 아니에요. 잘 보이네. 그냥 니트예요, 니트. 니트인데 오늘 좀 포인트는 빨간색이에요. 빨간색은 매수색. 빨간색은 성공색. 나중에 매도하면 파란색 뽑아야겠다.
Group that they've ever been in terms of the electoral body. So it's or the U.S. population. So I
그러니까 오늘은 여러 가지 발표가 있는데,
60 days out, 90 days out.
뭐 오늘도 롤러코스터 따보시죠.
Well, we will talk about the Super Bowl. I think that everyone here is just sick of it.
Hey Steve, it's good to see you.
It's great.
Thanks for catching up with this.
그때까지도 좀 뽑아야 되는데.
Stephen Tannenbaum there of Golden Tree Asset Management, taking that contrarian view on continuing
또 좀 뽑아도.
I love that trade, and I love that you asked him about it because it didn't.
I love that he's like, it's so easy.
차트가 너무 떨어지면
Everybody said it looked like the Swiss regulators just killed off this market
그나마
single-handedly.
좀 나을 수도 있어요.
And you saw all these asset managers do that. Who was on the other side? This guy.
Without a doubt. Coming up next, in the next hour, Amir Yaron, the Bank of Israel governor, the Dutch Prime Minister, Mark Rutte,
지하로 가면 큰일 나요.
David Cameron. All of that still to come, live from Switzerland, from Davos, at the World Economic Forum. This is Bloomberg.
오늘 어떤 거 있어요? 리치아 앤 드라이브웨이 실적 발표도 있어요. 잠시만요. 이것도 여기 넣어야 될 것 같아요. 넣을게요.
What's going to keep Green World Cup? This is as the economic picture covering the intersections of Hollywood.
The 2024 nominating contests are here, and the candidates are making their cases to New
맞네요. 지금 또 올라가고 있네. 좋아요, 좋아요.
Bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
And at the end of the day, that's what the American people want.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
It all starts Monday in New Hampshire, only on Bloomberg.
It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest
너무 좋네요. 그냥 채널 이름이 그냥 매수 여신으로 바꿔놓을까?
But we have to be extremely attentive and anticipate, just as we do with inflation.
That was ECB President Christine Lagarde speaking with our own Francine Lagarde.
근데 사실 좀 불안하긴 하네. 그 운이 언제까지 이렇게 계속 따라오는 건지, 따라올 건지. 무섭기도 하고, 불안하기도 하고. 근데 사실 지금 운이 있을 때 많이 뽑아야죠. 많이 뽑고 그리고 나중에 오늘 좀 성이 많이 컸네 이런 날에 그냥 나 빼고 안 하는 게 나아요.
What we're going to do, we don't need to be looking in the rearview mirror and relitigating the 2020 election and really, lay out for the American people what it is we're going to do for them to help fight through, 40-year high Joe Biden inflation, disaster at the border, the weakness that we're seeing in the world, and a lot of other things. And that's what I've been urging the candidates to do, and that would go for former President Trump as well.
But former President Trump wants to relitigate 2020. He was just talking about it last night. He goes back to your state of Georgia, as you know. He wants Fani Willis, the district attorney, to be removed. There's lots of questions about potentially a relationship she had with the prosecutor. How are you going to weigh in on that?
Well, I didn't say always listen to what I said. I was just saying what my thoughts were, and that's for every candidate to decide. But look, there's some... months ago I was warning people there wasn't evidence to go after Fani Willis, but now there's some troubling things that have been, accusations that have been made, and I think the judge will get to the bottom of that. That's playing out right now. We've got a legislation we passed for district attorney oversight that ended up in the courts, and so we're going to have to re-legislate that this year, which we're in the process of doing right now in our legislative session.
계속 올라가네. 올라가고 있고, 근데 딱 아니었구나.
Well, I wouldn't be able to speak because I haven't seen the evidence, but I think at the very least, if the accusations are true, it is very troubling, and I feel certain that the judge will rule in the right way to make sure that, President Trump and anybody else is being treated fairly.
So let's go back to what the timeline is going to look like for the political space in the United States. You say a lot of those candidates are not ready to coalesce just yet.
보니까 진짜 어떤 영 모양 같지 않아요?
Let's give Ron DeSantis, Nikki Haley some space. But if Trump wins New Hampshire, is that a time when you're going to say, okay, I'm ready to endorse him?
Well, I think it depends on kind of what happens, how big a win it is, if that happens, if somebody else wins.
올해도 딴 나라로 가고 싶은데 기발이 별로 없어가지고 아직은 시발도 고민 중이에요. 갑자기 너무 뭐지? 9만원. 너무 올라가고 있네. 좋네.
Mark, can you help us understand what the Europeans have been doing for themselves over the last 4 years? Have they been boosting defense spend? Are they in a position?
로켓 발사 준비되는 건가? 오늘 욕심을 좀 부리려고요. 이제야 좀 해야 될 것 같아요. 갑자기 왜 이래?
The question is
10만
whether
원?
they've been doing enough. That's a very different question. There's a huge wake-up call in 2022 with the invasion of Ukraine. A lot of commitments to do enormous amounts. 100 billion pot promised by Germany, for example, to defense. But the actual delivery has been much less than that. It has to be said that last year, the US had been taking the lead in arming and financing Ukraine.
Not bad.
But by the end of the last year, the Europeans had overtaken the US quite handsomely and were doing the lion's share of the work. So it's a fairly complicated question. One thing that's clear is that the Europeans will know what to expect when Donald Trump is elected in that sense. If he's elected, then they will know that, he's no great friend of NATO, he's no great friend of Ukraine, and he's no great friend of theirs.
Mark, let's talk about those billions of dollars and aid that's been
얄밉죠.
going to Ukraine right now. 100 billion stalled in Brussels and in Washington. Biden today is going to make the pitch
10만 원이나
to House
먹었네, 이제.
Republicans that they need to
좋네,
sign
좋네.
off on this. But I want to get a sense from you. You spent a lot of time in Ukraine before and during the war. How much longer can Ukraine go without that aid coming in from Western allies?
Well, the Ukrainians will go on fighting no matter what. It's just that it will be
갑자기
a
왜
lot
이래?
uglier. They will lose a lot more people.
너무 좋네. 쭉쭉 걸어가고 있어.
If they don't have artillery, essentially, if they don't have artillery shells, they don't have the barrels to replace, on the guns, they simply won't be able to compete. And the Russians will be able to push forward, probably quite slowly, but it will be brutal. And the great thing is to understand, I think, that until the Russians feel that there's no further they can go.
진짜 저한테 왜 그러세요? 낙하하면 하시죠. 가세요. 지하로 가세요. 저는 여기 괜찮아요. 저는 높이를 좋아해요.
Are they also struggling to really get on board with Ukraine aid? Also struggling with how much they want to get involved with the Red Sea and fighting the Houthis, and also kind of pushing back and saying we need to really focus on our own countries and making sure we can compete in a new era?
Yeah, no, absolutely. So, the problem in Europe is that you just have one country standing in the way of the release of 50 billion. That's Hungary. And in the coming weeks, that will probably get sorted. Either Hungary will be brought around, or it can be circumvented by taking the fund outside of the EU institutions. So, one way or another, that will probably be done. But the other things that you referred to, these are perennial issues for Europe. With the Red Sea, the French said they didn't want to be part of a coalition where they might be led somewhere they didn't want to go by the US. And more broadly, the French have been pushing
저도
for a
놀랐어요.
long time for a kind of
이렇게 매일 수익을 본다는 거
strength for Europe.
사실 쉽지 않죠, 그쵸?
But they're still such a long way away from getting to that point.
재질이 있나? 되게 사실 지금 되게 위험한 생각인데. 일단 축하하는 게 나쁘지 않을 것 같아요. 해운의 여신? 실제로 이런 닉네임이 붙었으면 좋겠어요. 저는 아주 매우 엄청 마음에 들어요.
And trying to rebuild trust
아니요. 저 나가면 안 돼요. 저는 제 방송은, 제 채널은 그냥 참고로 하는 게 좋은데, 나중에, 뭐, 유닛 때문에 이렇게 매수로 가버렸는데, 근데 많이 잃어버렸어요. 하면 안 돼요. 제 책임이 아니에요. 분명히 얘기해요.
So to me, this has really just turned into what the meat of it was, which is a deal-making opportunity to rapid-fire meet a lot of people at once. And yes, the parties and all of that, but it seems much more transactional and focused.
Well said. I see it exactly the same way, and I think the conversation we had with Mike Worth of Chevron was a great example of that. And again, this morning, we've seen that time and time again. Governor Kemp of Georgia is pushing his state to have a much bigger role in the US economy. From Davos, Switzerland, this is Bloomberg.
저는 프로는 아니고 아직은 완전 초보. 좀 내려가긴 하는데 아직은 좀 분위기가 좋아요. 주원씨, 지금 주원씨 아니 와요? 안 되죠. 하늘로 갑시다. 지하 말고.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of the company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver
그래.
when you need it. Now, you can simply type
어느
phrases in
순간
everyday
파란색이 나오네. 저기요.
Compare financials.
가세요. 이거 뭐야?
Find people.
너 뭐야? 너
Analyze
가버려.
You can enter phrases or
보기
ask
싫어.
questions. What do you want
까란
to know
말이야.
today? Ask a question or visit SearchGo to find answers now.
Live from Davos, Switzerland this afternoon. Good afternoon. Here's the price action on the S&P 500. Softer yesterday, lower again today. We're down on the S&P. We're down across the board. On the Nasdaq by 0.4. On the S&P 500 by 0.3. By 1 full percentage point.
알렉산더 씨, 같이 가시죠. 하늘로 같이 가시죠.
Push back against rate cut expectations in the bond market. 2-year, 10-year, 30-year. The scores in the Treasury market shaping up as follows. Yields unchanged. At least on a 10-year, still with a 4 handle. On a 2-year, let's call this 4.28.
Basically, this is not moving at all compared to what it was doing back in November and December. I just want to sit on Governor Waller's questions for a moment, his comments, where he really pushed back. He was reiterating what we've heard from every single person who's come on this set over the past couple days. And to me, at what point do we price out something more than just a 62% chance of a Fed rate cut in March, but maybe something that's less than 0.5%?
Let's get to those comments from Governor Waller. Under surveillance this morning, Fed Governor Christopher Waller calling for rate cuts later this year. Waller saying yesterday, quote, when the time is right to begin lowering rates, I believe it can and should be lowered methodically and carefully. The comments easing traders' bets for cuts starting in March. More Fed speak coming later from Barbaum and Williams. All of that still to come. Lisa, the message, I think they're all on the same page. They have varying different ideas, I think, of how much we should do this year, when that should begin. But ultimately, the pushback is March is too soon and 6 is too much.
And this time is different. And this, to me, really stood out from Chris Waller's comments. He said, with economic activity and labor markets in good shape and inflation coming down gradually to 2%,
오늘은 왠지 발표 나올 때 슈퍼빔에 나올 것 같은 느낌 그런 것 같아요. 네, 지하로. 저도 이거 좀 무섭긴 한데 근데 지금 나가기엔 좀 애매하잖아요.
That side of the Atlantic, on this side as well, ECB President Christine Lagarde with a few things to say about ECB policy. What she's saying is what we've been asking. When the market starts to tell you this is how much you're going to cut by, the market makes it difficult for you to achieve your inflation objectives through the easing of financial conditions. That's not just a story for this Fed in the US, it's a story for Europe and the ECB.
And the fact that she said the quiet part out loud, does that mean that people start to believe it? Because on the margins, you're seeing yields creep up in the Euro region once again, but not significantly, and you are seeing deals getting done. Like what we were talking about, what Davos is about, right? The deals are getting done, and it's feeling more optimistic than it did over the past couple of years. Much maybe to the chagrin, it may be moving too quickly.
We heard that from the Stiefel CEO. I think this conspiracy theory that somehow these people here have the world on strings. Anne-Marie, they wish they had the world on strings. They don't anymore at all.
No, when you look around, especially with some of the decisions that have been made or the lapse of judgment we've seen or, a missing of a Secretary of State by a certain president and administration, to think that there's some conspiracy theory and cabal going on in Davos just get thrown out the window. But to Lisa's point, deals are being made on the sidelines, but also this Davos has really become a foreign policy forum in some ways as well. You have almost every single foreign secretary here. We're going to be speaking to David Cameron and President Zelensky is here, and he's really trying to rally the West once again as they go into 2024.
코레 하는 동안 뭐 다른 일 방송실을 뭐 하고 계세요? 아니 왜냐면 제가 뭐 물론 뉴스도 보고 뭐 차트도 보고 분석하는 좀도 보고 하고 있는데 뭐 물론 좀 안 되지만 그래도 가끔 이렇게 뉴스 광고 나오거나 아니면 좀 지루할 때 이런 거 있잖아요. 가끔 그냥 컴퓨터 보고 뭐 하고 제 개인 일 다른 일도 하고 그러긴 하는데 님들이 뭐 하는 건지 좀 갑자기 궁금해가지고.
I love that where public sort of officials can't get things done, people look to the private officials to fill the gap. And I think you're seeing that on full display here. That on one hand, we're seeing all of this disagreement over whether you can pass aid in Washington or in
그쵸.
Europe.
지금 딱 심각하지 않은 상황이라서 그냥 놔두면 될 것 같아요. 물론 지금 떨어지긴 하는데 그냥 기다리는 거 나을 것 같아요.
Ukraine's just not on the front page anymore, particularly after the events, the tragic events that took place in early October and the tragedies that have unfolded since then in the Middle East and in Gaza, they're just not on the front page like they were a year or so ago.
And how many articles have I been reading about who's to blame if Ukraine loses? What happens? Who sort of fills the gap? Does Russia start hitting other
갑자기
countries?
뭐 떨어질 수도 있고
theories that are being thrown out there.
갑자기 올라갈 수도 있고 뭐 물론 좋긴 하지만 근데 갑자기 떨어지면 순식간에 러스컷 띵띵띵띵띵띵띵 러스컷까지 돼버리면 그때 진짜 너무 억울할 것 같아.
Despite a lukewarm reception to the iPhone 15 in China. I was surprised by this, Bramo, given the difficult year that the iPhone just had, particularly in China.
아, 그렇게 보니까 그쵸. 이런 방법도 있어요. 그냥 예약해놓고 여유를 부리면 되죠. 예약, 좀 나도 내일 해볼까?
push up the other way, and it also raises the question, can you diversify away from the iPhone if that's really the product that they're associated with most of all?
아, 그렇게 보니까 조은 씨는 여러 가지 주식 하는구나. 그럼 진짜 집중력이 장난 아니겠죠? 2차도 봐야 되고 그 차도 또 봐야 되고 동시에 맵에 넣으면 진짜 너무 복잡할 것 같아요. 요만큼 큰 모니터 사야 되겠죠? 여기도 차트 띄워놓고 여기도 차트 띄워놓고
Yeah, but look, we sat down, I think it was the first or second day of the year, and we said that 6 just isn't going to happen. I mean, at least not according to
여유가 있게 한 편이죠? 아, 들어가세요.
We've always
진짜.
thought that number was more like 1, 2, particularly because, and if people forgot, they got reminded this week, this is a presidential election year.
그쵸. 이렇게 하면 집중하게 하면 스트레스만 받을 수 있어가지고 그냥 우리는 이거 해외 선물은 그냥 즐거워서 즐겁기 위해서 하는 거죠, 그쵸? 스트레스 받으면 안 되니까 이렇게 그냥 자유롭게 이어가지고 예약해놓고 은근슬 착착들 보고 좀 하면 괜찮지 않을까. 왜냐면 아마 회사에 나가면 스트레스 받을 일이 좀 아무래도 많겠죠. 근데 집에도 집이든 다른 데든 이렇게 해외 선물도 아니면 다른 지식 하면서도 스트레스 여기까지 스트레스 받으면 진짜 빡치겠죠? 아니 내가 하루 종일 스트레스를 왜 받아야 돼? 이렇겠죠?
By even consumer cyclicals and things that are leveraged to the soft landing, but maybe not going to be as vulnerable to the non-rate cuts.
Well, that's how we're positioned. So we're neutral in cash in our portfolios, and so we're underweight fixed income, and we are overweight stocks by the tune of about 5% for that reason. Now, right here at this point, with bonds, the kind of 10-year over 4%, we're neutral-ish. We expect you could see some more pain in the short run on yields moving higher, maybe towards that 4.5 level.
9시 40분밖에 안 되는데 왜 이렇게 백 빠져?
We think we'll see yields fall. So we kind of made that move, when we had a 3% 10-year yield. Right here, we'd be a little bit more neutral-ish on making a new move.
Steve, we spoke to Anne Walsh over at Guggenheim a little bit earlier on today, and she flagged the regional banking issues of last year and says they've not gone away. they're going to linger. That problem might return. Steve, where are you on the financials, and how do you feel about the smaller banks at the moment, given the bounce they've had over the last few months?
또 많은 스트레스 받을 수밖에 없죠.
Your phone battery is going to start getting much shorter after your comments.
아, 근데 돈 들어올 때 그 쾌감이 너무 좋지 않아요? 근데 사실 이렇게 보니까 우리도 한 달 동안 회사 나가면서 스트레스 엄청 많이 받고 아 회사 때려줘야 돼 그냥 다른 데 나갈까 그냥 뭐 퇴사할까 이렇게 계속 한 달 동안 생각하면서 근데 월급 날 때 뭐? 너무 춥네요. 한 달도 좀 있어야죠.
Not some kind of massive kind of credit deterioration or rapid rise.
이렇게 한 달도 다닐만 하네. 근데 계속 그래요. 아 이렇게 월급도 돈도 중독성이 기가 막혀요. 어느 약보다는 진짜 중독성이 있고 진짜 위험한 거예요.
Steve, do you see good reason for that to continue? In a world where you might get softer growth, I don't know to what extent. You might get lower rates, I don't know to what degree. But in that kind of world, where do I want to be in the equity market?
Yeah, John, my motto
그러니까요. 지금은 수익을 계속 나고 있는 상태인데 발표 시작하기 전에 별 평화가 없을 것 같아서 저도 이 주원식 되게 좋은 생각이에요. 일단 저 이렇게 해놓고 발표 시작하기 전에 다시 올게요. 그때 다시 롤러코스터 따보시죠. 재밌을 것 같아요. 아 오늘 왠지 나가리 될 느낌일 것 같은데 일단 보시죠. 희망만 가지고 네 그럼 좀 이따가 뵐게요.
That you just have to take a valuation flyer, and that's why we're modestly overweight there as well.
Steve, is this going to be an exciting year, or is it going to be a year of just sort of grinding it out and getting single-digit returns?
It depends on which parts of the market you're invested in. We think it is boring. So you've seen headline indices, kind of move 20 plus or 20% plus or minus over the last 5 years. We don't expect that. We think it's more like a kind of high single-digit, maybe low double-digit return at the index level. But again, underneath, look at those small caps. They're 30% off of their high from 2 years ago. They would need a 50% move just to get back to where they were 2 years ago. So we think it's exciting underneath the surface, but the surface level is going to look calmer than the turmoil underneath.
Tim Cook is listening. The battery's running low. Started in the last 15 minutes.
I told you.
Steve. I know. The conspiracy, is it one? Steve Chevron at Federated Hermes. Steve, thank you. On Apple, on tech, the financials, and so much more. No drama, Lisa, seems to be the message from Steve. Take it. Don't make it worse than it is.
Stop being over dramatic. Just enjoy it. It is what it is. Even bonds, he's like, yeah, they might sell off. You might hold to 4.5% for the 10-year, but they'll come back down eventually. What's interesting to me is the small cap and the regional banks basically seeming to lean in based on how much they've sold off. That's interesting.
If you do get leadership from a different part of the equity market beyond big tech, I think most people would agree with Steve. That's good news. It speaks volumes about the economy. If you're getting leadership just from a narrow set of 7 companies, that's not a reflection of what's happening in the broader US economy, is it?
Which is exactly so, which is a reason why I think a lot of people are saying we've already seen a recession. It was a bad year in 2023, even though it looked like a great year. And this year you could see a recovery, even if on a headline level it doesn't seem quite as great.
Did you get the feeling people want to talk about Donald Trump yet?
Not yet.
Switzerland?
Not quite.
It's not happening, is it? It's not happening. Keep on asking. Keep on getting blank faces. What did we hear earlier this hour? It's the 4th week of the football season.
Yeah,
and you guys want to talk about the Super Bowl. Well, of course we do.
Yeah, that's what happens. Because the Europeans are trying to prepare. They're running around panicked.
Without a doubt. Dave Mackay, President and CEO at RBC, coming up next. This is Bloomberg.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action at a new time, 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. New time starts Monday.
Of soft landing in the US are increasing as time goes by. We do believe that inflation will get towards below 2.5% core PCE by the end of the year.
That was Dan Pinto, the JP Morgan Chase President and Chief Operating Officer, on the outlook for inflation, and maybe a sprinkle of Fed policy views coming from Dan Pinto as well. Everyone's got a view. They may well likely start cutting interest rates at some point this year, probably not March, and ultimately 6 is too many cuts. The price action at the moment looks like this on the S&P 500. Lower yesterday. Again today, we're off on the S&P 500 by, let's call it, a third of 1%. Yields just creeping a little bit higher, Lisa, up by a basis point, not even 4.1% today.
Really not a lot of drama. That's all I can say. There isn't a lot going on when it comes to economic indicators. You do get retail sales today, but really some of these macro questions are not going to get resolved in a week. It's not going to get resolved in a month. So right now, it seems like people kind of trading sideways, they're adjusting around the edges.
Going to try and resolve some of those issues in 5 minutes right now with Dave Mackay, President and CEO of RBC. Dave, good afternoon. It's good to see you.
It's good to see you in Davos.
Great to catch up with you, sir.
Yeah.
We've had some difficulties in banking in the last 12 months. We've seen it play out, particularly in the United States in the spring of last year. Some banks were in a position to go on the offense. JP Morgan won with First Republic. You've also gone on the offense. You've taken over the business of HSBC up in Canada. Let's start there. Tell me how that's going and why you seem to think you're operating from a position of strength and maybe even on the front foot in 24.
So our currency is very strong. We're incredibly excited about HSBC Canada. We received approval for it, regulatory approval, in December. We just announced that we're going to close the transaction at the end of March. It's a close and convert, so we can convert the entire client organization onto the RBC platform at the end of March. So we're very excited about that, and it continues the growth story for RBC. We have one of the strongest valuations of any bank in the world on a price-to-book ratio. We're one of the largest banks in the world, no market cap. So that strength, that capital strength, allowed us to take advantage of HSBC's decision to leave Canada. They're 7th largest bank, roughly $80 billion in assets, 750,000 clients are all migrate over to RBC. But what they do really well is they're a fantastic global, internationally connected bank, cross-border bank, multi-currency accounts, trade finance capability, global view. And all that capability comes over to RBC, where we weren't as strong. And not only do we bring the clients over with that capability, we get to offer that trade finance, that global view capability to 15 million of our existing clients. Second thing it does for us is we take that franchise, we put it onto our tech stack, the RBC tech stack, and we are able to offer all the investments we've made in whether it's online banking, mobile banking, trade finance, treasury management, cash management, the HSBC clients will have access to a broader suite of product, a broader suite of capability, more channels to access. So from a client perspective, from an employee perspective, it's a big win. And from a shareholder perspective, it's incredibly accretive to RBC. We're a 14.5% CET1 ratio now. It's going to be roughly 240 basis points of capital. It's incredibly accretive to the organization. Boosts our ROE, which is around 16%, significantly well into our target range. So it's accretive for the shareholder. It's good for clients. It's good for Canada. We'll pay more taxes in Canada. We'll pay more dividends to shareholders, and therefore we're really excited about the growth story that this presents for RBC.
The two things you said there, Dave, that you repeated actually: trade finance, global view.
Yeah.
Here we are in Davos, Switzerland. How challenged is trade and taking a global view at the moment?
Trade will always exist. It's whether it's a regional view of trade, a lot of geopolitical commentary about supply routes, transit routes being challenged, obviously. And we'll figure that out over time as we think about our trade partners long term and we rebuild and rethink trading blocks. Trade will exist and it may look different today and have some components of the world today and some components of the world tomorrow, but it's always going to exist. We have to, as a society, take advantage of our relative differences and our relative advantage. We have to keep inflation out of our economies, and global trade and global access to trade has allowed us to operate our economies much more efficiently. So we'll find a way. It just feels a little cloudy right now.
Literally. I am curious, as you talk about HSBC and this idea of integrating the Canada business, what's next? Who else are you going to acquire?
Well, we just acquired Brewin Dolphin in the UK 18 months ago. We're the third largest wealth manager in the UK. We're the sixth largest wealth manager in the United States, and we're the #1 wealth manager both on distribution and asset management in Canada. So we're building, most people don't know, we're building this fantastic global wealth franchise. So when we think about acquisition and M&A, very much our global wealth franchise is part of that, whether it's in the United States or in Europe. We're thinking, how do we roll up more capabilities? It's very fragmented in the UK, as you know. So there's opportunities there. So building out that global wealth distribution franchise predominantly is important to us over time. We'll generate significant excess capital, even more so with the HSBC acquisition, rebuilding our capability to do a cash transaction with our capital. So wealth management is a major focus for us.
What's interesting to me that you said was that it was not investment banking, that you are interested in further wealth management acquisition targets, but a lot of people are wondering what's going to happen to all these regional banks, and there needs to be some sort of roll-up, and you're not involved in any of that. That's what it sounds like. Why? Are you concerned about some of these banks?
We have a fantastic regional U.S. bank and City National Bank in California. It's a $75 billion bank by deposits. It's been a challenging year for regional banks, including City National, with deposit betas changing, with costs increasing from a profitability perspective. We missed our targets. We're rebuilding that performance over the coming year, and I expect us to reach our proper run rate by the end of the year, early into next year. But the regulatory environment's really uncertain in the U.S. The rules around liquidity, the rules around capital, the Basel III endgame has probably been a topic on this show all week. When those rules are resolved, and all we're looking for is a level playing field. Canada's already moved more aggressively to a Basel III endgame, so we're looking, are we pulling up to where we are? Are we coming down to where other global players and other global economies? So that certainty is really important when you evaluate an organization and understand the deposit flows and where they're going. The deposit story in the United States is still challenged as well. So I think I would need more clarity on those outcomes before I could really value a U.S. franchise right now.
So are you interested in expanding in the U.S. at all right now, or is it not really the most fruitful place? Is it other places in wealth management that are more fragmented that you see a greater opportunity?
We have significant opportunities to grow in the U.S. on an organic basis, whether it's our ninth largest capital markets business in the United States. We're seeing greater ECM activity, DCM activity. The rate environment's becoming more constructive for that business. So growing our capital markets operation by bringing in teams, expanding our sector coverage. We're doing well there. We're hiring teams and lifting out teams in the U.S. wealth franchise. We have $550 billion of AUA. We're the sixth largest franchise, national franchise in every market. So again, organic growth. We brought in $25 billion in AUA last year alone, largely through team lift-outs and new clients coming in, and growing the City National franchise at the same time, which is a real focus on the entertainment business in California. selectively growing that business. So we see significant opportunity across those three franchises. We have $4 billion in revenue in capital markets and $1 billion in profit. We have a $500 million P&L in our wealth franchise, and we have another opportunity to do something similar in City National. So growing those franchises is really our core focus right now. But once we digest HSBC and we rebuild that capital base, then we'll
You'll come
pivot
first
to-
and tell us.
We'll come first to tell you, exactly, yeah.
Dave, I want to finish on housing. I have to say, I'll speak for Lisa and me.
Yeah.
When rates went from 0 to 5, when we saw rate hiking cycles in places like Canada, the UK, and even Australia, we were both thinking about what on earth is going to happen to housing markets.
Right.
Where does that leave the banks? I was thinking about that with regards to Canada as well. What is happening?
So there has been a payment shock to Canadians, and the difference between Canada and the US is we don't have a 30-year fixed mortgage. We usually have 4 or 5-year terms. So we have a lot of variable rate mortgages at the same time. 20% of our book roughly is variable rate mortgage. So you've seen a payment shock to about 30% of Canadians right now, in the tune of 20 to 25% increase a month, $400 or $500 a month increase. So that's been challenging for Canadians. What it does is it slows the economy much more quickly. Unlike the US, where there is no payment shock really unless you break your mortgage or sell your house. So the US economy struggled to slow the consumer. The Canadian economy has slowed the consumer quite significantly, and we've seen that in the credit card business. People have a mortgage, people have a variable rate mortgage, credit card spend is off. Canadians are handling that payment shock well, so you're not seeing that migrate to default, but you're seeing the Canadian economy slow much more quickly, to the point that we already have a quarter of negative GDP under our belt. We're looking at probably another negative quarter of GDP. We'll technically be in a soft landing recession early this year. So Canada's slowing more quickly. Inflation's still a little bit sticky, around just above 3%, but there's still 70% of that book is going to reprice over the next 2 to 3 years, and 15% this year, 25% next year. So unless we get rates down, there's more payment shock coming, but consumers are handling it.
That's one to watch. Dave, it's good to see you.
Yeah, it's great to see you. Thank you for inviting.
Sir. Dave Mackay of the Royal Bank of Canada, live from Davos, Switzerland. And this is Bloomberg.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
Breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Geopolitical tensions are on the rise. We are seeing signs of fragmentation.
When we have an escalation of these geopolitical risks and the deterioration of the geopolitical situation, that could have a very negative impact on the global economy.
The tensions that are carrying over from last year are still there. Obviously, the war in the Middle East is a big preoccupation, and concerns that was spread, although it seems manageable so far.
We're in Cold War II. Could get to be a hotter Cold War II than it was. And that's very destabilizing.
Markets do a poor job of pricing in geopolitical risk until the triggering event occurs.
This is Bloomberg Surveillance, live from the World Economic Forum in Davos.
Live from Davos, Switzerland, for our audience worldwide. Good afternoon, good afternoon. This is Bloomberg Surveillance on day 2 of the World Economic Forum, alongside Lisa Abramowitz. I'm Jonathan Ferro, together for the week with Anne-Marie Hordern. Topic of conversation number 1 on the agenda. I said it in the last hour. If you have an American accent, you will be asked about this man, Donald Trump.
The Trump election, we all looked around and thought about putting in hedges.
I mean, I hate to predict anything he's going to do because the whole problem is he's completely unpredictable. But, there's no appetite for that.
When we look at the likely policies, there may be some serious concerns.
It's, of course, a great concern. We've been there before. We've survived it.
We are all concerned about it because the United States is the largest economy, but we have to be extremely attentive and anticipate, just as we do with inflation.
This has absolutely dominated conversations now for the last 2 hours on this programme and the last 2 days at this forum. Lisa, that question's not going away anytime soon. That question, that conversation, behind closed doors, off the record, lively. When you start to ask people on panels at the World Economic Forum or in conversations on this studio, at this set, they don't want to talk about it too much.
They don't want to talk about it. I don't know exactly how much fear there is if you're not necessarily a global player that's looking for cooperation with the United States. From a business perspective, it seems like people are taking it more in stride. When it comes to just general uncertainty, not so much. And when it comes to international partners, a whole lot of concern about a real lack of cooperation.
And part of that is because they haven't prepared. They had 4 years to prepare for potential Trump's return. They know what the playbook and what his policies are, and he's not shy about advocating for them right now. If he is to be reelected, there's a good sense of what he plans to do.
This hour, just an absolutely fantastic lineup, Lisa. We need to talk about it. We'll catch up with the Dutch Prime Minister, Mark Rutte of the Netherlands. We'll also be speaking to the Foreign Secretary, Mr. David Cameron. Really difficult time with 2 wars ongoing right now, one in Ukraine and another in Gaza.
Yeah, and we're also later going to be speaking with Qualcomm CEO about the business environment in a very split world. But right now we're going to be speaking with the Bank of Israel governor, which to me is a fascinating position at a time of such conflict, at a time where it's so hard to really piece out where the income is going to be coming from in an economy that's mired in war.
Let's start that conversation with Amir Yaron, the Bank of Israel governor. Governor, good afternoon.
Good afternoon.
It's good to see you. It's a delicate situation that you're in, so let's talk about it a little bit. Early October, your world changed. Can you tell me what it's like now, what's changed for you as a governor overseeing a wartime economy?
First of all, when the war started, the first thing we focused on was financial stability. And indeed, we put up a $30 billion selling of reserves, a $15 billion of swap, making sure the markets function. We all know what happens when market starts being in a negative dynamics. And indeed, we achieved that. The markets sell down after the shekel did depreciate, but there was enough confidence. There was some stabilization vis-a-vis the north, and the shekel actually went from 386 all the way down to 3.6. It's now at 3.79, but other markets function as well. We were primarily focused on that, and that's why we didn't touch the interest rates, and we made that message very clear. We lowered the interest rate in our last meetings because we felt the markets have stabilized, and we saw inflation decelerating. Indeed, we just saw the CPI. Our target is between 1% and 3%, and it just happened to land on 3%. And so we lowered the rate. It's still restrictive, but we think that was necessary and needed given where we were, given a war, given all the financing. But going forward, as the committee said, it's going to be very cautious, very moderate, depending on how farther inflation decelerate and how economic activity and the whole uncertainty around the world develops.
This is obviously a shock across several dimensions, but just to sit on inflation just for a little bit, you talked about the FX channel there. I'm with you. I think we all were. In the immediate aftermath, we're thinking about whether this would develop into an inflationary shock for the economy. What are your thoughts now on the trajectory for inflation? What's the outlook look like?
I think initially we saw the negative demand shock outweigh the negative supply shock, which is primarily in the construction industry, where about a third of the industry is from the West Bank and they're not in. That could affect inflation down the road in a half a year from now, where prices might come back up, and then rentals, some in agriculture, but overall the negative demand shock overweighed, and indeed it put inflation into the target faster than we initially anticipated. Prior to the war, we were on a path of a super softish landing. We were growing at 3.4% in 23, probably slightly above 3 in 24, and inflation was going to come down into the target anyway. Now we anticipate a 2% growth in 23 and 24. If everything is according to our scenario, which is basically military, primarily focused in the south, intensities will go down somewhere around the first quarter. In that scenario, it's that 2%, and then resuming back to Israel, potential growth of around 4-5% in 25. That's in terms of growth. The big challenge is the fiscal side. The fiscal, the war is costing us directly, and this is give or take about 10% of GDP and another 2% in sort of lost revenue. I call that the temporary hump of the war. The real, and we can, growth will take care of that in terms of what it will do to GDP. The other side is the permanent component increase in spending on military, in the more expensive debt, and the revitalization of the South. That's about another 1%, and we were able to compress it, at least for now, for 1%. And what I want to point out is this week there was a new national budget, and the government went through, in a pretty short time, through making significant steps to offset that 1 permanent percent increase. And that puts us probably on a trajectory of stabilizing debt to GDP at around 66-67% in the next coming years.
We talked to a lot of officials, the Federal Reserve, ECB, and they talk about economic projections, and we talk about the varying degrees of angst around trying to hike rates into a recession if you see inflation picking up, or cutting rates at a time where inflation's not coming down. You have a uniquely difficult situation. How much certainty do you have around economic projections that are made at a time where there's still hundreds of thousands of people serving and are not able to fill their jobs, where you have tourists who are not coming to Israel and we don't know when they're going to come back? All of these types of existential questions hanging over that outlook.
So the scenario that I outlay and the numbers that I've given are obviously around an analysis and of a model, and these models have usually large uncertainty around them. Now expand that by a mile, and of course if there is a north border event that that means the numbers are very, very different. But you have to basically analyze. We know what's going on in terms of the different segments of the market. We saw actually huge recovery towards November. For example, credit card usage dropped to about 70% when the war started. It's over 100% right now. We saw once missile stops and, you know, many families were in the house and the education system was not on. That meant many people were not working. That has come back.
I am wondering, when you look at all the cross-country flows, how much flows from other Middle Eastern countries have resumed at a time when there's a real fear of a widening out in a war? Is there still the same kind of international commerce that can feed the economy in a supportive way?
So I would say, first of all, as you know, the high-tech sector in Israel is very, very important for our economy. You know, the companies obviously are still working. You said obviously there are some workers that are in reserve, but generally they're working. I think the big issue is going forward, not to lose a cohort of new young seeds, the ones that are well known and have revenues will continue to do that. And, you know, hopefully the new relationships that we're just beginning to establish, whether it's with the UAE, etc., those will continue. And, you know, the challenge will be to bring a day after in which there is a mechanism, there is security to Israel, security to people in Gaza, that actually, and some prosperity there. And, you know, that is obviously a challenge. It's not really in my hands. But I think if you look at Israel's, you know, talent, it's there. In terms of the high tech, there's a lot of demand for, you know, home security, economics now. And so I'm pretty confident those things that we're monitoring will be there. Obviously, this is a big shock, and we are continuously monitoring all these developments, as you say, segment by segments, and all this analysis is predicated on the best information we have right now.
It is a big shock, and you're a wartime central banker. How are you planning for the impact or potentially your response if this was to expand either to the northern border or potentially even more skirmishes outside the Red Sea and et cetera?
So we, as I mentioned, we first took our main course of action was to make sure there's financial stability. Once that settled down, we went back to the interest rate tool, and even there I said it's going to be moderate, it's going to be cautious, it's going to be partly a function of inflation, economic activity, and further developments even on the fiscal side, and of course on the geopolitical side. If things develop, we will need to readjust our assessment and maybe go back into a mode of, you know, focusing more on the financial stability.
Do you feel like you're constrained to some extent if this war did spread and it increased the shock to the Israeli economy? Do you feel like you are constrained to your ability to reduce interest rates from here?
I think either way, the process would have probably been a slow process.
Yep.
I don't think interest rate, not just in Israel, I think around the globe, when this cycle is over, they will be in a higher zone than they were before. So the path here is not going to be at a rate of hikes that we did upward. It's going to be slow. It's going to be moderate. And it's probably going to stabilize at a higher real interest rates, and which means also somewhat higher nominal interest rates. So I don't think we are constrained, except the fact that we are going to be cautious anyway, and we are going to be on a lookout for any financial issues and developments that we look. And as I mentioned, we don't often mention fiscal policy in our forward guidance, but we did. And as I mentioned, I think there were significant steps at least to offset the permanent component, which means our debt to GDP should stabilize and not diverge, and I view that as a very important statement to the markets.
Governor, we appreciate your time today.
Thank you very much
for being with us. Thank you, sir. Amir Yaron, the Governor of the Bank of Israel. Coming up shortly on this program, Chuck Robbins, the Chair and CEO of Cisco. From Davos, Switzerland, This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Ways on the heartbeat of the tech
spread across global markets.
Real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the...
The 2024 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off to New Hampshire.
Bloomberg is live in the ground, bringing you the fastest news,
Trump is leading by a long shot.
insightful interviews,
And at the end of the day, that's what the American people want.
and the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
It all starts Monday in New Hampshire, only on Bloomberg.
Ever since we started this journey of bringing the U.S. chips and the EU Chips Act to place, it was all about building resilient supply chains. Everything digital runs on semiconductors, and through COVID, we saw the fragility of our supply chains. Because of that, we said we need a balanced supply chain for the world, and that's what we're off to do, is to rebuild the Americas and the European supply chain for semiconductors. So, hey, we're all better off, right?
Pat Gelsinger, the Intel CEO. You bump into some folks here in Davos, Switzerland that are just constantly, consistently upbeat, regardless of the time of the morning. Pat Gelsinger's one of those, isn't he?
He was incredibly upbeat. I was just curious whether his scarf was a QR code.
I thought the same thing.
So I actually tried it. I took my phone and I tried it. It was not a QR code.
No, but he did say he was going to try and transform into one. Or something like that.
Something to work on. Artificial intelligence.
We'll move on from that. Don't worry about that. Let's turn to the price action just briefly. Yesterday, a down day on the S&P 500. Today, a down morning so far in New York. Equity futures negative by 0.4%. Yields climbing just a little bit higher by a couple of basis points, 4.08%. At the turn of the year, it was all about rate cut talk. Can we start in March? Can we deliver 6? The pushback over the last couple of days has been overwhelming.
Yeah, although Steve Chivrone put it well to me, it's not a matter of people betting on 6 rate cuts. It's people betting on both a soft landing where you don't get as many rate cuts and a recession where you get a lot more rate cuts. And that's sort of the divergence that you're seeing expressed in 6 rate cuts. What we've heard here is a whole lot of optimism. And I think that's the reason why the not as many rate cuts is really the story that gets the greatest attention.
Well, let's talk about whether that optimism is backed up by the facts, the outlook for global growth and what it means for Cisco. Chuck Robbins, the chair and CEO of Cisco, joins us right now. Chuck, good afternoon.
Hello, how are you?
Good to see you, buddy. Great to catch up. As always, let's get straight into it. Engines for growth. Ken Rogoff of Harvard sat in your chair at the start of the week, and he said he's not sure where growth is going to come from. That's an economist. You're running a business. Where's the growth coming from?
That's the difference between someone who runs a business, right, and an economist. We talked about AI all week long. It's a big opportunity for us, and I think that you'll just continue to see new opportunities emerge, things we don't even understand yet, applications that we haven't seen that are going to take advantage of what's going on in AI over the next 6, 12, 18, 24 months. Cybersecurity is an incredible area of investment for our customers, particularly as generative AI helps the bad people be worse people and make them better at what they do. And we have to really come together as an industry and work hard to protect our customers. So cybersecurity is a big one. I think all of our customers continue down this journey of thinking through how their applications are
여러분, 저 다시
architected, whether they reside
왔습니다.
in the cloud or on the private cloud,
봅시다.
public cloud, or a
제가
microservice
오는
as a SaaS
동안,
application. And you know, hybrid work is
어우,
still
마음이
in place.
아프네.
There's still a lot of positives out there.
많이 떨어졌네.
This is my 11th.
Okay, so it's been 11 years. This Davos feels a little bit different, like people are actually just trying
지금
to get
뭐야?
more deals done and trying to figure out exactly what to lock
밖에 안
in.
되네.
Do you get that feeling too?
Well, I think somebody asked me earlier about whether this felt like a normal Davos.
와,
I think it
너무
seems to be,
떨어지네?
first of all, this year.
마이너스까지, 야,
And I do
잠깐만.
think there's a lot
아니, 아직
there's a lot more
발표
tangible business discussion, I think,
10분
going on than you
전인데,
might see
지금
normally.
뭐야?
But there's also a lot more,
1월,
there's a lot more to talk
잠깐만요.
about with all the complexity going on. And you got
1월
elections,
수립
you got
판매
the Middle East
발표.
situation, you got Ukraine, you've got the rate, are we going to cut rates?
발표가 있는데,
You've got,
아직 시작
AI, it just goes on
전인데.
and on and on and on. There's just so much to talk about.
시작 전인데 왜
What's going to affect your business
그러실까,
budget? Are you
저기요.
expanding more in certain regions to avoid some of the conflicts that you keep seeing? Or are you basically just sort of keeping an eye on all
봐봐요.
of this and then chugging
매번
forward,
다
continuing to try to hire the
파란색이네.
best cybersecurity people and move forward with all of the different programs that you've been working on?
Yeah, I would say that
이게
we're
무슨
investing in areas
일일까?
where we do see growth.
아,
We're
오늘은
investing a
좀
lot in AI. We're investing
못
in
받,
cybersecurity, the same areas that I
수익을
talked
못
about earlier.
받았네.
In which regions?
In which regions?
아, 좀 위험할 수
it's pretty,
있는데.
I'd say it's pretty well balanced. The AI specialists tend to get hired where we have
시작하기
engineering
전에
hubs. So
좀
that's you know
모았어야
first and foremost.
되는데.
But we've also, because of what we saw in the pandemic, I think every company's been
그렇지
diversifying
않았다는 건
geographically
좀
relative to their supply
불안해요.
chains. So that, you know, as we've talked about before, no one ever designed a supply chain expecting an entire country to shut down. So we had to make some changes to that, and we continue
왜냐면
to
지금
work through those
확률이
kinds of things.
반반이잖아요. 그냥 떨어질지 올라갈지는
Is that transition complete now? Are you comfortable with where
Ha,
we're
ha, ha,
at?
ha.
We made a ton of progress. When we get the Splunk acquisition completed, we'll surpass $20 billion in software sales as a company, which puts us somewhere in the top 6, 7, I don't know, something like that. So, but there's still more to do. There's still more software assets we can build organically, probably some inorganic stuff we can do. But at the same time, with the AI explosion, we're a significant
조금 올라가고 있는데
recipient of the infrastructure benefit underneath the GPUs in both the web scale as well as ultimately in the enterprise.
아직
So our hardware
예측하기엔
business,
좀 일러.
which in some cases has subscriptions associated with it, in some cases do not. We think that both of them can grow over the next few years.
This is a tough question to answer, but do you think investors have fully internalized your view on where things are going and your message?
I think they've internalized the message. I think they're just looking for, one of the things that we've talked about is that this transition to software should give us more predictability and less volatility. And we've seen that come into play, but we still probably have a little bit too much. And so we've been rewarded for what we've accomplished. And I think as we continue to do that, we continue to deliver, you'll see that in the future.
You know, from being here for a couple of days, everyone wants to be a part of the AI story. What surprised us, I'll speak for myself, what surprised me last year is how quickly it became real. It wasn't just a story that companies were selling, it was something they were monetizing, and the growth was exponential in some cases. And you're a great example of that. Can you walk us through on where you're seeing actual real tangible growth right now off the back of what's developing?
Yeah, I've actually told my team you're not allowed to espouse about AI unless you follow the tangible way that we're implementing whatever you were talking about, because there's so much noise in the system.
왜
Look, I
그럴까?
think we're building the infrastructure that's going to support underpinning
갑시다.
all the AI networks. So that's happening today. We're running pilots right now with web scale players.
음악을 좀 올릴까요?
We're working on a lot of design around future integrated stacks that we're going to take to the enterprise to help them do it. Secondly, we're looking at how we can deliver a better customer experience for our customers by leveraging
문전,
every company is or should be doing. We're building security assistance as an example to help
신나요, 신나요. 아이고, 너무 떨어지네. 천원이라니. 천원이라니. 아, 진짜. 와, 아예 떨어지네.
Which is something definitely that's been a theme.
와, 와, 저기요.
One thing that's
아, 이거
early
아니다.
maybe is that HPE is coming for you more
잠깐만.
aggressively. They bought
이거 뭐지?
Juniper Networks last week, and they said that they're going to be able to compete more directly with you. So, what's your response?
We love good competition.
What's your way of gaining some of the market share in a highly competitive market?
아, 너무 많이 떨어지네. 아, 오늘인가? 아, 내가 만왕을 날인 오늘인가?
Chuck, it's good to see you. Diplomatic. Very careful about
망했어.
CEO
어,
AI
어떡해.
and the real tangible areas of growth we're actually seeing in businesses.
마이너스라니.
To try and I think Chuck's right, to try
어,
and
나
draw a line
파란색이네.
between the noise, which is everyone's just trying to say AI, AI, and like
어,
I'm a part of
문제.
that story, and the actual tangible things that are happening, materializing in front of our eyes. Two important things to look at.
Especially not only on the benefits, but also the risks. And I do feel that in some of the conversations. And we're not just talking about misinformation, but I was struck by this one line that we've heard repeatedly. I know that you've heard
자꾸
it. I've heard it as
한숨을
well.
하니까
Financial
좀
disruption.
이해해주세요. 아우, 죄송해요.
People aren't really thinking about. These are some of the things that people are trying to hash out in much more real terms here.
Confronting an area
아,
of
힘
misinformation,
빠지네.
maybe. Never mind the good things we might do with this new technology. I think there's a big focus here as well on some of the bad things. In the next 30 minutes, absolute must-watch television. Mark Rutte, the Prime Minister of the Netherlands, and David Cameron, the Foreign Secretary of the United Kingdom, all coming up in the next 30 minutes. This is Bloomberg.
4분 전. 마이너스. 어떡해. 다 마이너스야. 처음에 판매 발표. 발표 4분 전. 또 한숨이 나오네. 마이너스. 현타와. 왠지 분위기가 진짜. 주식 다 떨어지고 있고, 지금도 진짜 완전 악화. 막 떨어지고 있어요. 설마 오늘은 망할 날인가? 그러니까 지표 발표 직전 좀 많이 떨어지네. 3분 남았는데 근데 또 떨어지면 어떡해요. 죄송해요. 여기 나오네요. 아니, 저한테 2만 원도 돈이에요. 버는 돈이 많은데 쭉 벌고 싶어요. 성일 보고 싶은 사람이 어디 있어요?
The node coastline points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every
아,
year. Indians make
발표
up about
1분 전.
three-fourths of the immigrants receiving coveted H-1B visas
아,
to the U.S.
준비됐어요.
And it's a safe bet that some of them will
도라지
eventually find their
준비됐어요.
way to the C-suite.
제 낙하산 어딨어? 아, 낙하산이 필요한데. 아, 1분 전. 아이씨. 매번 떨리네. 와씨. 거봐요. 떨어지네. 와씨. 아, 미쳤다. 아, 망했어. 망했어. 아이씨.
Good morning, guys.
아이씨, 진짜.
Good month for retail sales peers. I'll get the breakdown in just a second, but right now we see headline retail sales up 0.6%. I'll be waiting for the revisions to that. Retail sales always heavily revised.
기분까지네. 와, 어디까지 내려가? 씨, 죄송해요. 와, 어디까지 내려가? 아, 진짜.
Up 0.8. That after an initially reported 0.4 in the month of November. So that is
아니.
what we saw last month, and it's 4 times what was expected. Quickly looking at import prices, they were flat on the month after a decline.
아니, 진짜 이거 아니잖아.
So no inflation pressures coming in from those. And one other data point I want to give you before we get to the breakdowns of this stuff is mortgage applications. We haven't paid a lot of attention to that for quite some time for obvious reasons. They were up 10.4% last week after 9.9% the week before. So we've seen a little backup in rates, and we're seeing some results in the mortgage market.
진짜 이게 뭐야?
So let's round them up. Let's go through equities, bonds, and foreign exchange. March rate cut. What March rate cut? And I think we said this after the payrolls report a few Fridays ago. So let's look at the equity market first together. Equity futures near session lows on the S&P 500, pulling back. In the bond market,
그 정도면 들어주면 됐어.
You break up the yield curve, 2-year, 10-year, 30-year, go to the policy-sensitive front end of the yield curve. 14 basis points on the 2-year, off the back of that hotter-than-expected retail sales print. 436 on 2s, on 10s, 411.
와, 진짜 열받아. 어머.
Euro weaker, 108.56 off the back of this. Lisa, that data endorsing Governor Waller's view of the world in the past day or so.
The strength is not going to allow them to cut rates as quickly as people are pricing in. I think that's what this data seems to suggest, and that seems to be what the market is hearing, albeit on the margins right now we are seeing still a 58% chance of a Fed rate cut in March, but it is coming down, edging lower as we go through this.
And Mike McKee, you've had a few extra seconds to chew over the number. Do they look as good as they look on the surface?
They do. All those pretty coats you guys are wearing in Davos, I know you picked up probably in December. Clothing and clothing accessory stores were up 1.5%.
이거 맞냐고.
That's the leader during the month. So you did your part for the U.S. economy. Gasoline stations down 1.3%. No surprise there. Gasoline prices continue to fall and take away from inflation. We saw motor vehicles up 1.1%, but even without the motor vehicle component, retail sales were strong. Food services up 0.6. So that is also good. Building materials up 0.4. I keep saying also good. Pretty much all of them are good except for health and personal care stores down 1.4%. Department stores were up 3%. That is a strong number after
어쩔 수 없어.
there were expectations that maybe people weren't buying as many goods at the holiday time. Non-store retailers, Amazon's, etc. up 1.5%. Food service and drinking places were flat.
말이도 안 나와. 아우, 기운 빠져.
So I'm not sure. Maybe you guys bought coats instead of drinks.
나야라 모르겠다.
Mike, I just want to finish up because we were talking about what are the most important indicators to really be watching. Was it the jobless claims that are going to be the sort of leading light, or is it going to be some of these retail sales, the consumer continuing to spend? Do you hear more economists paying more attention to indicators like this that are coming in much stronger than many people expected?
Well, there's been a lot of talk about whether the economy is slowing down or picking up, and this fits into the picking up camp. And so we'll see whether that starts to get incorporated in people's views of GDP for the quarter and for the future. We should get an Atlanta Fed GDP now number reasonably soon this morning, and it should go up. I'll point out that the retail sales control group I had said was up 0.4 in November. The revision is up 0.5. So even stronger sales in November and strong sales in December give everybody something to look at. Now, yesterday, Chris Waller made a lot of news by saying
저
that
파란색을 별로 안 좋아요.
this is kind of supporting that view at this point. The Fed is not going to cut rates if the economy is this strong. So we'll see next week when we get the PCE numbers. They'll add in services to these good spending numbers. And we'll see how overall strong the U.S. consumer is.
Mike McKee, thank you, sir. Mike McKee on a hot retail sales report. Let's turn to the price action again, Lisa. We'll go to 3 boards and work through it together. Equities going into the opening bound about 55 minutes from now. Equities pulling back on the back of better than expected retail sales.
나스닥 좀 보여줘요. 나스닥.
Negative by 0.5% on the S&P 500. We can turn to the bond market. Yields are higher on a 10-year by 4 basis points, 4.1% on a 10-year. On a 2-year at the moment, higher by a lot more than that. Double digits, up by 11 basis points, Bramo. Your 2-year, 4.33.
And this just sort of confirms the steady grind that we've seen as we get better than expected data and as growth has surprised the upside. If we get a true belief in soft landing, that probably also means a true belief that we're not going to get the rate cuts that we're going to expect. But is this inflation something that Mike has talked about? When can we stop thinking about immaculate disinflation if we start to see some of the inflation?
그래도 아직 칼선
Really pleased to say, Lisa, we can continue the conversation here in Switzerland. Cristiano Amar, the CEO of Qualcomm, joins us around the table. Cristiano, how are you, sir?
Very good.
Good to catch up with you. Let's start here with the business. I want to get straight to it. The smartphone business. What's happening with Apple over the last 12 months? Their core piece of hardware seems to have gone ex-growth. Have we reached that point of saturation for smartphone sales, do you think?
Well, that's a good question. Maybe I'll take a step back. You know, the full market is a big market, but, you know, it's a fully penetrated market. And I think we go into cycles. I think we did see in 2023, particularly correction. I think we have, to the pandemic, we have a lot of demand. But, you know, we had some last earnings call. I think the market is returning to stability. We're cautiously optimistic. So I think we have the normal rate of the market, which is a replacement rate market. But this Gen AI transition could create a new upgrade cycle, and then all of a sudden we have a lot of growth again. We'll see.
Let's put some sort of some tangibles around this. When do you see the smartphone market returning to growth? How long will it be before we get there?
It's very hard to make a prediction, especially because you know you look at the market
아니 언제
and,
빨간색이
the
언제
market
좀
used to be much bigger, even when you think about prior to the pandemic. We're not calling the market number just yet in 2024, but we know it's smaller than it was to be. I think people looking at the current macroeconomic environment, they kind of decide when they're going to buy a new phone. However, the growth vector, it's really related to new functionality. It's going to compel you to buy a new phone. And we just, like, today or tomorrow, I think Samsung is launching an Impact, a new device. Talking about Galaxy S24, some of the things you can do with Gen AI on
공식
the phone.
방송도
And
아니고
as we get to this
제
transition, I
방송이고
hope everybody wants to buy a new phone.
제 라이브고
And we'll be able to just go like this.
그러니까 욕하면 돼요.
I'm curious from your point of view.
시발 가면 돼요. 지금 이런 상황이라서 진짜 그러니까 뭐 욕해도 이해해주세요. 아마 저 같은 분들이 지금 또 계실 거야. 아 진짜. 어디까지 내릴 거야 진짜. 어이가 없네.
renew our agreement with them. I think we have a new agreement with them.
저 안 울어요. 저 화가 나요.
And
저
we'll
절대
see.
안
I think
울어요.
right now we're just focused on being a good supplier for the next 3 years, and I'm going to give you my same answer. As long as cellular remains important, I think there's going to be a role for Qualcomm.
You've been pretty safe when it comes to some of the tit for tat between Beijing and Washington, but how are you looking at navigating that going forward, given what we've seen other companies deal with?
Look, we've been fortunate that some of the things we do today, we're not in the data center, we have not been impacted by any of the restrictions. And in
좋은 시사 그 상황이 지금 어떻게 됐어요? 괜찮으세요? 괜찮았으면 좋겠어요.
As we diversify, you know, our company not only into phones but into PCs and cars and industrial, we expanded our relationships with China. Here's my simple answer, I think, to that question. Any company that has a leading technology product and is a product that becomes very important for the digital transformation of many industries, such as automotive and others, you're going to have a big business in China. It's just a function of GDP. I think we have been so far in a stable place. We have to monitor the situation like every other company. You know, I will continue to believe, and that's what I have said. At the end of the day, strong commercial relationships between American enterprises and our Chinese counterparts will be one of the things that could bring stability to the relationship.
Does that monitoring get more challenging if we were to see a former President Trump win back the White House next year?
Look, we're just focused on our technology, and we want to have markets that we can sell our technology. I think at the end of the day, one important thing to understand is certain technologies are globally interconnected. So you're going to have customers in different locations. You have customers in Europe and Japan. They will have a business in China as well, and you want to be a global supplier to them.
I can see the Qualcomm team just around the corner, very happy with that response, that you didn't take the bait and talk about the former president. Cristiano, I want to talk about the direction of travel in the global economy. For a chip maker, just for the industry, do you think we're close to the point where they have to pick a country?
진짜 언제 올라오나.
China, or we're supplying Europe and America? How close are we to that moment?
Look, I don't think we are right now at this point in the industries that we're serving. And it's one of those things that, yeah, if it changes, I think companies have to adapt. We have seen that some industries had to face that. And you have some industries that's kind of the reality for different reasons, whether it's a cloud company or a social media company and etc. We have been not at this pace, so it's something that we're going to have to worry about.
아 짜증나. 아니 이거 아니잖아. 좀.
What's happening with automotive? We're now working with virtually every car company. The car is becoming a new computing space, and we
다 주원 씨 때문이에요. 계속 해운의 여신, 외수 좋아하는 여자, 빨간색 좋아하는 여자. 아 이게 뭐야? 이렇게 돼버렸잖아요. 아 진짜. 그러니까 이렇게 돼버려요. 이렇게 된다니까 진짜. 남의 탓을.
Laptops, or are they basically going to be headsets that we put on and we go like this and our words kind of show up? I mean, how far are we going away from the previous models of normal existence?
내 감을 안 믿어서 그래.
It's interesting. It's a great question. I remember when laptops appeared, people thought that the desktop will go away. And then when phones appear, people said the computer's going to go away. And when glasses appear, you think the phone's going to go away. I think the reality is your phone's going to be still with you. Your laptop's going to be still with you, but they're going to become much better. And they're going to become more useful. And you're going to get more out of them. And I think that's going to be the great opportunity of Gen AI in those devices.
Cristiano, appreciate the answer. Thank you, sir.
Thank you. Happy to be here.
It's good to see you. Cristiano Amanda, the Qualcomm CEO. What's this? Words come up when you do this.
Yeah. Don't you see people wearing headsets and they go like this? And they can
they sort of get lost because they've got the virtual reality
headset.
Exactly.
I'm excited to see what they can do.
Now I understand. I just didn't know what
아우 진짜 최악이다 정말.
Serious face.
아니 아니다.
Mark Rutte, the Prime Minister of the Netherlands. That conversation just around the corner shortly after this commercial break. Just to touch base on the price action following a better than expected retail sales report out of the United States. Equity futures on the S&P 500 negative here by 0.55%. In the bond market, we look like this: 2-year, 10-year, 30-year. The 2-year yield is a bit higher off the back of that story. Grandma up 10 basis points on a 2-year, up 4 on a 10-year.
진짜 더 계속 떨어지네. 아 못 보겠다 진짜. 아 망했어.
There does seem to be a feeling in the soft landing. One key question is how much has been priced in. Steve Tannenbaum of Golden Tree Asset Management was saying he thinks about half of it has been walked back. There's another half that still has to go.
You know, for special guests, we don't take commercial breaks, and one of those special guests, a good friend of ours, Mark Rutte, the Prime Minister of the Netherlands. He's jumped into the chair. Prime Minister, it's good to see you again.
Good to be here.
It's fantastic to catch up.
와, 잠깐만.
Is that what it is?
와.
I won't try and repeat that. Okay.
아니,
Prime Minister, you're in a different position.
저기요.
I've caught up with you over the years at this forum several times.
와,
You know,
이게
overseeing a
뭐야?
caretaker government. We can talk about your future down the road in just a moment. There's a big
망했네.
focus on Gert
진짜 망했네.
Can you talk to me about that man and help our audience understand who he is, the man that you've known for a long, long time, and what we should all know about?
Well, I'm not sure if that's up to me because you could interview him. And
어디까지 들어가?
No, the point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration. And clearly, he got the upper hand in the election result. Now, we are famous for having to form coalitions. It takes a long time to do that. So that could still take another couple of months.
뺄까? 아니 그럼 성에 20만 원이야. 아니야. 아 뭐야 이거. 아니 주한이 씨 왜 그런 말 했어 진짜.
No, I don't think so. Because for the Netherlands, yes, we want a strong nation state, but we also need, as one of the biggest exporting countries in the world, we need the membership of the internal market, NATO, UN.
아니야 난 울어 안 울어.
In an economic sense, but also in a literal sense.
화가 나.
Ukraine at this moment being attacked by Russia is crucial.
Let's get to NATO.
아 씨발 나오는데 앉아.
Has commented on the former president Donald Trump. Said that Donald Trump was a threat to some
10만
European interests,
원이라도
including NATO.
벌지
I'd like to talk about NATO.
전까지는 앉아.
It's interesting to me how the Europeans
밤새야
constantly
돼.
frame this as America not helping us, the former president not helping us. Can you help us all understand how European countries and governments have been helping themselves? What's happened with defense spending in the
어이가
last 4 years?
없네. 어이가 없네.
And this was exactly Trump's main issue.
아 재미없어. 하나도 재미없어.
Because America is about 50% of NATO economy. They were at that moment, when he was president, spending about 70-75% of the NATO budget. And the rest of NATO was only doing 25%. So he was completely right in forcing us to live up to the 2% commitment. So we invested another $5 billion, which brought us to the 20 billion, which is almost 2%. We are still not exactly there, but almost. And many other countries have done the same. So I always thought that he had a genuine argument here. And by the way, for the US to be in NATO is also in their strategic
아니 진짜 죄송한데 여러분 진짜 죄송한데 저 진짜 말이 안 나와. 와 봐봐. 와.
And this is why you've told your colleagues when Trump was president that you shouldn't criticize him. He is right when it comes to some of these multilateral, multinational organizations that more should be done. We need to look inside. You're potentially going to be working with him again.
반성할게요. 오늘은 매수 오늘 너무 많이 불렀어요.
Because people say to me that you were a Trump whisperer.
No, but I always said we have not voted in the US. I'm a Dutch citizen. I cannot vote in the United States. So we have to dance with whoever is on the dance floor. And in the end, for the whole of NATO territory, it is crucial that you have amicable personal relations with the other people. And in the end, in the US, it is not only the president making all the policies. There's also the very forceful and powerful Senate Foreign Relations
지금이 너무 안 좋은 모습을 많이 보이는 것 같아서 그냥 제 얼굴 가릴게요. 진짜 이거 아 진짜.
Again, that Trump was right on this issue of paying up to
Does that also confirmation that you are taking that job at NATO.
I'm not commenting because I said something about it in October and I decided to end it there. So,
but it'll be in the next few months. I mean, and NATO celebrating their 75th anniversary. It's a big year.
Yes, this is a big year for NATO because in the Washington summit is the 75-year summit where Jens Stoltenberg will preside as NATO Secretary General. I said something about my own future in October.
맨날 올라갈 수 없죠.
I'm not going to add to what I said
진짜.
I would like to just sort of build on this idea that Trump has been front and center at this conference. What do you think people have wrong when they talk about some of their fears? Because we've heard this again and again, that a lot of people are very concerned about Trump 2.0, and you don't sound that concerned.
Well, of course, first of all, I cannot vote in the US. Secondly, I do not agree with everything Biden or Trump are doing, and I don't have to because I don't live in the US. But in the end, for me, from the Netherlands, we are, after the United Kingdom, the most transatlantic country in Europe. We are one of the biggest trading nations in the world. So that relationship with the US for us is crucial. And that means that whoever is president, being fairly elected in that country, we will work with. And it doesn't make sense to start commenting before the election takes place.
계속 선수만 나오네. 이렇게 되네.
Then you should become a US citizen and you should try to get yourself the ballot. Which is not possible if you're not born in the US.
Because you've checked. But I'm curious about, the reason why people are thinking about this now is because we're thinking about, okay, how stable is the landscape that Davos has come to celebrate in some ways, which is this globalization and this idea that...
The issue is this, that we are always talking about globalization, and we need globalization. We need a multilateral system. But also the strong nation state. And what I think in Davos for too many years we have done too much is celebrating the multilateral world order, forgetting about the necessity that you also need strong nation states. And you need to one and the other. It is not neither or, you need both at the same time. Because for example, my country, what is my task? Strong economy and making sure that the Netherlands is safe. To have a strong economy and make sure the Netherlands is safe, we need the EU, we need NATO, etc. But it's in the national interest of the Netherlands. So we need both. And sometimes this almost gathering of the world elite discussing multilateralism as something in its own right is not right. It has to be connected and grounded in the nation state. That's my belief.
Prime Minister, I know you've only got 90 seconds left with us, so I want to finish on this. You've been at the forefront, I think, of this conversation where others have been lacking in Europe, getting Europe to look at itself about what Europe needs to do. The European model feels broken. To rely on America for defense, for China for economic growth, for Russia for energy. It feels like in the last 10 years we've seen a real setback, a reality check. As you step back from the Netherlands from your current role as Prime Minister, what's the new growth model look like? What is the new model?
누구를 고소해야 되나? 주소를 좀 알려주세요. 어디 좀 고소하게.
So the EU is successful. Don't tell each other or try to convince each other that the EU is broken. It is not. Yes, there are many issues we have to solve. But take, for example, our dependency on Russian gas. We have been able in just 18 months basically to deleverage that dependency on Russia in terms of our gas supply. And in many other issues the same. And when it comes to our collective defense, we have stepped up in terms of defense spending. Most NATO countries also being member of the EU. We have now Finland in the EU. Sweden will join as soon as possible. So I'm not
그렇게 바래야지.
No, I wouldn't buy that story.
Prime Minister, it's good to see you.
Good to see you.
Your perspective is great to catch up, sir. As always. Margarethe Ver, the Prime Minister of the Netherlands. Anne-Marie trying to press in there about the former President, Donald Trump. He wasn't talking, but one thing that the former Prime Minister, Margarethe, the current Prime Minister, soon to be former Prime Minister, has said often that the former President was right to criticise NATO and to push the Europeans to spend more on defence.
Yeah, absolutely. And what has been more of a shock for a lot of these European countries is that they weren't at 2%, and there is a war right now on the European soil. And it has been a huge issue for the UK Defence Minister, who said at the Warsaw Security Forum, what is it going to take for these European nations to increase their defence spending when there is actually a war on our doorstep?
We've got a lot to discuss this afternoon. One more fantastic conversation still to come with David Cameron, the British Foreign Secretary. I want to check out the price action just briefly. 3 boards for you. Start with equities. We'll go to bonds, then to foreign exchange. Going into the opening bell in about 38 minutes' time. Equity futures on the S&P 500, negative here by 0.6%. On the Nasdaq, we're negative by 0.9%. On the Russell, the small caps, down by 1.5%.
laughing?
In the bond market.
Completely.
I'm trying to carry
I know,
on.
you tried to carry on, and there's complete chaos over
30
here.
year. I've got the Dutch
Carry
Prime Minister
on.
shaking my hand while I talk bonds. The Foreign Secretary of the United Kingdom jumping in the chair. I'll carry on.
나
In the
아니지
bond
않아.
market, yields higher by 4 basis points. On a 10-year, 4.1%. Your opening bell is about 37 minutes away. Now things can settle down. We're still live. I'm not sure David Cameron knew that. The British Foreign Secretary joins us right now. How are you, sir?
I'm good. I hope I didn't get in your shot.
No, don't. Just rambling through bond markets. Insignificant stuff. Don't worry about it.
That's the reason for it, but it didn't seem to work.
Let's get away from the markets and talk about your world.
Yeah.
It's a really, really delicate time. And what we're seeing in the West is seemingly an inability to restore order. Let's take the Red Sea, for example. How have Houthi rebels managed to basically shut down commerce in the Red Sea?
Well, they're doing it because they're backed by Iran and they've had weapons provided them to Iran. And, you know, between the 19th of November and last weekend, they'd made 26 attacks. We'd given warning after warning, but we hadn't taken action. We have now taken action. We've demonstrated we're prepared to back our words and warnings with actions, and I believe that will make a difference.
You were part of the strikes that took place more recently with the
아
United States.
진짜 이런 상황에서 그냥 침묵 유지하고 싶어요 진짜. 다행히 그렇지 그렇게 큰 돈이 분이 아니지만 근데 지금 여러 가지 계약하는 사람들이 얼마나 이러는지 좀 상상도 안 돼요.
Of course, there was the situation with Syria many years ago. Also, we have taken action with Americans and others to get rid of the ISIL threat that was there in Syria and Iraq, and that was a very successful intervention. But clearly, look, this is about freedom of navigation. We want to have freedom of navigation that's vital not just for our economy, but for every economy in the world, including some of the poorest countries. And you can't have a situation,
including China, just to jump in. And it's interesting to me that this could have huge consequences for trade in China, and yet China's not a part of what took place in the last week. Why aren't they getting involved?
Well, China did sign up to the UN Security Council resolution that condemned the Houthi attacks and said that nations had a right to self-defense, and so I think that is progress. But yes, if you're asking, is Britain a country that is prepared to stand up and work with allies and take action if we have the capabilities and if we can help? Yes, we are, because we think it's important that you don't always leave America to act alone.
Will the conflict continue in the Red Sea until there's a ceasefire in Gaza?
Well, obviously, you've got to look at all of these different things that are happening in the Middle East. I think the important thing is to try and deal with each of them. I don't think it was possible to go on allowing these attacks to continue in the Red Sea. But at the same time, yes, of course we want to work towards a resolution of the situation in Gaza. I've been very clear that should involve an immediate humanitarian pause. We need to get aid in, we need to get hostages out. That requires a pause. And of course, we talked about a sustainable ceasefire because you've got to get rid of Hamas and its ability to rain down terror on Israel. But the best outcome would be moving from that pause to a sustainable ceasefire without a return to hostilities, without more destruction. But for that to happen, a number of things would have to take place. We'd have to see the Hamas leadership come out of Gaza. You'd have to see the hostage situation being resolved and resolved very rapidly. You'd have to make sure that Hamas
진짜 이거 안 되지. 어떡해요.
You'd have to start
여러분들 어떻게 하면 좋을까요?
Gaza and how a new Palestinian authority. So, but I think that should be the ambition. That should be the plan. Moving from an immediate cessation to deal with hostages,
이런 상황에
and moving from that.
뭘 하면 좋을까요? 사실 이런 경험이 처음이라서 그냥 기다려야 되나 빼야 되나는 잘 모르겠네요.
Obviously, there's a number of sanctions and other
어떻게
measures already
생각하세요?
in place. But I think it's absolutely vital that we send a
좀
very clear
도와주세요.
and unequivocal message to Iran that its behavior
이러다가
is
큰
supporting
돈
these proxies, whether
잃어버리면
it's Hamas or Hezbollah
진짜
or
억울할 것
indeed
같은데.
the Iranian armed groups in Iraq and Syria. Its behavior is unacceptable, and we need to make sure that there will be consequences for this behavior in terms of sanctions.
Say, actually striking a leadership like Qasem Soleimani?
No, look, I think what we need to look at is all the tools that we have in the toolbox. And obviously we have been using, for instance, sanctions against a number of people in Iran, and we need to look at how we can step that up if this behavior continues.
There's a real question here as the leadership, and you're saying that there needs to be pretty strong measures taken, this needs to get resolved, etc. And then you see protests flooding the streets of London with all these people coming out to support Hamas, to support, yes, the Palestinian people, but also to really protest some of these actions. How does that complicate your job if you're losing a lot of the popular support?
Well, I wouldn't echo these protests. Look, a lot of people feel very strongly about what's happening in Gaza, and I completely understand that because we have seen a huge loss of life. We've seen a lot of destruction. I support Israel's right to act in self-defense. I understand why they have to get rid of Hamas, but we want to see fewer civilian casualties, less destruction. As I said, I think there is a pathway to try and deal with this. We have a right to protest in our country. People are free to come out onto the streets and make their views known, but we have to work out what's the right thing to do to bring this to a conclusion. So it's often tempting in foreign policy to say the easy thing, let's just have a ceasefire that's comprehensive right now, but it won't work unless you deal with the problem of Hamas. And actually the thing that so many of those protesters want, which I want, which is a two-state solution where you have Israel and Palestine side by side, you'll never get that if Hamas are still in Gaza launching rockets capable of carrying out terrorist attacks. A two-state solution requires the bringing to the end of that situation.
I know you have to go. I want to squeeze in another question. Don't let me down, because I always say that British politicians have much thicker skin than American politicians do. So forgive the bluntness of this question. There is a 20-point gap between the Conservative Party and Labour. If we were to have an election right now, polls indicate your party would get absolutely trounced. What do you think is behind that? Do you think it's poor policy preferences or incompetence?
I remember sitting probably in a chair like this in 2013, 14 when I was Prime Minister. We were way behind in the polls. Everyone had written us off. They were saying, start thinking about packing your bags. And we won that 2015 election. And we won it because we had a strong team with a clear plan. And that's what we've got now. We're a very capable Prime Minister with a very strong team and a clear plan.
진짜 이런 상황에 어떡하면 좋을까?
Illegal migration, to growing the economy, to sorting out some of these problems in terms of international security we've been discussing about. I didn't just come back into this government to come to great foreign gatherings like this and talk about foreign affairs, vital though that is. I came back as a full member of the team because I really believe in this team.
Well, it's good to see you, sir, and we're looking forward to talking to you more through the year ahead. David Cameron, thank you.
Thanks.
Thank you very much. The UK Foreign Secretary. David's going to exit left now, and we're going to carry on doing markets just to fill the screen as he goes past us. So let's do that right now because he's got to run. So let's get to the equity market on the S&P 500. On the S&P 500, we are negative by 0.6%.
안 되겠다 진짜. 너무 열받아.
We have to round things up by talking about the last 30 minutes or so. We've talked about the reality check that's taken place for global leaders, given what's taken place, not just in the global economy, but also
차라도 안전시키기 위해서 좀 차라도 그래야 될 것 같아요. 잠깐 다녀올게요.
And the sort of increasing tension that this concept of just all leaning into some sort of multilateralism isn't going to work is something very apparent. But the companies are having the opposite tone, which is we got to still do our business. And our business, you have to look at the GDP of countries around this world, and that's where you're going to do your business, period, full stop. You got to work with what you got.
Anne-Marie?
The internal perspective from the Dutch Prime Minister about looking in the mirror, and also the fact that Trump was correct on a number of these issues, and I'll say it again, Europe has had 4 years to sort itself out and prepare.
Plenty of fantastic conversation still to come from Davos, Switzerland. That does it for day 2. On day 3, Morgan Stanley's Ted Pick, Brian Moynihan of Bank of America, and a whole lot more. From the team at Davos, Switzerland, this was Bloomberg Surveillance. This is Bloomberg.
From the hillsides of Davos to New York City. For our viewers worldwide, a very good morning. I'm Manus Crenny in for Jonathan Farrow. These equity markets are reviewing the narrative from central bankers, from Waller, Lagarde and Knott. It's all about a new rates dynamic. Back up the truck in rates and review your equity allocation. The countdown to the open, it starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up on the show today, we just had the retail sales coming in hot, 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 sending equity futures lower and treasury yields higher. The global central bankers of the world push back. We begin with the big issue, curbing your rate enthusiasm.
The market's a little optimistic.
A little too optimistic. Too optimistic, really.
On the rate cutting cycle.
And the start of the timing of rate cuts for the majority of the G10 central banks in terms of interest rate cuts.
There has been some repricing.
The expectation is that the Fed will cut rates at some point. The question is when and by how much.
The 6 rate cuts, that's a pipe dream if we have a soft landing.
You're seeing a mixed bag in the overall data.
The economy is actually doing great.
The economy has been strong enough so we can keep rates stable for a while.
Central banks are going to remain vigilant for longer.
They are still concerned about how sustainable the recent disinflationary trend that we've seen. So what we're going to see is more of an elongated pause.
The Fed is good at waiting and watching and lagging.
The Fed is not going to rush to start implementing those rate cuts.
Wait, lag, roll. More data in this system today. Mike McKee joins me now with it. So we've had central bank narratives and a little bit more data. Mike, good morning.
Good morning, Meredith. And again, it's the same question we've been asking for days. What is it going to take to take the markets off of the idea of so many rate cuts? Chris Waller, the Fed governor, pushing back strongly yesterday. Here's what he had to say.
Becoming more confident that we are within striking distance of achieving a sustainable level of 2% PCE inflation. When the time is right to begin lowering rates, I believe it can and should be lowered methodically and carefully. I see no reason to move as quickly or cut as rapidly as in the past.
Well, the markets took that under advisement and did back off a little bit. But we got the strong retail sales report today. And right now, when you look at what's being priced for December, they're no longer pricing in 6 to 8 rate cuts. They're pricing in 5.7 rate cuts. So not a big change out of the markets in terms of the futures pricing at this point. And again, we asked, what is it going to take to get them on the same page as the Fed? Certainly, Waller got help from the retail sales numbers as they come in extraordinarily strong for the month of December, up 0.6%, double the November number. And look at retail control. This is data that goes into basically the GDP numbers for consumer spending, up 0.8% after 0.5 in November. Import prices flat, import prices ex-oil flat, so no inflation aspect from imports during the month, and it does suggest that we're still seeing a strong economy. Atlanta Fed GDP now will come out later today. We'll see what they have to say, but the forecast consensus for next week, about 1.5% for fourth quarter GDP, Vanis, that's gonna go up. Whether that brings down the idea of further Fed rate cuts remains to be seen. You know, for March, we're still pricing in about a 60% chance of a rate cut.
Yeah, although that has dropped from over 80%. Mike, thank you very much for the update there on the retail sales and the Fed speak. Let's talk about the narrative from central bankers around the world with Invesco's Matt Brill, Ashok Bhatia of Neuberger Berman. So I listened to Waller yesterday, and for once the bond market actually did react. You then add in these other voices, Lagarde, along with not from the ECB. So we've got a trifecta of voices of central bank about moving carefully, pull back your timing. Finally, do you think this is getting through to the short end of the rates market, and will it build on that narrative? Let's take it to you first of all, in terms of the narrative. Ashok, good morning.
Morning. We think it can back up a little bit from here, but probably not a lot. And there's really two big things going on, I think. The first is the endpoint for where policy rates are priced seems to us pretty fair and appropriate. And that's, a 3% funds rate, a 2% ECB rate, 18 to 24 months from now. And that seems like a reasonable endpoint, and that will anchor a lot of the front end. But the second element is, the market is really debating whether an easing cycle is going to be due to inflation normalization. So as inflation comes down, central banks adjust policy rates to keep real rates steady, or whether we're going to get significant economic weakness. And, so but easing is a part of either solution. It's really just the pacing of it. And as we get more economic data over the coming months, we think we will see some softer growth. So this back and forth in rates, it's not going to go away, but these levels to us seem relatively fair.
I mean, you just look at the retail sales, and we'll come back to those in a moment. Again, blistering hot retail sales with a SLOOS report that's under pressure. So it's hard to choose your poison that you're going to put down. Matt, let me bring it to you. Do you think sort of job done for the Fed for now? Are we finally coming to heel? Six are off the table, slow dissipation. The Fed will get us back towards the mean where the options market is. The options market's coalescing around 3 cuts. It's only everybody else in the media, apparently, that's just rampant with 6.
Yeah, good morning. I think that the Fed did what they had to do, which is, just continue to talk this down. We think March is off the table, but what really matters is the direction. And I completely agree with what was just said. Is that we're on the right path to call it 3.5%, I guess, by the end of this year. Maybe a little higher than that, but we're going to get there. Early 2025. And so whether they cut in March, April, or March or May, it doesn't matter so much. But the path is coming. And we think it's going to happen because the data is going to be there. It's not because the economy is going to fall apart, but because the deflationary forces continue to be prevalent, and that's going to continue to flow through. So the Fed's going to talk it down all they want, but month after month, you're going to continue to see that inflation get more to their normalized levels.
Okay, so then this takes us to how do you want to position? And if I take it back to you, Ashok, you said a year ago, underweight duration, but here you are. Overweight bias is appropriate, but I get the sense that you want to be more tactically, have the tactical ability to trade these markets. You say an overweight bias is appropriate, while tactically shorter when the market appears to get over-optimistic on cuts. And guess what? Debt sustainability. We haven't talked about that for a while. So is this about ultimately long duration, but with tactical layovers of shorts?
Yeah, I break it into a couple of key areas. I think for short-term interest rates, so 5-year and in maturities, there'll be a lot of noise back and forth, but we're investing in these points, characterize us as overweight investments in these areas, because as cash rates come down, people should extend duration, lock in these high yields. I think on the longer rates, it's a little trickier. This cycle is reintroducing term premium, curve premium, inflation premiums, and the valuation there, we think we're a little bit below fair value. And then the third real quick point is there is, we think still, this is a pretty strong week for issuance and financials. There's a lot of things going on in the European credit markets. So, fixed income is still offering, investors, 5 to, mid-single digit high single digit returns, depending on your risk profile. So it's a little more nuanced this year than last year, but I think there's still a fair amount to do to lock in these yields effectively.
Okay, hold those thoughts. Ashok, we'll come back to you, Matt, in just a moment. It's all about the yield. It's almost like a song for you at the end of last year's charts. Joining me now to look under the hood at some of the stocks that are on the move, Katie Greifeld is with me. Katie, what have we got?
Let's kick off with Tesla, just like we did yesterday. The headlines around Tesla this morning: Tesla slashing Model Y prices in the European markets. That's according to Investors Business Daily. And that's on top of what we talked about yesterday with CEO Elon Musk pressuring the board for a bigger stock award. You add it together, Tesla down over 2% right now. I want to highlight AMD. It closed at its highest level since November 2021 yesterday. It's climbing a little bit pre-market right now. That's after a round of price target upgrades from the sell side, including Barclays, which sees AI as a primary driver of growth. Definitely heard that one before. And Apple. The Supreme Court refused to hear Apple's appeal in an antitrust suit. As a result, the company is opening up its U.S. App Store to outside payment options. That's dragging down the stock a little bit this morning, down about 1% before the bell.
Okay, some interesting movers. Deja vu, Tesla on the move. And first off the block with Katie. Coming up on the show, fresh insight on the U.S. consumer.
Consumers throughout the last year found a good balance to satisfy their spending priorities at the same time dealing with elevated prices and inflation.
U.S. retail sales providing just the latest read for the consumer. What it could all mean for markets as rates review the sales. This is Bloomberg.
There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So, I don't think I'm right on this, but this is, my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content, had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was and the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. New time starts Monday.
So consumers throughout the last year found a good balance to satisfy their spending priorities at the same time dealing with elevated prices.
아니 어떻게 이상한 소리 하시네요. 로스코시랑이. 그래도 조금 올라가긴 했네. 다행이다. 그래도 아직 마이너스야. 마이너스라니.
Mastercard CEO there weighing in on consumer spending, and the trend is continuing. Look at the numbers this morning. Sales are beating the estimates, blowing the doors off. A resilient consumer, the data, spending on clothing, department store shopping, and food services, and that strength is likely to mean a delay in the rate cuts and the timing, endorsing Fed Governor Waller's take. That's still robust economic activity doesn't present a reason to
진짜 캐모마일
that
디마셔야겠다.
was the narrative just 24 hours ago, reinforcing the hills of Davos by Katie Ryfield. Were you out there helping the retail sales? I was. I did my bit for America.
You and me both, Manis, and I don't know if Fed governors are allowed to take victory laps, but I would imagine that Chris Waller may be feeling vindicated this morning. To get specific on the numbers here, retail sales unadjusted for inflation rose by 0.6% last month. That is the strongest pace in 3 months, and as you mentioned, it was a pretty broad-based advance. 9 of 13 categories posted increases, and that was led by clothing, department stores, e-commerce, and motor vehicle sales. And good news, gas station sales fell for a third straight month as, of course, pump prices continue to fall. So that U.S. consumer remains strong, Manis, and you take a look at the market reaction right now, it's fairly consistent. You have equity futures down and you have bond yields higher, especially at the front end of the curve. You take a look at the 2-year Treasury yield right now. It's higher by about 11 to 12 basis points. That's in addition to yesterday's advance. And that gets back to what Mike McKee was telling us just a couple of minutes ago, that as the data continues to roll in hot, that case for earlier rate cuts, it just continues to weaken. We've heard as much from Fed officials in recent weeks, and that is absolutely the conversation that's happening across asset classes this morning.
Victory tastes so sweet, doesn't it, Katie? Even though I'm sure central bankers wouldn't possibly say that that's how they feel. Katie Ryfield on the retail sales. My guests this morning are Matt Brill and Ashok Bhatia. Gentlemen, let me bring you the latest hot off the press quote from Ellen Zentner over at Morgan Stanley. The beat on the control retail sales. Governor Waller's recent remarks, the economy is strong enough that the Fed can remain patient in determining the next move. We expect the Fed, the first cut Fed in the Fed funds is in June, while noting the risk toward an earlier start in May versus market pricing on March. Look, we're going to spend the next 3 months yapping about this until we actually get 25 basis points of a cut, and we know whether it's inflation or a crumbling economy that provokes it. But to this narrative, this is not going to be a pandemic-style rate-cutting cycle. This is not going to be a GFC-style rate-cutting cycle. And maybe that's where the bond market has got ahead of itself. So to both of you, Matt, bring it to you first of all. You're all about yield. A back up in the truck of yield is an immediate buy for you? It's just an incremental layering of buying?
Yeah, I think so. I think last year, if you'd asked me if a backup in yields was a buying opportunity, I would have said yes, but we would have done it, with alligator arms. Would have been very hard to do. Now we feel a lot more convicted on where I was saying earlier, where the eventual path is going for rates. So I think there's a bit of a ceiling out the curve, just given the inflows that are coming, and that anytime we see a backup at all, yes, it's absolutely a buying opportunity.
Now, Ashok, you're a man after my own heart. Tell me about the yield to maturity. Don't give me the coupon. I can clip coupons all my life, but I got to get the yield to maturity and understand what that is. As you look across the curve, where is, let's say, the best yield to maturity in your view right now? If we do coalesce around 3 to 4 cuts as opposed to 6.
I think if you're looking, a bit more of a conservative investor, it's agency mortgages and, 5-year types of financial securities, banks and money center banks and that. And if you're willing, able, want to take a little bit more risk, it's things like U.S. and European high yield, a little bit up in quality there, and emerging markets. And those can hit a little bit of the higher single-digit return yield to maturities.
Matt, for you, it is about the rally, and a magnificent rally in investment grade and in high yield. This morning, you got a little bit of a shake on that, and I just wonder, is it the same narrative for you, which is within IG, when you get a shake in the tree and you get a back up in you, and you get the opportunity to step into IG in the first instance, which is what everybody's telling me that you've got to be long off. So you must welcome these mini shudders.
Yeah, I think we do. I think we call it get another bite at the apple, and we've gotten a few additional bites here. And I think when we back up, we see more inflows versus last year. We backed up, we saw outflows. So the market has turned in that regard. And I think that sets us up for a nice little rally here. We're hashtagging coupon and more in 24. We do think you're going to get a coupon plus year. It's just going to be not a straight line. The rally was so vicious to end last year. We're up still to date about 10% from where we were mid-October in the corporate debt market. So overall, quite a bit of rally last year, stole from this year, but going forward, anytime you get a backup, it's a good opportunity. We're seeing institutional accounts buying more than they did last year, but the new guest to the party is retail. Retail did not buy much at all last year, and they are really stepping forward this year.
Okay, so they're stepping into the breach. There's 2 other moments that happened in the past couple of hours. One was a jock shock for CPI in the United Kingdom. I think that's the tail that's wagging the global bond dog. But also Christine Lagarde. She was cautious. She's setting the summer table. Let's just listen in.
I would say it's likely too, but I have to be reserved because we are also saying that we are data dependent and that there is still a level of uncertainty and some indicators that are not anchored at the level where we would like to see them.
So a prudent Christine Lagarde, a shuddering CPI from the UK. To both of you, this is the worst nightmare for every central banker, which is you get this inflation jolt in the CPI, Matt. How much more at risk is the US of that kind of a shock that the UK had today?
Well, I think the path won't be completely straightforward. So, there's likely to be a hiccup along the way. So, in that regard, I'm a little bit concerned that you could have a little bit of a shock here in one of these inflationary reports. But really the trend, the data just keeps showing us in 8 different places that it's coming down. So, we think the biggest area to watch is the wage market, the employment market, and it's much more imbalanced than it was in 2023. And in that regard, we feel pretty good.
Ashok, to you, obviously every central banker is trying to hold on to the narrative. Where is the risk here for the US in that narrative?
I don't think the risk is really on the inflation, Prince. I think one key thing about this year is inflation volatility. At least in the first half of this year, it's going to go down. It's getting to be much more predictable. I think we're seeing that in the prints that we've been getting have been much, they're punching up closer to consensus. So there is not a lot of, I think, deviation from where inflation is going to go in the first half, and it's falling. It's growth and how quickly the labor market is.
Okay, the joke will be growth, not in inflation. I'd say Bailey in Threadneedle Street is probably pondering those various outcomes for himself. Matt, thank you very much. Matt Brill and Ashok Bhatia, my guest this morning on the rates moves. Coming up, your morning calls a little bit later. We've got John Hancock's Emily Rowland helping me to make sense of the case for large cap US equities. That conversation still ahead.
그치, 분명히 언제쯤 올라갈 텐데 이거 언젠지 몰라요. 그쵸, 조은씨. 차라리 이런 말을 계속 하세요. 마이시가 되니까 계속 좋은 결과로 올라가자 하면 돼요.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day
저렇게
trader.
빨서.
Self-made day trader. And so he's on the bus
제발.
after a game,
너무 마이너스인데?
and he's day trading on the bus.
시장 열기 5분 전.
Cuts him on the spot.
난리
In many
나겠지?
ways, it's convention, right? The people that I don't see maybe once a year, and so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother. It all happens right there as a confluence of all these parts of my life that have found its common center.
하늘로 영봉 제발. 지금은 너무 별로야.
The new Bloomberg surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Marie Hordern every weekday morning at 6 a.m. Eastern. Only
음악 힘으로 올라가자.
Let's get your morning calls from the analyst recommendation. What impact are they having? Morgan Stanley downgrades Mutel to equal weight, seeing limited growth drivers on the horizon. Next up, UBS downgrades Ford to neutral, expecting a challenging year due to industry-related headwinds. And finally, JP Morgan downgrades Morgan Stanley to neutral, slaying your own, saying the shares are fairly valued with few catalysts for this year. Coming up, John Hancock's Emily Rowland unveils her outlook for the markets for 2024. Does she agree with the banking world? Look at those questions here in just a moment.
아니 이거 어디까지 내려가 진짜. 여기 보니까 떨어질 공간이 없잖아. 오늘도 음악 희망을 믿어볼게요. 희망? 힘. 음악 힘을 믿어볼게요. 희망은 제가 지금 없는 걸로.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines his light on these dynamic leaders.
Today's CFO has to be much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on chief future officer, they focus on much more than just revenues and margins.
You also have to be incredibly business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it.
아, 무섭네.
You can simply type phrases in everyday English in the command line.
보시다시피 조금 올라가긴 하는데 저는 아직 모자라요.
Analyze markets.
너무 모자라요.
You can enter phrases or ask questions.
와,
What do you want to know today?
꺾였네.
Ask a question or visit SearchGo to
고개를
find
숙였네.
answers now.
Always on the heartbeat of the tech sector across global markets.
아, 이건 좀
Data aspect is going to be. We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the
시작. 시작했어. 어떡해. 해보자. 오케이. 올라가. 어머. 오케이. 오, 쏙 올라가.
to review the momentum that was imbued in the November-December rally. Equities are lower, they're clapping, we like that. There is the opening bell. It's going to be an initial drift for equities on the downside.
오케이. 일단 시작은 괜찮은데. 오, 좋아요. 가자.
Re-rate higher at the short end of the curve, we're up by 11 basis points. That has an impact on
뉴스도 보니까 어떤 축제 분위기인데. 오케이. 우리도 축제 분위기로 가자.
Wait until the summer. We'll go to the Côte d'Azur and then you may have
제발.
cut. So euro-dollar drifts by 10 to 1% yields, as you can see, selling around the 4% level.
빨간색이 필요해요.
We will step ladder in and crude drops by 1.9% as again the narrative around the oil market is more
어머.
than estimated Chinese
어머,
data.
이건 아니다.
Disinflation
오, 너무 많이 떨어지네.
coming out of China at the pace
설마
since
오늘 완전 나가리야?
and it's taking everybody down with them.
계속 나가리야?
Two stocks to watch, JetBlue and Spirit Airlines. I've yet to travel with them, and a federal judge is blocking the $3.8 billion merger
진짜 이거
to
아니다.
antitrust concerns. Katie Greifield is with me. This is a blow to this airline sector.
어떡해요.
Spirit and JetBlue force apart, like you mentioned, that U.S. District Judge siding with the federal government, saying that
완전
the merger
치열.
would harm
와,
conscious
40만 원.
travelers and violate antitrust laws. JetBlue and Spirit
40만 원?
argue that
설마.
consolidation is the only way for smaller airlines to really compete in this industry. They're
이거
evaluating
아니다.
next steps, but what we know for now is that Spirit shares are in an absolute tailspin. You can see them down 15% pre-market. That's in addition to yesterday's 47% plunge. That was
와,
a
열받네.
record loss there. JetBlue faring a little bit better. It is down this morning, but it actually rallied by almost 5% yesterday, and that probably comes back to this deal's price tag.
설마. 저 어제 62만 원 벌었는데. 설마. 야, 마이너스 40만 원.
Now it remains to be seen what happens next. These companies can either appeal the ruling or abandon the deal altogether. But consensus says that challenging the judge's decision here would be a long shot, especially when you consider that the merger agreement is set to expire in about 6 months' time.
Okay, well, certainly it's a different landscape here to that in Europe when consolidation was allowed during periods of deep distress. Katie, thank you very much. Let's turn our page to financials. We've got regional bank earnings hitting the wire. We're underway. Citizens Financial, US Bancorp are both reporting notable declines in the fourth quarter profit. Shanali Bassett broadens the reach beyond the top tier of Wall Street to go regional. Shanali.
Look at the regional banking system, the likes of Citizens and US Bancorp are going to be hit by FDIC charges tied to those bank failures last year that will hurt a little more for a mid-sized bank than it would perhaps for some of the biggest. Now you are seeing stocks parting ways here. US Bancorp and Citizens getting a little bit of a lift here. You have to remember that the KBW Bank Index has still sold off quite meaningfully into this year. You have Schwab hitting some gains down more than 6%. Just remarkable. It had missed estimates on net new assets as well as retail brokerage accounts. Remember, Schwab is also coming off a tough year, though it is a behemoth in its own sector. A lot of competition among brokerages, and as we know, it got into a lot of banking services that made this year difficult. I would also say that while net interest income at these regional banks, the year's expectations are kind of muted here, particularly when you look at Citizens and US Bancorp. One bright note here is that charge-off rates are not rising also meaningfully. So kind of
그래. 마이너스 50만 가자.
Bank index in between where it was at its 52-week low right after that banking crisis and the 52-week high yet to be seen that is well past $100 and you're looking at a bank index down by 92 at the moment.
Well, it certainly did take a big chunk out of the net new assets, dropping 48% to $66.3 billion. Shanali, thank you very much. Wrapping up the regional banks report cards this morning. Let's turn our attention to the telecom sector. Verizon, they're writing down the value of its business services division by nearly $6 billion. Sign of declining sales. Isabel Lee can give us the detail. That is a chunky write-down.
Very chunky indeed, Manus, and it's $5.8 billion to be exact, and that's one of the largest write-downs in the company's history. So that's as the unit continues to grapple with falling results. So the company attributed the non-cash goodwill impairment charge to secular declines and macroeconomic pressures, and after this charge, the company will be ending 2023 with $1.7 billion. So why has it come to this? So Verizon, as many know, is really a legacy company that's best known for its wireline operations. But this segment has since declined ever since its mobile services boomed. And in fact, Bloomberg Intelligence said Verizon's wireline business is expecting a muted 2024. For now, the consumer unit is the biggest revenue driver for Verizon.
끝까지 내려가면 환영해주세요.
And right now, it's a touch lower by 0.6%, Manus.
Isabel, thank you very much. Switch over to the automakers. J2. Tesla extending its monthly decline to roughly $90 billion after announcing a second round of price cuts just in as many days, this time in Europe. Ed Ludlow is with me from San Francisco. 2 days in a row you show up within 24 hours with bad news on Tesla. What are you doing?
It's not bad news from me, Manus, but actually in the last 30 seconds, Tesla's declines have accelerated beyond 3%.
테슬라 주식도 엄청 많이
is price cuts in Europe, specifically for the Model Y. Mid-single digits across a number of markets as followed. Prices in Germany down on the Model Y between 4.2 and 9.1%. 5.7 to 6.7% in France, 4.3 to 7.7 in the Netherlands, and up to 7.1% in Norway. It's been an interesting 12 months because at times the market has viewed Tesla's ability to cut prices and open new pockets of demand, that lever, as a real positive. Because operationally and on the bottom line, they are streaks ahead of the legacy OEMs and other EV makers. They have some wiggle room on the bottom line to do that, though the other side of the coin is that there is a debate about whether these price cuts as a need to open new pockets of demand are indicative that demand has gone away. Remember as well that Tesla plans to pause production at its Berlin plant in the final week of January, first couple of days of February, because of the impact from the Red Sea. And a senior Tesla source told me over the weekend that just like everyone else, Tesla's action in the context of the Red Sea was to divert shipments of key components on new routes. It's not that they won't end up in Berlin, it's just going to take them longer. So that, and also the debate around Elon Musk's new compensation deal asking for greater voting rights, adding some downward pressure to this stock, down 3%. Manus.
Ed, thank you very much. Ed Ludlow there with the very latest on Tesla. John Hancock's Emily Rowland weighs in on the earnings season so far. This is what she says. Not a great start to the earnings season this past week. We still have a long way to go. The bar for companies to beat is much lower than where it was just several months ago. Joins me now. Emily, good to see you this morning. I mean, I look at the performance in the earnings season so far, and this is what we've got for you. What we have is, if you missed on your earnings, you really are taking a smack. Now, this is also, the analysts have lowered their expectations in terms of earnings growth. From what you've seen so far in this earnings season, it's still early innings. What do you make of it?
Yeah, so again, still early innings, but the bar was lowered significantly. Analysts had been penciling in positive 8% earnings growth for the S&P 500 at the start of last quarter, and now it's negative 1%. So that's good news, but as you mentioned, companies that are missing are definitely being punished. One of the key narratives that we're watching closely is the fact that top-line growth or revenue growth for the S&P 500, again, it's early, coming in around 2.8%. So that's below the 5 and 10-year average. So what we have to remember here is that revenue growth was awesome during the height of inflation. because companies could pass
혈압이
those
너무
higher
많이
prices
올라갔어요.
along to the end consumer. So we saw explosive sales growth for companies. That's now normalizing, but we're also seeing profit margins getting compressed. That's coming in below 5 and 10-year averages. So what companies are dealing with now, of course, is a much higher cost of capital as rates have gone up. At the same time, that revenue growth is shrinking. So those margins are really getting challenged here. And the key for companies from here is who can manage that best in an environment where it's going to become a lot more difficult.
Well, which sectors can manage that back if things do get a little bit more difficult? Everybody's telling me it's a disinflation story, not the US falling off a cliff. Where China is exporting deflation or disinflation, but you know, who can handle it better? Because Tesla obviously.
오늘은 지옥을 가는 여자다.
Yeah, sure. So we continue to emphasize the quality factor. So these are companies with great balance sheets. Think about ones that don't need to tap the capital markets in order to grow. So low interest burdens, lots of cash, great return on equity. Now the poster child for high quality is the U.S. tech sector. We still like tech. We're not downgrading it, but as we all know, it was up 57% last year on 5% earnings growth. 5% earnings growth was of the best we've seen for any sector across the globe, but still so much multiple expansion now. In fact, the S&P 500 Growth Index is now trading at a 44% premium to its 20-year average. So we want to think about owning other sectors that also score high on quality. Healthcare is one of those for us, and it's now trading at a 10% discount to the broad market. We think we're going to see some big changes in consumer behavior as people stop maybe buying all the stuff they want to buy, but they're still going to do the things they need to do, like go to the doctor and seek medical care and engage in utilities, another one of our favorite sectors, as we may see this rotation play out into more defensive parts of the market that, again, score high on those quality metrics. Of course, the retail sales report this morning, not quite telling that story yet.
No, it's not. You know, thank goodness we all still get sick. We'll still need the doctor. We might not need a new iPhone, but we're still going to need the doctor. That is resigningly reassuring. On the retail sales, I mean, it really was a strong report. How exposed to retail do you want to be? Because delinquencies are rising. I'm going to talk a little bit more about that in a while. But what exposure do you want to have to the consumer? I mean, that's my favorite phrase of 2023, the hedonism of the US consumer. Don't ever bet against it.
올라가고 있네. 근데 저는 소용이 없어요.
Some of the data we've seen suggests there's some weakening in the labor market. You know, things like the quit rate are back down to pre-pandemic levels. Job openings continue to normalize. You look at some of the survey data, like ISM Services last week, and the employment component's plunging. But that's not really matching up to the hard data we're looking at. Initial jobless claims coming in near the lowest levels of 2023. The non-farm payrolls report, I'm running out of ways to describe how it's so much stronger than expectations. So as the labor market continues to show this resilience, it's hard to see consumers pulling back from spending. But again, we would not be emphasizing the consumer discretionary sector. We are going to be contending with the higher cost of capital, not just businesses, but consumers, with 25% credit card interest rates, elevated auto loans, of course, mortgage rates still very, very elevated relative to history. So I do think consumers will start to see those headwinds. Things like loan forbearance are no longer a tailwind. Excess savings have been shut down. Wouldn't bet against the consumer in a period of a strong labor market, but it's hard to see what that catalyst is for a meaningful acceleration from here.
Emily, hold those thoughts. We're going to return to some of them in just a moment, sticking with us for this morning. JP Morgan unveiling plans to add to its headcount.
The company has the returns and has the firepower to continue investing through the cycles, and that is what it really allows us to continue regardless of
스타치아 세계로 환영합니다. 그치. 많이 소심한 거지. 내려가야지.
That conversation on Bloomberg.
150? 어머머머머머머. 와, 그치. 50까지 넘어갔네. 그치. 그럼 60까지 또 내려가야지. 그냥 어제 뽑았던 그 62잖아요. 그냥 이부터 날려봐야지 뭐. 왜 하필 지금 나오는 노래도 가사 다운 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 안 그래도 지금 계속 다운하고 있는 상태인데 아 어떡해요. 조한씨 이거 맞아요? 이거 맞아요?
Well, I noticed in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and you ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem, and, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we are all part of an organization that's coming together that says if we can put our camera feed together and tell that that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most?
아 좋아하네요.
I will tell you,
그만 놀래요.
actually it started at razor blades because that's
채널 삭제해버릴게요.
but it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe the counter. And so it's just a matter of categories now.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world starting Monday. Every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
To continue investing through the cycles, and that is what it really allows us to continue regardless of the economic environment to continue growing. We have at the moment
계속 보고 있으면 피부인이 너무 상해요.
People, so the number of people that we employ has been growing and not shrinking. So I think that where we see opportunities and we can help our clients for sure, we will focus on that.
일단 안 보려면 좀 상황이 좀 낫지 않을까 싶어.
JP Morgan President Daniel Pinter planning to add to their overall headcount, seeing numerous opportunities and projecting plenty of growth for 2024 after the record earnings.
그치, 마이너스 60만 원. 시간을 잃어버렸네. 어제 보르도 동안 다 날아갔네.
The differential here, how do I draw the line between the two?
Between citizens and the regional
저를
banks.
이제
So
앞으로
it is an
회원이
interesting moment here.
열심히
You're
뿌리지
not seeing the
마세요.
stock react significantly, Matt. You are seeing just a little bit of a pop, and you have to remember that these banks have sold off meaningfully, and we're looking at two of the larger super regional banks. And when we go through this earnings season, remember we have many more banks to go. It's going to give you a bigger picture of what the landscape looks like. Remember, these two banks, because they're larger, also took FDIC charges that investors are happy to get out of the way because it did weigh on the ability to return capital to shareholders, let alone put new money to work. And so even though for these two banks, U.S. Bancorp and Citizens in particular, you did have both average loans and leases and deposits falling a little bit below estimates, you do have the worst of the banking crisis behind you, particularly for banks like those that are less exposed to more battered parts of the economy, let's say. We are still watching credit quality, we are still watching things like consumer loans and auto loans. Schwab, as you saw, is a largely different story. because if you are
잠깐
among the
나가둘게.
biggest of big banks and or biggest of big brokerages here, and you are not meeting the mark, you are seeing a nearly 6% sell-off here. And you know, you're coming into this conversation talking about JP Morgan. All of these firms are a long way away of the 21% returns that JP Morgan is inking today. So investors need a story to help these banks get back to par when you think about what their pre-banking tumult highs would be. You can call it a crisis or not, but many of these firms have never recovered.
Yeah, and in many ways, we're waiting to hear what Sergio Monti at UBS will deliver in terms of new financial targets. He's coming to eat their lunch in terms of allocation to banks. Shanali, thank you very much. Shanali Basak there with the Super Regionals. Emily Rowland is with us to talk equities. Emily, you say the financial sector is an extreme example of taking down the earnings growth in the back quarter of 2024. A lot of it was to do with FDIC. We're actually seeing the lines printed on FDIC now. Are we past the worst? Do you think it's still going to be an issue with us for 2024? Or how do you look at financials? Have we passed the worst in that respect?
Yeah, I mean, we're looking at it via the lens of the comps from here. So whereas Q4 of 2023, we're seeing about negative 40% reported earnings growth. Again, a lot of that due to the charges to the FDIC around the regional bank issues. Now analysts are significantly upgrading their expectations for Q4 of 2024, penciling in over 20% earnings growth. And that's a trend that we're seeing across the S&P 500. So right now, while the bar is low, negative for this quarter, we're looking at analyst community penciling in 20% earnings growth for the S&P 500 in Q4 of 2024. Now, let's not forget that that's on top of almost 20 times forward earnings being priced into the market. So not only have you seen this incredible amount of multiple expansion, but you're also seeing really optimistic earnings growth baked into the denominator. So, you know, for us, it's really hard to see where that significant kind of breakout in stock prices can come without a significant acceleration in earnings growth from here, not only for financials, but for the broad market.
If we just step back for a moment, you know, with such a momentum in November and December, a recalibration in January, I'd imagine if I was sitting in your seat at the moment, you'd say, look, I'm quite happy with a little bit of truck backing here in the yields and in equity markets. It lets me reflect on where I do want to pick up dips. Is that how you're thinking at the moment? I mean, rather than being asphyxiated and fearful, you try and look for the opportunities of where did I miss the bus last year that I could maybe jump on board?
Yeah, that's exactly what it is right now. We do think that there's some opportunities in the market, again, to find things that are already trading at a discount. We're looking at areas like U.S. mid-cap equities, which are trading at the biggest discount to their large-cap counterparts since the late 1990s. We talked earlier about healthcare and utilities also offering some value, but it's not a surprise to see the markets taking a little bit of a breather here. You know, in November, we first started to see that big Fed pivot, inflation coming down, the Fed suggesting cuts. That was reiterated in December, and we've been calling that the great pivot party, and everybody was invited to it. No matter how much risk that you wanted to take in portfolios, we were rewarded, and now we're kind of feeling a bit of a hangover from that, or maybe it's the dry January that investors are trying out right now. Some of us have failed, or some have succeeded at that. But really what we're seeing today is just a little bit of a pause, and we're back into this kind of good news for the economy and bad news for the markets. I mean, you see the retail sales numbers this morning, industrial production coming in better, the labor market still holding in with strong data. That's causing this backup in rates that's been exacerbated by investors kind of recalibrating their expectations for how much we can see in cuts next year. So I think pretty normal here for markets to be taking a little bit of a breather. I think if the lagged impact of Fed tightening does not cause something to break, which is usually what happens in these late cycle environments, and markets can continue to chug along here. I just think it's optimistic to think we can get another year of 25+% returns.
Okay, well, they're certainly taking a hack to this NASDAQ this morning. The NASDAQ 100 mini down 1.4%. SPOOs are off by 0.7%. That's what you call an attack on tech. Katie, thank you very much with the very latest set. Coming up on the show, the market-moving events you'll need to watch out for. That is your Trader's Diary up next.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
Let's get you up to speed with your trading diary. This is what you need to watch for the rest of the week. Secretary Yellen discussing Bidenomics at the top of the hour. Then the Fed's beige book hits the tape at 2 p.m. Eastern. And on Thursday, there's another round of jobless claims with housing starts. Friday, it's the deadline for the U.S. government shutdown. And a look ahead to existing home sales and the U.S. sentiment survey. We'll also keep an eye on the inflation expectations in that survey. As you can see, Jonathan's in Davos. I'm here. That was Countdown to the Open. And this is Bloomberg.
Regional sports networks. There's a lot of the business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock. Yeah.
And that was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was and the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And good morning, I'm John Tucker, along with Molly Smith, fresh from, where did you go?
Well, first Antarctica and then Mexico.
Antarctica and Mexico.
And now to Bloomberg HQ.
And I was in Bayonne. The U.S. consumer not falling off a cliff. Well, not by any means. Investors still grappling with a possible reset of Fed rate cut expectations. And after running into Waller's wall of worry, more Fed speak today. We're going to hear later from the New York Fed President John Williams. Good morning, everybody. This is Bloomberg Markets. Let's get an update on the markets right now. Reset, and to do that, here's Nathan Hager. Hi, Nate.
Well, hey, John. Well, the U.S. consumer might not have fallen off a cliff, but stocks are certainly taking a dive. It's one of those what's good for the economy is bad for market scenarios, with retail sales coming in at their strongest pace in 3 months in December. Now, markets are dialing back their expectations for rate cuts from the Fed even further. Tracy McMillian, head of global asset allocation strategy at Wells Fargo Investment Institute, says for now, the risk to the market is to the downside.
It's very likely that we could see a retrenchment back down to the 42, 4,300 level on the S&P 500. We don't see, really much upside in the near term. At this point, there's only about 5% upside to the top end of our year-end target, which is the 5,000.
And we are watching markets move lower for risk assets. We check the markets for you all day long on Bloomberg. Right now, the S&P 500 is down 36 points, or 0.8%. 47.29 is the S&P level. The Dow Jones Industrial Average down 90 points, or about 0.25% at 37,269. The NASDAQ Composite sinking. It's down 1.5% now, down 221 points. 14,723. 8 of the 11 main industry groups are in the red, led lowest by communication services and information technology. Utilities, financials, and consumer staples are just barely in the green right now. 10-year Treasuries down 15/30 seconds. The yield 4.11%, a gain of about 6 basis points. The 2-year 4.35. That's 13 basis points higher. NYMEX crude's down 1.8%, down to $1.29 at $71.10 per barrel. COMEX gold is down 0.8%, or $15.50 at $2,014.50 per ounce. The euro weaker against the dollar right now at 1.0856. The yen is at 148.38, and Bitcoin, it's down 1.9%, trading at 42,600. That's a Bloomberg Business Flash. Bloomberg Markets is on now with John Tucker and Molly Smith.
All right, Nate, thanks a lot. And let's get a look under the hood right now with stocks on the move, some of the companies to watch. Good morning to Bloomberg Equities reporter Nora Melinda. Let's start off with Schwab. At one point, we're kind of lumping that in with regional banks in terms of capital.
Yeah, I mean, Schwab, as we've been hearing from a plethora of banks at this point, Schwab is down, headed for its biggest plunge in 10 months. That's since March, after the firm reported a decline in net new assets in the fourth quarter as the brokerage navigated a tumultuous year where interest rates hiked, denting the firm's balance sheet.
Yikes. Looking at this story was the Schwab said that their net new assets were $66.3 billion. That's a 48% drop on the year.
Brutal. Massive. I mean, investors aren't really taking this well, as you can see. That stock is down as much as 7.2% in trading this morning. We did have an analyst from Wolf, Stephen Chubak, say that he sees the quarter's revenue trends as soft, saying that it reinforces his view that the consensus is too high for 2024 to 2025. So it sounds like he kind of thinks that investors should be pulling in some of their bets on this company.
Have we heard from Schwab? What are they saying?
I mean, I think the CEO did say that through an uneven environment with shifting views on the trajectory of the U.S. economy, persistent geopolitical unrest, and a temporary disruption within the regional banking sector, our new trade-off value proposition continued to resonate with investors. So it sounds like they're taking a little bit of a different side than what the market is, how it's receiving it.
All right, let's move on to some of the airline stocks. Not a good day in airline world in terms of mergers and acquisitions or whatever they were calling it.
Right. It feels like we've been talking about airlines so much, especially with everything that happened with Boeing and, that panel flying off. But Spirit Airlines is in focus today. It's extending its losses after dropping as much as 61% yesterday, after a judge blocked its merger with JetBlue Airlines on antitrust grounds. The ruling also implies a reduced likelihood of a successful merger between other airlines such as Alaska Air and Hawaii.
I'm curious, why would they, they're smart people, presumably there.
Which ones?
Well, yeah, presumably here too. Why would they initiate a merger in the first place, knowing that the regulatory environment is what it is?
I mean, I think everyone's really been waiting for these M&A. We've been waiting for the return of mergers and acquisitions. That was something that investors have really been pleading for all through 2023, and as we are kind of seeing a return into 2024, this was a pretty big deal. I want to say it was about $3.8 billion for this deal specifically, so it is a little bit stressful to think that this is a rule that's being struck down. Analysts have sees the ruling as a positive for JetBlue, as business at Spirit has turned negative ever since this deal was announced.
Yeah, I mean, we were writing in the story here now that like the analysts from a couple of different brokerage firms saying that that Spirit now may face the prospect of a bankruptcy filing, that this is really do or die for Spirit, whereas JetBlue now, maybe we don't have to shell out about $4 billion, we'll be okay.
Right. So it sounds like Spirit is kind of taking the brunt of this hit right now, down as much as 21%.
All right, they really needed this deal. Let's move on. We did get some data today about, I don't know, was it mortgage
applications and home builder sentiment out 7 minutes ago.
I know, exactly, especially with you being in the eco space. I know you're very familiar with this.
Yeah, I wrote the story. I can tell you all about it.
Please, Molly.
She's talking her own book.
We're getting first-hand insight here.
Sure. So, yeah, I mean, it looks like a home builder sentiment. So this is the gauge from the National Association of Home Builders as well as Wells Fargo that they put out this measure. And home builder sentiment rose by the most in nearly a year in January, just continuing to see the benefits of mortgage rates paring it back. But I mean, we still got a ways to go. I mean, rates are still considerably elevated, like more than where we at, still twice as high as they were, 2 years ago. So there's still a ways to go for the housing market to climb back. But yeah, I mean, really, the inventory is still so much of the story here. So as long as builders are feeling good, that should certainly help on the supply side.
Mortgage experts saying that 5%.
저는 음악처럼 그렇게 지금 뱅창이 없는데
I mean, we have a bit further to go to both of your points. Redfin reported that Gen Z's home ownership rate stagnated in 2023, but millennials and Gen X saw gains. I found that to be really interesting, especially.
I mean, they're older.
Yeah, I mean, they're older. They're a little bit more.
Who in Gen Z is owning a home right now? Tell me that.
I don't think any of us
as a millennial who is close to owning a home, but I would love to know.
I don't even know what Gen Z is.
Your kids? It's me. No, they're younger. Oh, Miss Nora over here.
Okay, all right, whatever. I don't know what I am.
Might be a minute before we get a house.
Gen Z, thanks very much for stopping by. All right, so the data we got today, I actually sent you a headline writing up the possible stories we can do today. Not falling off a cliff.
And
that was
said,
before
stand
the
by.
data.
I said, stand by. Let's wait and see, and look at that. John Tucker's crystal ball, right on the mark today.
Bloomberg International Economics Policy correspondent Mike McKee with us. I was dead on. I was actually accurate about something, which Molly said, "Don't get comfortable with that."
Entire Bloomberg workforce is standing outside the studio applauding.
All right, so
그쵸. 하늘은
this is some hard
무너지진
data.
않겠죠.
Why is it so off the expectation?
저는
The retail sales.
무너질 수
Interesting
있는데
question.
하늘은 그렇진 않죠.
The holiday spending numbers are always kind of hard to define, and then you get all kinds of people who
하늘이야
what
도와주라.
holiday spending was, and maybe some gloom or pessimism permeated those. It's hard to really predict retail sales because they're very volatile and they get revised quite a bit. Although, oddly enough, this month they weren't. But it seems that the American consumer did not listen to the gloom and went out and filled their Christmas stockings and
with a credit card.
Could be. We don't know about that from this report, but I mean, could look at a few others and put two and two together.
Okay,
but,
so is this well, it's not Fed friendly. How's it being interpreted?
Well, it depends on how you define your friends.
Fed. Fed friendly.
Fed friendly. Well, it does support the Fed's argument that they're not going to be cutting rates as rapidly as the market thinks, although the market still doesn't believe them. We have backed off a little bit from 7 rate cuts now to 5.7 rate cuts. So there's been a little bit of pushback, but not a whole lot yet. But this just tells you that the economy was relatively strong in the fourth quarter. We're all kind of waiting for the Atlanta Fed's GDP now.
아이고야, 희망 어디야.
GDP for the fourth quarter number next Thursday, and it's a week from tomorrow, and it's forecast to be 1.5%, but that's going to go up after this number today. So the strength just suggests that there's still a question about whether inflation is an issue, and as long as there's a question, the Fed is going to be cautious.
That's why I was waiting to see that, this data came out like over an hour and a half ago, which is kind of a long time in terms of being able to update your GDP forecast. And we haven't really seen any economists say that yet, at least none that I've seen come through my inbox. And the reason why, as you were just alluding to, Mike, there's something out of the retail sales report. It's called the control group sales. So this is just a stripped down measure that's helped to calculate GDP. So, I mean, we should start to see some of those predictions come out today,
아,
right?
제발 좀.
I'm not sure if you'll see predictions necessarily come out today, since the numbers next week will
말이
probably take a day
말이 안
to
되잖아.
calculate, recalculate.
Everyone's taking their time.
And then they'll put it in their weeklies. But you'll probably get some people alluding to it in their commentary today. And we'll see what happens with the nowcasts that are coming out. We'll see how much people who compile on a day-to-day basis think that things have changed. But just mathematically, it's going to raise the forecast because when you do a forecast, you're basing it on what you think the numbers will be. In this case, the numbers were all double what the consensus was.
I don't want to get through the week, but who was it? Michelle Bowman at the FOMC was saying that she really closely looks at revisions to the hard data. The suggestion there is that maybe the Fed thinks the hard data is kind of not accurate, or is there a problem with it?
The data are frequently revised for just about everything because the response rate, you send out your questionnaires or you ask for your data and you get half of it in. That's what happens with retail sales. They get about half of it in and they put out the number, and then they have to revise it the following month when they get a full set of data. And we see that with everything. You look at the jobs report's been revised 9 out of the last 10 months, revised down as more data comes in. The Fed has to make a decision based on what it knows at the time, and a lot of this data gets revised several months down the line, and so the Fed wants to know if the data they were using was in any way accurate.
But a lot of this data has consistently been revised downward, has it not?
Not consistently. We've seen strength in a lot of areas over the past year.
저거 쉽지 않죠 지금.
Very, very strong. And so,
아, 이런 숫자 보고 무너지네요.
we disagree about that. But although she's probably doing wonders for Kansas City Chiefs merchandise sales. But the overall feeling was we were going to see a slowdown in the fourth quarter that we haven't really seen yet, a major slowdown. So it's kind of interesting that the economy is just held in.
좀 약간의 희망이 생기긴 하는데.
At the Fed, that we would see a slowdown because interest rates went up, but they haven't really had an impact.
What was everybody buying? I guess vacations to what, Mexico and Antarctica?
No, see, this one is only really good spending, not services.
Stuff. So
this
it's
is the
stuff.
stuff.
오케이, 좀
So
올라가고
this
있어.
was the bigger one.
라고 생각했는데
This
보니까
one was
아니었네.
mostly clothing,
참.
department stores were up a lot, and e-commerce as well. You get anything from Amazon last month?
No. I
Okay,
gotta get
so
an
John
Amazon
didn't help the
account.
economy last month.
I'm not like in
Well,
any ways,
and
any
eating and
bellwether.
drinking places were flat, so John did not contribute.
He really didn't.
But that's services. What are you talking
That's
about?
the only service in the report. The other ones are all good. But you know, this was an interesting reaction from our Bloomberg economics team that I wanted to ask you, Mike.
한 번 더 들어지면 그때 계약수 같이 늘려보시죠. 그쵸, 저는 사실 그런 생각이었는데 해야 될 것 같아요. 일단은
Well, I'd have to look at the numbers they were looking at, but basically what you
매도로
see is that as long as you have a job, you keep spending. Consumption overall falls because unemployment goes up.
뭐 아니면
It's
사실
not going up. You're not going to see that happen.
Well, is that a downturn then?
Well, you can have we haven't had a recession where unemployment hasn't gone up.
That's what I'm saying. I don't see it.
So
멘탈이
that's
나갔구나.
I don't see either.
제가 멘탈이 나갔구나.
Our dear friends at Bloomberg Economics, and they're very talented, smart people, said we were in recession starting in October, and people don't see that. So you could have revisions, as John said.
And then we'll be in a recession.
And then we'll be in a recession, and then we'll all tell them we're sorry.
But you don't know you're in a recession until like months and months later.
Correct. Yes, our good friends.
일단
at the National
타이밍을
Bureau of
좀
Economic
봐야 될
Research
것
take their
같아요.
sweet
The
time.
official
with that.
dating people.
Yes.
the reason
Like
they-
there's a 30% chance it's already raining.
계약수
The reason they take their time is because
널
they're waiting for revisions. And revisions
저
take
늘려야죠,
a long
그때.
time, and it could be that we're miserable right now. We just don't know it.
Oh boy.
Thanks. I know I am. I know it. Mike McKear, what's your title again? International Economics Policy. Does that fit on your your business card? Probably not.
You know, the other day I was thinking, when was the last time anybody used business cards? Was it before the pandemic? Since the pandemic.
Mine doesn't say the title on it. It just says news.
Mine doesn't. I have the same one.
Still says Twitter. Probably needs to be rebranded to X.
That's probably true.
Yeah.
All right.
I have the
Off
same
on a
business card
tangent.
as mine, except mine doesn't say.
All right, Mike, thanks a lot. S&P 500 right now,
일단
33
제가
points lower. That's down
꾸준히
0.7%.
다음에 보고
47.32 on the index. The Dow Jones Industrial Average, 88 points lower. That's down about a
자기
quarter of a percent.
들어올 수
Nasdaq
있으니까
100,
기대해 주세요.
228 points lower. That's down 1.4%. The two-year yields, which are more policy reactive after the economic data, those are up right now 13 basis points. The yield at 435. 10-year yield, the benchmark
점검해야
is
되는데
up 5 basis
승부
points.
봐야
It's
되는데
411 right now. You are listening to Bloomberg Markets. John Tucker, Molly Smith along with you, in for Matt and Paul. And it brings us to 10:18 on Wall Street. Let's get company news now with Steve Rappaport.
John, shares of Spirit Airlines continue to slide after a judge blocked JetBlue's proposed acquisition of the budget carrier. Bloomberg's Charlie Pellet reports.
U.S. District Judge William Young sided with the federal government and said the merger would harm cost-conscious travelers by eliminating the nation's dominant deep fare discount airline and drive up prices across the industry. The ruling follows a closely watched trial in November where lawyers for the government argued that the merger would eliminate a key incentive for bigger airlines to offer budget-friendly fares. JetBlue and Spirit contended consolidation was the only way that smaller airlines can effectively compete with the dominant carriers. In New York, Charlie Pellet, Bloomberg Radio.
Thanks, Charlie. Apple is opening its App Store to allow outside payment options. More on that from Bloomberg's Jeff Bellinger.
Steve, Apple made the move after the Supreme Court rejected the tech giant's appeal in an antitrust lawsuit challenging its business practices. Apple will allow all third-party apps sold in the U.S. to include an outside link to a developer website to process payments for in-app purchases. That will bypass Apple's own payment system, which charges developers a commission of either 15% or 30%. Apple will warn customers when they press a link to conduct purchases outside the App Store before letting them proceed. Steve, that's Bloomberg's Jeff Bellinger reporting. Shares of Apple down less than 1%. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
언제 들어 빨리 가. 타이밍 애매하네. 봐요, 뉴스도 봐요. 다 지금 다 부러질 마당에 내가 선거할 수 있겠어? 진짜? 계속 부러지네. 와, 진짜.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up to 10:22 on Wall Street. I'm
마이너스
we check the
62만
markets all day
원.
long on Bloomberg. Right now, the S&P 500 is down 36 points, or about 0.75%. Dow Jones Industrial Average is lower by 81 points. That's a drop of about 0.2%. The Nasdaq 100
지옥이
is
분위기
down
좀
1%,
나쁘지
a drop
않네.
of 237 points. 10-year yield up about 6 basis points to 4.11%. The 2-year is at 4.35. That's after we got that stronger than expected retail sales data, up 0.6% in the month of December, its strongest pace in 3 months. It's got the market dialing back expectations even further that the Fed could cut rates by March. Looking at commodities, NYMEX crude is down 1.3%. That's 95 cents lower at $71.48 per barrel. COMEX gold is down 0.8% or $16 at $2,014.10 per ounce. The euro, a little bit weaker against the dollar, 1.0855. The yen is weaker as well at 148.29. U.S. wage growth is on track to slow to around its pre-pandemic level over the next few months. That's according to data we just got from the job search website Indeed. It stays on that track. It would relieve one source of inflationary pressure that has been a concern for the Fed. That's a Bloomberg Business Flash. Bloomberg Markets continues
저 지금
with John
계속
Tucker
기다리고
and
있어요.
Molly Smith.
타이밍을 보고
Nathan
있는데
Hager, thanks very much. Appreciate it. Well, risk assets that Nathan just said, they're under pressure
못
today.
들어갈지는
Investors question the
의뢰하네.
timing of Fed rate cuts, among other things. And with that context, let's bring in our next guest, Molly. Ron Sanchez, the Chief Investment Officer at Fiduciary Trust International. Hi, thanks for stopping by.
Great, thank you. Thanks for having me.
So what's in the driver's seat?
From a market standpoint, I think markets are sort of languishing a little bit here because there isn't a catalyst. We had, as you well know, markets ended the year on a strong note. We already have seen the most two important economic data for January. That was the labor report and CPI. So at this point, I think the focus turns to earnings. We've seen a couple of bank earnings, but we will see earnings over the next 2 to 3 weeks that'll give us an idea about how the macro is filtering into the micro.
그러네요. 아직은 좀
More importantly, CEO's expectations.
분위기가 좀
Give us a little sum
좋지
of what you
않아서
saw from bank
언제쯤
earnings and what your biggest takeaway was from that.
언제쯤 들어갈지 언제쯤 계약서를 낼지는 아직 좀
Nothing alarming.
애매하네.
And economic activity
일단은
in good shape. And I'm not sure that
라이브
sort of
계속
bank earnings
켜놓고
signal much on the
껴놓고 있을 때니까 중간중간에 빈잔 타임이 있으면 그때 상황을 좀 나아지게 만들어야죠. 일단은 그럼 주한 씨 화이팅 하시고
well, it creates
저도
two
화이팅
things. I think
해볼게요.
it's going to be much more challenging to pass on, and so revenue and profit margins are going to be needed. To
우리는 성공합시다. 성공까지 갑시다.
It does indeed. I think there's after 2 years of where not only did you pass on rising input cost, but a little more, and I think that environment is clearly behind us. I think it's much more challenging, and if you do raise prices, you could see it manifest itself in lower volume. So there's that trade-off between sales volume and sales revenue.
But prices are still going up, no? I mean, yes, at a slower rate, but I mean, there still is some pricing power there, maybe just not as much.
There is, and I think as we move on, it'll be less and less. And so at least as we sit here today, the moderation I think is evident, and especially sort of in the goods market, it definitely is.
Okay, so what do you like at this point?
So I think the market looks, broadly speaking, compelling to us. I do think the first half of the year is going to be choppy for risk assets, i.e. Equities. I think we pulled forward a fair amount of return into the fourth quarter. The soft landing that became evident by year end, again, 23 was about the hard landing, the no landing, but ultimately we landed on the soft landing. And I think that's the high consensus or conviction trade. And so the first half of the year, I think for risk assets, is about a choppy market as you look to validate that, meaning I need to see economic data decelerate, not too much, come into around a trend or slightly inside of 2%, and I need to continue to see labor markets soften, and the same for inflation. In that environment, I think it sets up better for the second half, and that's one of the reasons why fixed income is attractive for us, because I get paid to wait.
Probably more attractive on a day like today as well, when
That's right.
you see what was the 2 years up, did you say 13 bips before, John?
Yeah, 435 yield right now, 13 basis points higher. The 10 up 6, 412. We both, Molly and I both missed 5%, but
Speak for
just
yourself.
Above. Oh, okay, sorry. That's why she's going to Antarctica and Mexico. But we missed the boat. I missed the boat on 5. 412 still a screaming buy.
I don't know about a screening buy, but it's attractive. Two fronts, one a carry trade, and so looking at sort of risk-free return of 4.25 is appealing, and it gives you a hedge in case the economy does decelerate faster than we think. It'll be a hedge against risk assets that'll come under some pressure, and I think you could see if we do have an economic recession, again, that's not our view, interest rates will come down inside of 4, and you'll have a total rate of return that again is reasonable.
Asset allocation, you're what, 60-40?
That's right, and so we are neutral on U.S. equity, slight underweight in Europe, and a slight overweight fixed income.
So you're saying we're looking for a catalyst right now, earnings being one of them, but I guess on the eco calendar, we do have a Fed meeting in 2 weeks. I guess maybe not expecting to be particularly excited from a policy standpoint, but any early thoughts ahead of that, and what new clues we might be hearing from the Fed, and just maybe the timing of cuts this year?
Sure. I don't think we're going to sort of hear much. They are coalescing around the hold. I don't think they want to pre-sell a cut, and I think they want to have some patience here. I know the market thinks differently. It's building in a first cut in March, and for us, it's just too premature. March is not a line in the sand. I think the way investors need to be looking at this is that I am going to see the Federal Reserve move from a fighting inflation campaign in 23 to managing the economic cycle in 24. And if the economy moderates as we expect, there'll be latitude and scope to lower rates. 5.5 is not the right number. So I think it's more of a second half development. And again, under the heading of watch what we wish for, if they were to move in March, given the fact there's only 2 more labor reports, you would need to see more of a rollover of economic data for them to move. And I I prefer to see the economy moderate than roll over.
I think we all would prefer that.
Yes.
Let's throw politics. What sort of risk is that?
Well, it just adds to a fair amount of uncertainty from a geopolitical and here in the U.S. as well. Obviously, we're early. It's an election year. I think in the first half of the year, though, it will be more about the economy and about the Fed and inflation. In the second half of the year, I think you could see market volatility attributed to political developments.
And the conventional wisdom is that Fed policymakers aren't going to act close to an election. Do you believe that? And how does that sort of change the timing of the expectation of rate cuts?
Yeah, I do not believe that. I think they're in an environment where they have been very aggressive, needed to be to fight inflation. I think their job is complete on that front, and they are in a restrictive posture. And as we move closer to election, there's a lot of economic data to see where we end up and whether it truly is a soft landing and where inflation ends up. And I think in that regard, the Fed would like to moderate its stance and move from restrictive to neutral.
They're also, pretty decisively in, a pivot right now toward lower interest rates. So I don't think that it would really be as controversial if they were to, cut interest rates sometime around the election, if that's obviously so pre-calibrated at this point.
I'd agree with that.
All right,
they can't
so
afford to pass.
Time to put you on the spot with my unfair questions, but how many cuts this year from the Fed, did you say?
The Fed thinks 3, the market thinks 6, and I think it's between 3 and 6. It's at least 3.
That's a safe
and I'd
guess.
say 4 or 5.
S&P 500 year-end target.
I would say, so a modest return of 5 to 7% for the S&P 500.
All right, so 5,000.
5,000. That's
okay. All right.
That sounds like a good number.
I'll settle for that.
Yeah.
5%.
Okay.
Thanks. Good to see you, Ron. Ron Sanchez, the Chief Investment Officer at Fiduciary Trust International, coming in from the islands, Long Island.
Yes, to the island of Manhattan.
Unlike you, you're a real island hopper. Anyway, the S&P 500 right now, 31 points lower. That's down 0.7%, 47.34. The Dow Jones Industrial Average right now 75 points lower. That's down 0.2%. We're at 37,287. And the Nasdaq 100 down 211 points. That's a drop of 1.25%. As for those yields, once again, it bears repeating that more policy reacted 2 year after the retail sales data. The much stronger than expected retail sales data this morning, 14 basis points higher. That's right now at 436. The 10-year is up 6 basis points. That is at 4 billion. And that brings us now to 10:33. Let's get an update on news from around the world. And for that, we head to the Bloomberg 99.1 newsroom in Washington and St. Louis.
All right, thank you, John. Good morning. The U.S. plans to put the Houthi militant group back on its global terrorism list today. Sources tell the Washington Post that decision is part of a pressure campaign against the group. The Houthis have fired dozens of missiles and drones at commercial ships transiting the Red Sea since Israel declared war against Hamas in Gaza. Meanwhile, the United States does not expect its strikes on Yemen's Houthi rebels to eliminate the threat posed by the group in the Red Sea. That's according to White House National Security Advisor Jake Sullivan.
We do see a pathway to a shift in the military campaign in Gaza, a reduction in tensions and the exchange of fire along Israel's northern border, a reduction in the risk of escalation in other parts of the region, and we'll have to continue to deal with the Houthi threat.
White House National Security Advisor Jake Sullivan speaking at the World Economic Forum in Davos. A temporary spending bill to avoid a government shutdown this weekend has passed its first hurdle. The Senate voted to advance the measure that will fund some federal agencies through March 1st and others through March 8th. Again, this has just passed its first hurdle in the Senate. Since 1991, overall cancer deaths have fallen by 1/3. This latest American Cancer Society Chief Science Officer, Dr. William Dayhood, says rising colon cancer rates have actually shifted mortality patterns in adults younger than 50 years old.
We went back to 1995.
colorectal cancer was the 4th leading cause of death in both men and women. And now in women, it's the number 2 leading cause after breast cancer and the number 1 leading cause of cancer deaths in men under the age of 50.
Now, the report shows that breast cancer rates are rising. Colorectal cancer has become the number 1 cause of death among men under 50. Uterine cancer is now the only cancer where survival has decreased. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Nathan Hager, and this update's brought to you by IBKR. Investment advisors switch to Interactive Brokers for lowest cost, global trading, and turnkey custody solutions. No ticket charges and no conflicts of your interests at ibkr.com/RIA. S&P 500 right now is down 28 points, or 0.6%. The Dow Jones Industrial Average is lower by 49 points, or 0.1%. The NASDAQ 100 down 191 points, or 1.1%. 10-year Treasury yield up 5 basis points to 4.11%. All this following stronger than expected retail sales data. Lots of discussion in this market about the path for rate cuts, whether the market's gotten too ahead of itself when it comes to the Fed. We talked about it at the World Economic Forum in Davos with the CEO of Standard Chartered, Bill Winters.
I think the market might be a little bit ahead of itself in terms of rate cuts this year. I have no doubt that we'll get to rate cuts at some point. I suspect it'll be a little bit later in the year, so we have this debate within Standard Chartered all the time. And we're positioned in terms of our from a treasury perspective, we're partially hedged, but we're okay.
Standard Chartered CEO Bill Winters with us from Davos. Looking at commodities, NYMEX crude down 1%, 71.65 for a barrel of West Texas Intermediate. COMEX gold is down 0.75%, $2,014.60 per ounce. The euro weaker against the dollar at 1.0863. The yen is at 148.35. We continue to watch Spirit Airlines. The losses continue, down another 24% after yesterday's 47% decline, all after a federal judge blocked JetBlue's $3.8 billion acquisition of the low-budget airline. Boeing is moving higher right now, up 2 1/3%. Operators of the grounded 737 MAX 9 have finished inspections on 40 of those planes. It is a key step to getting that grounded model back in the air. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
All right, thanks a lot, Nate. Appreciate it. Let's move on to our next guest. Central bankers, of course, as you just heard Nate, they continue their forceful pushback, I would say, against market bets for interest rate cuts. That's weighing on risk assets today. So what's an investor do? Joining us now, Robert Schein, Managing Director Partner at Blanky Schein Wealth Management. How does an investor play this back and forth? Fed going to cut March, now it's later, fewer cuts maybe. How do you view all this?
Well, good morning, John and Molly. And I think if we go back a month ago when I was in the Bloomberg Radio studios, I did say that, the markets were anticipating and asking for, in 2024, a rate cut. In fact, obviously you saw equity markets, risk assets price that in super aggressively. We were in the camp of, as I said then, and I still believe that it's going to be higher for longer, and the Fed Reserve is going to have to walk that tightrope, simply because if you look at the sort of trajectory of inflation through history, you get 2 humps of inflation. The Fed can't pull down sort of the interest rate to reignite some of the inflationary pressures. They have to ensure that inflation is anchored before they go ahead. I mean, about 78% of the time, historically speaking, inflation comes in 2 ways. So, what the Fed basically has done now is that for 2024, it's not a no on rate hikes, it's a no for right now.
How much do you think of the disinflation we've seen that the Fed can really take credit for? This is something I've been wondering, and I feel like so much of it has just been like the supply side normalizing, from those big COVID disruptions and a lot of those supply chains getting back in order. Do you really think, though, Rob, that the Fed can take credit for a lot of what we've seen?
Yeah, I think we're in a territory, including the Fed, that no one has ever seen before. So, retail is working through that, services are working through that, Federal Reserve, businesses are working through that. One thing's good is the supply chain got tighter, and then it got sort of a lot more efficient, if you will. And I think a lot of businesses became a lot more efficient, even moving forward. So that's going to be leading to greater profitability for a lot of businesses that learned through COVID. But if you look at the shift in consumption, and 2/3 of the economy is consumption, it's basically the services sector that's still seeing that spike up. Look at airline prices. Look at all the inflationary prices where people are shifting their spending. You just got retail sales, goods, American consumer will always find a way, whether it's the credit card or whether it's the savings that they had saved up to make certain that Christmas is still Christmas at home. But it's going to take some time to see. We're going to see a lot more pressure built on the consumer, but the shift in spending is quite clear. It's still services for this year.
Okay, we can definitely say there's something of a pivot, the degree to which you can argue about, and we're definitely headed toward that 2%, although with maybe fits and starts, so a disinflationary environment or outright deflation in some sectors. I ask this of all our equity guests, what does that mean for earnings, especially the top-line sales growth?
Earnings, if you look at, again, that's going to be at the forefront. We just had the two biggest points, year to date as it relates to the CPI information as well as job market. It's not exactly going in the right direction in terms of as much movement as the Fed needs to see, but the earnings is on the forefront. And corporations, if you look at tech 2 years ago, tech literally started laying off in anticipation of a recession. We're looking at banks right now. At the end of last year, they started laying off. So it's basically a rolling sector recession. Pick your company, but a lot of companies are basically being a lot more conservative. Now, that jobs number is basically not going in the direction that the Fed needs it as quickly as at least the market would like it. So interest rates have come down quicker.
So a rolling sector recession, does that mean we're in an actual economic recession or heading toward one?
I don't know if that'll actually transpire. If you look at the last 2 years, different sectors have had recessions at different times. That's why I think this time is different from a quote-unquote recession standpoint. I know we've been waiting for about a year and a half, holding our breath for the official data to come out. But if you look at the different sectors and the performance of the different sectors, outperformance in some and underperformance in others, I think sectors, that's where you have to sort of be tactical in your performance of your asset allocation as you look into the market for 2024. The sectors that perform the best on a relative basis, let's say technology, are still going to perform well this year, but relatively other sectors will sort of come back. Let's call it healthcare, energy. I think those are times to start looking at overweighting those sectors for 2024.
Okay, so I put all that into the blender, turn it on high. What do I come up with? Where am I going to put my money?
Again, the 60-40 sort of asset allocation is where we're at. We like about a 10% allocation within that 40 within alternative investments. But I really like energy for the first 6 months. I think obviously the geopolitical tensions that we're seeing, earnings growth in that sector alone is up 40% in the last 4 years. And then you also have buybacks. I mean, they're dividend rich right now. And so where they're going to basically have that free cash flow is how they're going to allocate that. And we believe there's a lot of value there, plus a lot of M&A activity that we saw is going to be accretive. So we like the energy sector moving forward. And then healthcare. Healthcare, again, just like energy, is going to present a lot of value. Plus, dividends, you get paid while you wait.
So Robert, just in our last 30 seconds or so here, just have to confirm, you're coming to us from Palm Desert, California today, is that right? Okay. Tell me.
Is that a TV screen or your window in the background? Come on, be honest.
Screen. But if you look right through us, we've got basically a Palm Desert Chamber of Commerce, snow-capped mountains out here. It's 70 degrees, so come on out.
And also nearby is a beautiful tennis center, which I gotta ask, are you going to be at Indian Wells in March?
We love the Indian Wells tennis event. It's a first-class event, and it's international, and it's growing every year. So it's a perfect time of year.
Yeah, that's big on my list for next year. This year, going to the Miami Open, though.
Back to tennis for you.
It has to. We haven't even talked about the Australian Open yet. It's really just a huge oversight on our part. We will be getting that to you, everyone. Don't worry.
Bob, thanks a lot. Appreciate it. Robert Shine, Managing Director and Partner at Blanky Shine Wealth Management. Thanks for putting up with us. Thanks for putting up with Molly, actually.
Really, just John.
S&P 500 down 30 points. That's a decline of 0.6%. 4735 in the index. The Dow Jones Industrial Average down 52 points. That's a decline of 0.1% right now. And the tech-heavy NASDAQ 100, 189 points lower. That is down right now 1.1%. Two-year yield 13 basis points higher at 435. I'm John Tucker along with Molly Smith. You're listening to Bloomberg Markets. And right now, time for company news. And for that, we say hello to Bloomberg's Steve Rappaport.
Hello, John. Retail sales posted the largest increase in 3 months in December, capping a solid holiday season. Bloomberg's Vinny Del Giudice reports.
Gains were across the board, including online sales as well as general merchandise stores. Auto sales also advanced. Research firm Capital Economics says there's no sign Americans are buckling, even with high interest rates, even with dwindling sales. Meantime, December industrial production rose just 0.1%, closing out a lackluster annual performance for U.S. manufacturers. Vinny Del Giudice, Bloomberg Radio.
Tesla is cutting prices again on select models. The latest on that from Bloomberg's Craig Trudell.
Yeah, so Tesla slashed prices of the Model Y in Europe, and there are a couple of reasons that this is really interesting. The fact that the company makes the Model Y in Germany and is taking that plant down for a couple of weeks, beginning the week of January 29th. So they already are sort of, headed for this, position of maybe being a little bit short on Model Ys, or so you would think if they're taking production down for some time.
Bloomberg's Craig Trudell reporting from London. Diamond Sports Group has reached a restructuring deal with most of its debt holders and Amazon that will save the bankrupt local sports broadcaster from liquidation. Amazon's Prime Video platform will serve as Diamond's main streaming partner. That's according to a filing. Shares of Amazon right now are down less than 1%. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
And that brings us to 10:55 on Wall Street. That's time for an update on news from around the world. And for that, let's head to the Bloomberg 1991 newsroom in Washington. Let's go find Amy Morris. Hi, Amy.
Hi, Don. It's on to New Hampshire now for the Republican presidential candidates after Donald Trump's landslide in Iowa. Nikki Haley's third-place finish. Bloomberg Government's Jonathan Tamari looks at the state of play ahead of Tuesday's primary.
New Hampshire looks like much more favorable ground for Haley. They have a more moderate electorate there. She's polling within about 7 points of Trump, which for any Republican is actually pretty decent, even though obviously, as we said, Trump is the favorite. DeSantis polls have been more in the single digits. So his path looks really narrow right now. It's hard to see where he gains momentum. He had put a lot of stock into doing well in Iowa.
Bloomberg Government's Jonathan Tamari reporting from Washington. Climate envoy John Kerry tells the World Economic Forum in Davos that he is stepping down from his role within the Biden administration so he can take on a more vocal position for the Biden campaign.
Because I'm a federal employee, I'm not allowed to engage in the campaign. That's not going to happen. So I want to be able to speak out on that and other issues globally.
Kerry assured the other world climate leaders that he'll still be around. A rescue worker says an explosion at a fireworks factory in central Thailand has killed at least 15 people. A worker with the Rescue Foundation says they're still trying to confirm the number of deaths. The photos were posted online by local rescue workers showing the site at this level. More freezing cold temperatures are sweeping across the U.S. The National Weather Service says another Arctic cold front is plunging into the U.S. starting today. It could bring more record-setting cold temperatures. Forecasters say this new polar plunge could extend as far south as the Florida Panhandle, with lows dipping into the 20s and even 30s in some places. Global news 24 hours a day, whenever you want. With Bloomberg News Now, I'm Amy Morris, and this is Bloomberg.
Oh, a polar plunge. I can't wait. I wish I were
You gonna do one of those? Jump into the water? That
good
seems
Lord,
off-brand
no,
for you.
that's the polar bear plunge. But
Polar
anyway,
plunge. Yeah, people do that.
I wish I were in Australia, actually.
Yeah,
I know
no
you
polar
do.
plunge down there.
Molly Smith's here, so we have to talk. I mean, I had this whole thing lined up, and we just blew it out of the water because she's got to talk tennis.
Rightfully so. It would be a disservice to the listeners. So, everybody. So, yes.
The listener?
We're in our first couple of days of the Australian Open right now, and Novak Djokovic hasn't found his best form yet, but he had a...
Where's he ranked?
Number 1.
Oh, okay.
What are you ranked?
Me? I actually grew up with a tennis court. Which was
in Bayonne?
Well, it was kind of a crappy tennis court, so I'll blame that. No,
all right. It was the court's problem.
Whatsoever.
Blame the wand, not the wizard, right?
Yes.
Okay. Well, Djokovic, he hasn't. He's playing his way into the tournament, so to be expected with the first week. Just want to get through it and get better with each match. A bit of a mixed results for the Americans so far today. So Chris Eubanks, he's out. He was made a deep run at Wimbledon last year. Let's see, Francis Tiafoe also just lost. But then we saw Taylor Fritz, Ben Shelton, and Seb Korda come through on the men's side. So that's some good momentum.
Okay,
and
we got to do women. Come on.
I know, I'm getting to them next. Don't you worry. So on the women's side, biggest upset so far, Ons Jabeur. Do you know her name?
No idea.
Okay. Well, she is she's made really broken down a lot of barriers for women in the Arab world in really all of sports.
Well,
but yeah, she's from Tunisia. She's a top 10 player. She lost pretty comprehensively to a 16-year-old from Russia, 6-love, 6-2. So not a great start to the year for Ons Jabeur. But otherwise, the seeds are going through pretty comfortably. Be on upset alert for any other ones coming through, but those are the big headlines so far.
Your Australian Open, brought to you by Molly Smith.
That's
the good
right.
people here at Bloomberg News.
And John Tucker on the side.
Okay. S&P, I don't know a damn thing about tennis. S&P 500, 30 points lower. That's down 0.6%. 47.35. The Dow Jones Industrial Average, 37 points lower right now. That is down 0.1%. This is Bloomberg Markets.
This is Bloomberg Markets with Paul
Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Yeah, good morning. Traders continue to adjust their rate cut expectations as central bankers push back. But the U.S. consumer isn't falling off a cliff by any means. Sales hang in there. Chris Waller yesterday, more Fed speak today. We're going to hear from the New York Fed President John Williams. Lower borrowing costs, pushing more home buyers to step off the sidelines. Good morning. This is Bloomberg Markets. I'm John Tucker, along with Molly Smith. We are in for Paul and Matt. God knows where they are, but
maybe Australia, maybe Antarctica.
Maybe. First, let's get a markets update, and with that, I think he's in Washington. Here's Nathan Hager.
Where it's colder than it is in Antarctica, I think. Good morning, guys. We are watching the reset of rate cut expectations continue in the equity market. Fed swaps are now putting odds for a March rate cut at 60% after we got that stronger than expected retail sales data, jumping 0.6% in December, the strongest pace in 3 months. We got a little bit of a look at the why with Dana Telsey, founder and CEO of Telsey Advisory Group.
We had Christmas that was later this year, so people had more time in order to procrastinate. And so really everything was driven around the event days, whether it was the Black Friday weekend or then that week leading up to Christmas. It's what made the difference. It's not that holiday sales are so great, but goods sold at full price and sales came in line with expectations for the most part.
What's good for the economy looks to be bad for markets. We check the markets all day long on Bloomberg. S&P 500 right now is down 26 points, or about 0.6%. 4739 is the S&P level. Dow Jones Industrial Average now trading little change to the downside, now on 10 points to 37,348. NASDAQ 100's down 1.1%, or 176 points at 16,654. 10-year Treasury yield up 4 basis points to 4.09%. The 2-year policy sensitive at 4.35. That's a gain of 13 basis points. NYMEX crude's down 0.9%, or 66 cents lower at $71.77 per barrel. COMEX gold down 0.9%, a drop of $18.70 at $2,011.50 per ounce. The euro 1.0855 against the dollar, so a little bit of euro weakness. The British pound stronger against the dollar, 1.2659. The yen at 148.38. That is significantly weaker against the dollar right now. Bitcoin down 2.2%, right around 42,500. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
All right, thanks, Nate. Appreciate it. Let's get a look under the hood right now. Stocks on the move, companies to watch. Bloomberg Equities reporter Jess Benton. Jess, hi. How are you?
It's always great being here with both of y'all.
Let's
sure
start off
Paul's
with-
off somewhere in Aruba.
He's
with
in
the
Aruba.
flamingos.
Matt's, with the new baby.
Of course, Matt's busy.
Parenting,
With
yeah.
yeah, exactly.
you got
With
the
the
two
kids,
of
the little
us
ones.
filling in.
Yes.
Okay. Let's start off with Schwab. I feel like this is a continuation of a story from last year. What does it have to do with assets under management?
So yes, and so if you look at the stock in particular this morning, SCHW is the ticker symbol on this. So right now it's down close to 3%, so on pace for its worst day since January 3rd, so the second trading day of the year there. But it did report declines in profit, new assets, and of course deposits. So it actually closed out what was one of the firm's most turbulent years in the 5-decade plus history that it has here. But it's really been trying to navigate this sort of difficult year of rate hikes. Obviously, we saw Schwab come under pressure, particularly last spring, in addition to some of those pressures that we did see with the regional banks there. But fourth quarter profit actually declined about 47%, so bigger interest payments on its clients' deposits, and unfortunately, debt dented those gains from a jump in its asset management fees. So you are seeing that stock pressured. And then also just year to date, that stock's down about 9%. It's also lost about a quarter of its value over the past 12 months.
Let's stick in the finance arena. What's going on with U.S. Bancorp today?
Yes, so USB is the ticker symbol on this stock. It's down about 1.5%, on pace for its worst day, actually just since yesterday. So it did report earnings that did beat analyst estimates. So it actually was benefiting from elevated interest rates, but the problem there, and anytime we talk about the banks, as you know, Molly, is the net interest income. So when you're looking at the difference between the income a bank is earning from its lending activities versus the interest it's paying to depositors, that's where it came up short. So it totaled about a little around $4 billion on a taxable equivalent basis. So it actually ended up missing, unfortunately, analyst forecasts of about 4.15 billion, came in about 4.14 billion. So it's down about around 4% from a year earlier, so that's why you're seeing that stock.
Okay, these are the regional banks we're talking about now?
Yes.
All right, so we're going to take a deeper dive in like 15, 20 minutes, so stick
there you
around
go.
for that one. You know, since the beginning of the year, I didn't try to, but I'm down like 10 pounds. And I didn't even go to Weight
But
Watchers.
you unfortunately had something else going on. You were ill.
He was unwell.
Unfortunately, it was not the
I just
Ozempic.
completely lost my appetite, which is like the first time in my life it's ever happened.
But yet, you know what? Shockingly, you were here eventually, and
I thought
co-hosting
she was
shows.
going to say, shockingly, you look great.
No, that too. But no, you were still pushing through, and I was, no, you look amazing, JT. That's not what.
Well, he's got his very chic scarf on today. And his,
Because I don't have a
the
relapse.
fat suit.
That's why it's so freezing in here.
It is quite chilly in this interactive broadcast.
All right, Weight Watchers.
I knew where you were segueing into that. So WW here, ticker symbol on this, down about 4%. And so worst day since yesterday, it actually declined 17% yesterday. So it's on pace for 5 consecutive days of losses. And of course, if we're talking
But you would think, like, with the new year and all the resolutions, Weight Watcher would, like, be a beneficiary.
It's gotta be Ozempic.
Exactly. So pressure from its GLP-1 drug. So it's similar to Ozempic. It's continuing to push the stock lower. So the catalyst, unfortunately, looking at, there was a short report that came out recently from Cedar Grove Capital Management. So when you do end up having, when it comes to short sellers coming in and putting out some of these reports, you do see volatility in stocks typically, and unfortunately this is it for Weight Watchers International, so that's why you are seeing that stock down. It actually came off the lows from where it was in pre-market and earlier this morning, but nonetheless still being pressured, especially over the past 5 trading sessions.
Well, so it goes over there. I mean, why would you go to do, what is the Weight Watchers plan? It's something with the points, right? And take a pill instead.
Right.
It's a trade-off.
Why bother with the points?
I guess so.
But yeah, over the past 5 trading sessions, it's lost around 30%. So
goodness,
stock not just today.
Call up Oprah. They're gonna need a new campaign or something.
And just ahead, we're gonna dissect this in great detail. But this airline merger got bust.
Yes. So another update, if we are, because I know we've talked a lot about what's happening with Spirit. So Save's the ticker symbol on this. It's down about 24% again today. So this did come after it actually lost 40% yesterday. So that would put it on pace for its worst 2-day stretch ever since it went public in 2011. So I pulled some of those numbers before I got in here. So those losses did come after a federal judge did block JetBlue's $3.8 billion acquisition of Spirit. So if you look over at JetBlue stock, JBLU is the ticker symbol on this, down about 7% worst day since January 9th.
But everyone's saying, everyone in the investor community, that is, that this is maybe not so bad a deal for JetBlue. You get to save about $4 billion. You don't have to be stuck with this carrier that's now kind of seems to be circling the drain and possibly headed toward a bankruptcy filing. Which that's Spirit might be.
Yeah, so that's why you're seeing its stock not as pressured as when you are seeing Spirit in particular. So if you look over the last 2 days, about close to 2% decline for JetBlue compared to what we obviously saw the pressure for Save. So when you are looking at Spirit, so unfortunately Spirit getting hammered more so than JetBlue.
Jess Benton, thanks so much, appreciate it. Well, the headline of the Bloomberg kind of says it all, doesn't it? JetBlue's $3.8 billion Spirit deal turns into a nightmare. Antitrust concerns collapsing the merger between the two. Jen Reeves, the Bloomberg Intelligence Senior Litigation Analyst, and George Ferguson covers the airlines for Bloomberg Intelligence. What a dynamic group.
We've got a real good roundtable here.
Let's start with you, Jen. What happened?
I think that it wasn't all that surprising, this outcome. People have been skeptical about this deal since day one, back in 2022 when they signed on. And really, it's because of JetBlue's plan to retrofit Spirit and turn those Spirit flights and routes into JetBlue routes. And obviously, just common sense tells you that that means the price is going to go up for these routes that Spirit used to fly, whether JetBlue competes with them on the route or not. And ultimately, that's what happened here. Even though the judge really accepted the large part of what JetBlue and Spirit argued in their defense, he still said, look, at the end of the day, there are still consumers that rely on this very low, unbundled fare that Spirit offers that are going to lose out on that option, and that's consumer harm, and that violates the antitrust laws.
So, George, let's break it down looking at each airline here, the pros and cons for JetBlue versus Spirit now that this deal has unraveled.
Well, so, I mean, I guess initially the pros for JetBlue are that they keeping Spirit out of the hands of Frontier, which has been a pretty large competitor, right? Maybe when they were all done, they accomplished that goal. JetBlue is going to spend almost $4 billion on a company that the market now says is worth $600 million, so that they could, ingest their entire fleet, retrofit it with their interiors, try to bring a consistent corporate culture to it, a kinder, gentler corporate culture to it, and then compete at the fifth largest level in the U.S. airline industry. It was a tall task. I think it would have been years and years of challenges here, and again, given current prices, seems like potentially a big overpayment. And right now, as we look at the U.S. airline industry, it looks to us like domestic fares are falling. We saw that at Delta 4Q results last Friday. So we might even have an airline industry right now that has more capacity than it needs, because that's how you would get fares to buoy, is if you pulled some capacity out of it. So to me, from a JetBlue perspective, it looks like a real good opportunity to walk away. For Spirit, look, they were the target in this whole thing. I think they brought some good competition to the U.S. market as an ultra low cost carrier. I think they still could, although frankly, they didn't even earn earnings in 3Q. They weren't positive, which is typically the best quarter for a U.S. airline. And so they're struggling because of that domestic market. I think now they got to find a way to right the ship, get everybody focused on competing with Frontier, competing with JetBlue, competing with these folks, and reinvigorate this airline. And that's going to be, I think, very difficult given what they just went through.
Jenry, the geniuses at JetBlue and Spirit, I don't understand how they did not anticipate that this was going to run into regulatory problems. I mean, why initiate this in the first place?
I think George said something really interesting there, because early on there was speculation that they understood that they might have a problem and might not get this cleared, but at the very least it prevented Spirit and Frontier from coming together. And a combined Spirit Frontier would have posed increased competition to an independent JetBlue. There's no doubt. But I do think that they thought maybe they had a chance to convince the judge that coming together would allow them to better compete against the legacy airlines, which frankly have about 80% share combined. We're talking about United and American, Southwest and Delta, and really don't have a lot of competition from all the other, low-cost carriers and ultra-low-cost carriers. And they thought maybe that argument would carry the day, that this would be a good thing and pro-competitive, and they might be able to convince the judge that these pro-competitive aspects outweighed the harm that might be caused to some set of consumers. And the judge said, yeah, you're right. You would impose a greater competitive pressure on these big airlines, but it's not enough. It's not enough to overcome the harm to the consumers that the deal will bring.
Do they have any recourse, or is this the end of the road?
Well, they could appeal. I think it would be tough based on the way the argument's written and based on the fact that it's really an assessment of the evidence and the facts. There'd be a really high standard for reversal. So I think it would be an uphill climb for the airlines if they did appeal, and they may also not have the time to do it. It's a little tight. I think an appeal could get done in 5 or 6 months. Right now, their end date is July 24th, so they might be able to squeak under that end date, but maybe not. It depends on the court schedule and whether they can get it expedited.
And George, is this really do or die for Spirit? I mean, how likely do you think a bankruptcy filing could be?
I don't think it's do or die. I think it's going to be very challenging. Right now, if you look at even consensus estimates on the Bloomberg terminal Spirit shows that most analysts don't think Spirit's going to make any money for the next multiple years, 2 to 3 years. Again, you lose a lot of inertia when you go into an environment where you think you're going to get bought out by somebody else, right? And when it doesn't happen, it's really hard, I think, to sort of muster the troops and get the enterprise going in the right direction. Spirit, Frontier, that level of airline in the U.S. already having difficulty recruiting pilots and employees because they're just not the marquee names of the Delta, Americans, Uniteds, and Southwests. That's going to be another challenge. So, I hate to speculate on whether someone's going to bankruptcy, but it's going to be trying days ahead for Spirit for sure.
So, George, I need an update on Alaska Air Boeing with the couple of minutes we have left.
Well, I think where we are right now is that Boeing and the FAA have worked together to come up with an inspection process to determine, whether other of these doors that have been capped are appropriately done. I think the FAA now has sort of expanded the scope a little bit. They want to get into Boeing's manufacturing processes and how stable they are, and I think they want to get into that a bit before they sign off on this procedure for inspection. So the sign off for inspection is taking a bit longer than we thought. That obviously hurts customers because it means airplanes are out of service. I think the FAA is smart to dig into the manufacturing process. Clearly something is broken down there, and I think they need to exercise their authority. They've already looked bad on the MAX, right, because of the crashes that we had in 2018, 2019. That was more. I think that was more challenging because that was a design flaw, which had to be sort of rooted through and adjusted. This is a manufacturing challenge, but it keeps sort of popping up sporadically. I think it's less intense of a change, but I think the FAA has already been, their reputation's been soiled a little bit already. They don't want to be back and have more problems with this airplane, so now they're going to dig into the manufacturing process as well.
Thanks, George. Appreciate it. George Ferguson covering the airlines for Bloomberg Intelligence, and Jen Rhee, our Bloomberg Intelligence senior litigation analyst. Again, JetBlue's $3.8 billion Spirit deal turning into a nightmare, getting nixed by a judge as well as regulators. Right now, let's get a reset of the markets. S&P 500, 26 points lower. That's down 0.5% right now. We're at 4739 in the index. The Dow, 38 points lower. NASDAQ 100, 165 points lower. That's down just about 1 full percent. You're listening and watching the Bloomberg. That brings us to 11:18 on Wall Street. It's an update on company news, and for that, here's Steve Rappaport.
John, U.S. retail sales rose at the strongest pace in 3 months in December. The value of retail purchases, unadjusted for inflation, increased 0.6% in a broad-based advance. We get more with Dana Telsey of the Telsey Advisory Group.
We had Christmas that was later this year, so people had more time in order to procrastinate. And so really everything was driven around the event days, whether it was the Black Friday weekend or then that week leading up to Christmas. It's what made the difference. It's not that holiday sales were so great, but goods sold at full price, inventory levels were lean, and sales came in line with expectations for the most part.
That's Dana Telsey of the Telsey Advisory Group. Diamond Sports calls a play to stay afloat. Bloomberg's Dan Schwartzman reports.
Local sports broadcaster Diamond Sports Group has been saved from liquidation after reaching a restructuring deal with most of its debt holders and Amazon. The deal, which is subject to bankruptcy court approval, calls for Diamond to merge from Chapter 11 proceedings with Amazon's Prime Video platform as its main streaming partner. Key creditors have agreed to swap their holdings for stock in Diamond, will also invest new money while Amazon agrees to take a minority stake in the company. Diamond Sports Group, a unit of Sinclair, once held the broadcast rights to around 40 teams in the NBA, NHL, and Major League Baseball. The company was purchased from Disney for $9.6 billion back in 2019. Revenue declined as people canceled their cable TV service. Dan Schwartzman, Bloomberg Radio. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up to 11:22 on Wall Street, I'm Nathan Hager. We check the markets all day long on Bloomberg. Right now, the S&P 500 is down 24 points, or 0.5%. The Dow Jones Industrial Average is down 28 points. That's a decline of almost 1/10%. NASDAQ 100 down 149 points, a drop of 0.9%. 10-year Treasury yield up 4 basis points to 4.1%. The 2-year yield 4.35. That's a gain of 13 basis points. All this after stronger than expected December retail sales data pulled back bets even further that the Fed could cut rates as aggressively as the market has priced. Fed swaps now put 60% odds on a March rate cut. That's down from 80% on Friday. Adding to the risk-off mood, NYMEX crude down a third of 1% now at $72.18 per barrel. COMEX gold is down 0.9%. Down $17.60 to $2,012.50 per ounce. The euro weaker against the dollar at 1.0858. The yen is at 148.45. One of the biggest downside movers right now, Tesla. Those shares are down 3.1%. Investors Business Daily is reporting the EV maker is cutting Model Y prices in several European markets. That's after it halted production of the Model Y at the Berlin area Gigafactory as of January 29th. Also watching shares of Mattel. They are down 2.2%. Morgan Stanley downgraded the toy maker to equal weight, citing a tougher outlook for this year and limited growth drivers for the toy market. It's Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
Nathan Hager in Washington. Thanks very much. Appreciate it. I am John Tucker and Molly Smith. We're in for Paul and Matt. God knows where they are. Anyway, we had regional bank earnings getting into full swing. Two of the better-known regionals reporting some big profit declines in the fourth quarter. We had Citizens and also U.S. Bank. Here to break it down for us and the implications and all this stuff. Bloomberg Intelligence Senior Regional Bank Analyst Herman Chan joins us to break things down. The last time we were in the studio, we were talking about the regional bank crisis.
Right.
Is this like part of that, or
the crisis has largely gone away at this point? It's more paying for the cleanup of the crisis is what's happening in the fourth quarter, where the banks collectively that have survived are paying the FDIC for a special assessment charge. And so that's hitting all the banks and driving the profitability declines for fourth quarter. But if you just look at the underlying performance across the banks, it's still a bit weaker, but as expected, given where we are in the higher rate environment, and there's not a lot of lending that's happening. But fourth quarter or full year guidance for 2024 looks like it's going to be a bit better in the back half of the year. So a bit more sluggishness in the first half, but improvement in the back half, hopefully when rates decline.
Okay, so better times ahead potentially. That would be nice. Let's break it down a little bit further. We had some earnings come out today from Citizens Financial and U.S. Bancorp. Tell us a little bit about what happened there.
Yeah, sure. So I think the overall theme for both of the banks is that there's not a lot of loan growth. You're seeing commercial customers still being a bit shy in lending just because of the higher rate environment is creating some sticker shock. The areas of growth that are happening right now is, and you're seeing that a bit more on U.S. Bank side, is that cards and credit cards that the banks that reported last week, like JP Morgan and Bank of America, also highlighted growth in credit cards. It's one of the few bright spots across the lending landscape for banks in general. Net interest margins are starting to decline, but a bit less as the Federal Reserve pauses and potentially stops rate hikes, and that's positive as you can remember, banks have continued to face headwinds on higher deposit costs. So that just means that there's been a bit more sluggishness in the fourth quarter, and that'll continue over the next couple quarters as banks sort of muddle through the higher rate environment until the Fed starts cutting.
When you're saying credit cards are a positive for the banks, what does that mean though for consumers? What's actually happening?
So what's happening is the consumers are using their cards a bit more, and so they're carrying more balances.
Keep spending.
Right, spend. That's happening.
But if they're spending on the credit cards and maybe
Yeah, that's right. So you're seeing higher
Actually sounded
losses.
like I knew what I was talking
That was very
That
intelligent.
was
Keep
very
it going.
impressive, John. You're seeing higher loan losses and higher defaults on cards. And U.S. Bank in particular had talked about this on their earnings call a little bit earlier this morning and saying that the charge-offs on their card portfolio is now basically near pre-pandemic levels. So you can think of last year before, stimulus and just higher wages helped suppress losses. But now we're at the point where the losses are back to where they were a few years ago before the pandemic.
Is anybody in danger of becoming toast?
At this point, there's not a lot of concern or angst about the next shoe to drop in terms of another bank following SVB, Signature, First Republic. You're seeing some M&A activity from some of the more challenged banks like Home Street the other day mentioned that they're partnering with another institution. PacWest, that bank was another bank that was challenged during the height of the banking turmoil in March and April of last year, and they found a partner. So it seems like the decks have sort of cleared, and we're now at a baseline where any of the challenged banks have rectified their issues via M&A, and everybody else is just moving on as a independent entity.
Doesn't sound like that option is available for the airlines, though. Can't get your way out of your troubles with M&A. But as you mentioned, some consolidation in the regional banks at least. And we've got a couple more earnings tomorrow out of M&T and Northern Trust. What are you looking for there?
Yeah, so M&T is another bank that we cover. It's a bank that has benefited from M&A, as you mentioned. They bought a bank up here in the Northeast in Connecticut. A lot of the same stories, same sort of themes across the regionals where lending's just really challenged. M&T in particular has more commercial real estate orientation than others, so you could see some focus on credit quality, potential losses in their office commercial real estate portfolio, and then just expectations on when their revenues start to bottom and then start to inflect higher potentially later in 2024.
How onerous were these FDIC fees and all that stuff?
Yeah, so it ranges by size. So the FDIC sort of charged each bank a certain percentage of their deposits to.
But it's like in Congress, weren't like the people, the Congress people who represent those small regional banks, weren't they up in arms about these onerous?
That's right.
That's my word.
So
FDIC charges.
The onerous FDIC charges are largely relegated to larger banks. So the smaller community banks don't. So this is more of the purview of the JP Morgans and the larger regional banks.
And how about those community banks? Where do they fit into all this as well?
Yeah, so that's a challenge, right? So the smaller the bank, the more commercial real estate exposure you have. So we're in an environment where that loan type isn't really growing because of higher rates, and you don't want to add more potentially riskier loans to your balance sheet at this point in the rates and credit cycle. So it's been a bit of a challenge. And then on the funding side, you've seen the biggest banks, the largest banks like JP Morgan and B of A sort of gather deposits and sop up all the deposits as the industry faced worries earlier in the year. So if you're at a smaller bank, you probably are saying, I don't want to take the risk that my bank will end up like SVB. So I'm going to go to a too big to fail institution like JP Morgan, and I can sleep well at night knowing that institution will be around. So the smaller the bank, the more questions I think your customers start to ask, and that's continuing. And it sort of dovetails into the question of, is there going to be consolidation down the road of the 4,000 or 5,000 institutions in the U.S.? And I think that's just going to be the case where you see more consolidations. Scale matters. Increasing your tech investments matters as you compete with the fintechs and the JP Morgans of the world. So all that sort of means that you're going to have to grow inorganically and organically in order to compete with tough competitors.
We still look at what do we look at trying to spot another Silicon Valley bank? Is it equity, capital, or what? We've got about a minute left.
Sure. So I would say that those three banks that failed earlier last year really had different business models. They had very concentrated deposits into uninsured, focus on uninsured deposits, growing their balance sheet much faster than their peers. So I think what you've seen is that those banks, higher growth banks, it's an oxymoron at this point. You have to be slow and steady, and that really limits the race in regional banks.
The regulators more equipped to spot the next disaster because they didn't spot SVB, right?
They're more equipped to spot the previous disaster. It still it doesn't seem like they're nimble enough to really think ahead at this point, but we'll see.
Rates are coming down now, though, so everything's fine.
Oh, you're such an optimist. Bloomberg Intelligence Senior Regional Banks Analyst Herman Kemp. Thank you so much for stopping by. Good to see you. Happy New Year. Right now, market reset. S&P 500, 24 points lower. That's down 0.5%. 47.41 on the index. Dow is 12 points lower, and the Nasdaq 100 right now 143 points lower. It's down about 0.9%. You are listening and watching Bloomberg Markets. And let's get an update of world and national news. For that, we head to Washington, the Bloomberg 99.1 newsroom, and here's Amy Morris.
All right, thank you, John. Secretary of State Antony Blinken is stranded in Davos for a while because his plane broke down. The Boeing 737 was deemed unsafe to fly because of an oxygen leak. A smaller shuttle jet will be used to bring him home, and his staff and members of the press pool, they got to fly commercially. The governor of Georgia says Trump's victory in Iowa for the Republican primaries was a strong win, but warns not to repeat the 2020 election. Brian Kemp, governor of Georgia, tells Bloomberg Surveillance at the World Economic Forum in Davos, GOP just needs to keep moving forward.
We need to be forward-thinking. We need to tell people, what we stand for, what we're going to do. We don't need to be looking in the rearview mirror and relitigating the 2020 election, and really lay out for the American people what it is we're going to do. That's what I've been urging the candidates to do, and that would go for former President Trump as well.
Georgia Governor Brian Kemp on Bloomberg Surveillance in Davos. Pakistan has recalled its ambassador to Tehran a day after Iran launched airstrikes on Pakistan. Iran claimed it targeted bases for a militant Sunni separatist group. Islamabad called it a blatant violation of its airspace. Iran and Pakistan have long been suspicious of each other over militant attacks. Since 1991, overall cancer deaths have fallen by a third. The latest American Cancer Society statistics report shows the latest numbers in the U.S. and estimates future cases or outcomes based on those statistics. Science officer Dr. William Dayhut says rising colon cancer rates have actually shifted mortality patterns in adults younger than 50 years old. And colorectal cancer has become the #1 cause of death among men under 50 years old. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
1140 on Wall Street. I'm Nathan Hager. Right now, the S&P 500 is down 22 points, or about 0.5%. The Nasdaq 100 is down 0.8%, or 127 points. The Dow Jones Industrial Average is swinging between gains and losses. Right now, it's a little change to the downside. One of the biggest components of the Dow, Boeing, is higher by 1.4%. Operators of the ground at 737 MAX 9 have finished inspections on 40 planes. That is a key step to getting that model back in the air. But the broader market is focused on the data and what it means for the path for the Fed. Steve Cheveron, head of multi-asset strategy at Federated Hermes, says the market's gotten too aggressive on rate cut bets, and it's not just because of the data.
This is a presidential election year, and historically the central bank does not like to move between July and November of an election year. So it really only leaves in our mind May, June, maybe December for cuts. And that's fine, and I think that's positive for the economy, but the market just got ahead of itself in the fourth quarter.
And after we got retail sales figures that came in stronger than expected, the yields on treasuries are moving higher. The 10-year's at 4.09%, a gain of 3 basis points. The 2-year at 4.34, that's 12 basis points higher. NYMEX crude is down 0.4% at $72.07 per barrel. COMEX gold is down 0.9% at $2,012.40 per ounce. The euro 1.0859 against the dollar. British pound 1.2670, and the yen is at 148.33. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
All right, Nate, thanks a lot. Appreciate it. Can I say jaw-dropping data this morning on retail sales?
Yeah, why not?
I mean, it was just like way off expectations.
The consumer, loves to surprise. Isn't that no recession? That's been the story, John.
I think, as I put it, the consumer's not falling.
Yeah, that was your crystal ball this morning. You nailed it. And I said we had to hold tight just to make sure.
U.S. retail sales, as Molly wrote in the Bloomberg story that you can read on Top Go, rising at the strongest pace in 3 months in December. Treasury yields popped on the news. So how does this all gel with the current investment climate? Let's put that to our next guest. Gitu Sharma, founder and investment manager at Alpha's Future, joining us from, I'm going to guess, the coldest place on the planet Earth right now, Minneapolis. How bad is it?
Hi there. Yeah, it's pretty cold here. I think at the wind chills it's about -20.
Oh,
worse than Antarctica.
Molly's just back from Antarctica. She says it's colder here in New York than it was in Antarctica.
I'm serious. Antarctica, it's summer right now. It's beautiful down there.
All right. Well, anyway, every time I count out the American consumer, I'm dead wrong. What do you make of the data that we got today, and more importantly, what does it imply for Fed policy and just markets overall?
Yeah, I think like you were talking earlier, the consumer remains very strong and is consuming, is willing to spend, and we're not seeing any kind of slowdown in demand right now. Besides the strong retail sales data, we also read about positive home builder sentiment, the mortgage demand going up as well. And last week we saw unemployment rate at about 2.7%, which is one of the lowest for 50-60 years. So we're really not seeing any kind of sharp, significant slowdown that would imply that a recession is coming. In fact, we've seen consumer and an economy that continues to be very strong, very resilient in the face of high interest rates, and inflation has come down, so that of course is giving a positive boost to the consumer as well.
Of course, and you had mentioned in your notes just before the show, Gitu, that the outlook for disinflation remains uncertain. And obviously, we did see that CPI report. I believe that was last week. The time is flying, but it was, as you said, it's a bit bumpy. So, how are you parsing through these different reports and really, sticking to your guns that inflation is on a firm downward trajectory?
I think it's at this point of time, it's really hard to say how far inflation will go down further. We've seen some really sharp declines in 2023, and that has brought inflation down from 9%, from a high of 9% in June 2022 to about 2 to 3% right now. trending around 4% right now, and that can keep inflation at the current levels of 2 to 3%, which is still above Fed's target. And as long as the economy is staying strong and inflation is stable at this higher number, I don't see how the Fed would want to cut so rapidly as the market is expecting.
S&P 500, as you mentioned, it ain't cheap at this point. But I look a little broader, small, mid-caps. Not only do they seem to be massively under-owned by investors at this point and by institutions, they're about 13 to 14 times earnings. You can own these. Is that an alternative?
I think it's a very difficult situation in terms of investing right now, because what we've seen is a large part of last year's rally was driven by tech and AI and secular trends around AI. And the rally was not only in the large cap tech, but also in the small and mid cap tech. So there is this segment of the market which has high growth, strong cash flows, profitable, and continues to do well and has expensive valuations. On the other hand, you have everything else in the economy, whether it's industrials or discretionary or even the defensive sectors that have not participated in the rally, have underperformed last year, and are at, especially the industrials and the financials, energy sectors, they remain exposed to recession risk. So they're more cyclical and have downside risk if we do head into a recession. So the question is, do you continue to invest in tech, which has this positive profitability, demand, growth trend, but is expensive, or do you, how much of your portfolio do you weigh towards some of these value sectors which have not performed so far?
Is there like a magnificent seven in like small and mid caps?
I don't think so.
All right.
They're all
asking.
magnificent across the board there. Gitu, so if we're talking about the possibility of recession, I feel like we've got to talk about these Fed wagers here and looking at investors that are pricing in as many as 6 rate cuts next year. Obviously, the Fed's dot plot indicating just 3. Where do you stand in that debate? Because that's a pretty big discrepancy between 3 and 6. And also, why do investors just not believe the Fed time and time again?
So I think the market tends to swing from one end to the other. And a lot of the market projections as well as the Fed projections have not come true for a while. The market expected recession in 23. That didn't come through. We were expecting one more rate hike towards the end of the year. That didn't come through. So there's been, data has been shifting, and it's really, hard to predict what's going to happen. But clearly, this difference between what the Fed is anticipating, which is a soft landing scenario, stable growth, inflation going to 2% by 2025. The Fed is looking at normalizing interest rates to about 4.5% this year, whereas the market is forecasting a more dire situation that ultimately leads to a recession, and the Fed has to cut a lot more. I think this remains a big debate in the market right now, and every day we see moves that are reflecting a shift from one side of this debate to the other, not in the direction.
We're going to have to leave it there. Gitu Sharma, founder and investment manager at Alpha's Future. Thanks for being with us today. I really appreciate it. From, what'd you say, 20 below wind chill, Minneapolis?
Will not be signing me up for that. No, thank you.
I thought you liked the cold.
We'll stay here in tropical New York.
Miss Antarctica. You're listening to Bloomberg Markets. And that brings us to 11:50 on Wall Street. Let's get a look at company news now with Steve Rappaport. And Steve.
John, shares of Spirit Airlines continue to skid after a multi-billion-dollar partnership encountered turbulence. Bloomberg's Gina Cervetti reports.
JetBlue and Spirit Airlines say they are evaluating their next steps after a federal judge blocked their merger, siding with the federal government, saying JetBlue's takeover would stifle competition and raise airfares. The companies had argued that combining was the only way to compete with the dominant airlines.
Thanks, Gina. Apple is opening its App Store to allow outside payment options. More on that from Bloomberg's Jeff Bellinger.
Steve, Apple made the move after the Supreme Court rejected the tech giant's appeal in an antitrust lawsuit challenging its business practices. Apple will allow all third-party apps sold in the U.S. to include an outside link to a developer website to process payments for in-app purchases. That will bypass Apple's own payment system, which charges developers a commission of either 15% or 30%. Apple will warn customers when they press a link to conduct purchases outside the App Store before letting them proceed. Steve?
Jeff, in some good news for Apple, the company topped its main rival in smartphone sales. The iPhone dethroned Samsung devices to become the best-selling smartphone series globally last year. Do you have banking experience? Well, while some big banks have been cutting jobs, JP Morgan Chase says it's hiring. President Jamie Dimon told Bloomberg TV JP Morgan sees opportunities in retail, the payments business, and wealth management. Citigroup, Morgan Stanley, and Goldman Sachs, on the other hand, have cut staff. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
And I'm John Tucker, along with Molly Smith. We are in for Paul and Matt. This is Bloomberg Markets, and this brings us to 11:55 on Wall Street. Let's get an update. News from around the world, and let's head to the Bloomberg 99.1 newsroom in Washington. And Amy Morris, hi Amy.
Hi, John. It's on to New Hampshire for the Republican presidential candidates after Donald Trump's landslide in Iowa, and Nikki Haley's third place finish Bloomberg governance Jonathan Tamari looks at the state of play ahead of Tuesday's primary.
For Haley, it really all comes down to New Hampshire. This is where she's made her big play. Again, with coming close to the president, she's got to really do well there and hope that sparks some more momentum, because in the states that follow New Hampshire, they look like they really favor Trump as well. So if she does not do well, it also doesn't look like she has much of a path. If there's going to be any real contest, it depends on Haley doing well in New Hampshire and then consolidating support after that.
And now comes where the super PAC that supports Ron DeSantis in the presidential race began carrying out layoffs today. Buckingham Palace says King Charles III will undergo a corrective procedure for an enlarged prostate. Also, Kensington Palace says the Princess of Wales, Princess Kate, has been hospitalized after undergoing abdominal surgery. She'll remain at the London clinic for up to 2 weeks. The Pacific Northwest is hunkering down after predictions of ice and freezing rain. Bloomberg meteorologist Rob Carolyn says, try to hang in there for the next couple of days.
Arctic cold continues to stretch from the northern plain states on into the southern plains and across the Gulf Coast, the Tennessee River Valley, and into the southeastern United States. We've had temperatures as cold as 5 and below zero for parts of Tennessee this morning. The good news is we'll see temperatures moderate over the next 24 hours. Another area of very cold weather will drop south through the plains in the central United States as we head through the next 7 days.
Until then, much of the United States is still being bitter weather. Some places are putting electricity supplies at risk. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Amy Morris in Washington. Thanks, Amy. Appreciate it. You see this story in the Bloomberg? And I'm going to say this is the last thing that Boeing needs in terms of bad publicity.
Brutal. Blinken, that would be U.S. Secretary of State Antony Blinken, he was stranded after the Boeing 737 breaks down on the Davos trip. So he's now at the World Economic Forum, was flying from Davos to Zurich, and Blinken and his party were informed that the aircraft had been deemed unsafe to fly. An oxygen leak detected previously could not be remedied. So they had to get on a smaller plane to go home, and get this, his aides and members of the press had to travel commercial to Washington.
Oh, man. Well, I guess if you're going to get stranded somewhere, Switzerland is not the worst place I could think of.
Yeah, I know. A lot of planes going in and out of there, so they should be okay. And it looks like Boeing's okay, too, on the day. The stock is up a little bit. Obviously, it's been a rough couple of weeks for Boeing, but at least today, not too much damage.
You know, I go by, on my commute, by Newark International Airport, or Liberty, whatever they call it now, and there are a bunch of Boeing jets lined up by the turnpike, like 5 or 6 of them.
Really? Just parked.
I'm wondering, are those are probably the 737 MAX 9s that are still grounded, right?
I was wondering that too, because I actually just flew into Newark yesterday, and I don't think I was on I didn't actually look up what jet I was on. What's that?
The peripatetic Molly Smith.
Never here. But yeah, I mean, it's I did not have my reporting cap on at the time to look into it further.
You never take off your reporting cap, Molly Smith.
Lesson number 1 from Sean Tucker.
So the jet that Blinken that's an older variant of the 737.
Yeah, that's
the Air Force uses it as, I mean, if you're an Air Force person, that's what everybody knows is the C-40 in the Air Force. So anyway.
Well, for us peasants, yes, we would not know that, but to the Air Force world.
So another black eye, I would say, for Boeing at this point. Anyway, the market reset, S&P 500 right now, 27 points lower. That's down 0.6%, 47.38. The 2-year yield, that's what I'm watching right now. That's higher, up 14 basis points after the data today, 436 on the 2-year. You're watching and listening to Bloomberg Markets. I'm John Tucker and Molly Smith.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Shop till you drop. Retail sales rising the most in 3 months. That's sending Treasury yields higher, stocks lower, with the idea the Fed rate cuts will be later and maybe not as deep. This is Bloomberg Markets. Paul Sweeney and Matt Miller out. I'm John Tucker, along with Molly Smith.
Yes, good afternoon. I'm here again, saddling
All
up.
fresh and ready to go from after her trip to Mexico and Antarctica.
Very fresh, that's right. And we've got another great hour coming up here. I know, you've been in Bayonne, holding down the fort. Thank you, John, for your service.
You're welcome. Let's get to midday markets reset now with Bloomberg's Charlie Tella. Hi, Charlie.
Thank you very much. Well, hello there, and here's what's going on midday. A lot of red on the screen. We got more on the markets coming up in a moment, but the S&P right now down 27, drop there of 0.6%. Dow Industrials down 40, a decline right now of 0.1%. And the NASDAQ Composite Index is down 130, a drop now of 0.9%. 10-year yield 4.09%, with a 2-year that's yielding 4.36%. Gold lower again today, down another $22 the ounce to $2,006, a drop there of 1.1%, and a further retreat for West Texas. Intermediate crude back below $72 a barrel, 71.68 on WTI, a drop there of 1%. Bitcoin moving lower today. Bitcoin right now down by 2.9%, 42,269 on Bitcoin. Traders are trimming bets for Federal Reserve rate cuts. Liz Ann Saunders is Chief Investment Strategist at Charles Schwab.
So I think the market may slowly be adjusting to what, frankly, most Fed speakers have been the message they've been trying to impart is, whoa, all else equal, given what we know now, it is probably not a backdrop supportive of not just starting as soon as March, but the Fed providing 6 rate cuts this year. I think that disconnect still exists. It's just not as wide as it was even a week ago.
And hear more of the conversation with Liz Ann Saunders on the Surveillance podcast. You can download it wherever you get your podcast. Again, 10-year yield right now, 4.09%. Earnings this morning from a couple of banks. U.S. Bancorp, its shares lower now by 1.7%. Also reporting earnings this morning, we heard from Citizens Financial, based out of Providence, Rhode Island. Citizens shares up now by 1%. Recapping, stocks lower, S&P down 28, drop there of 0.6%. I'm Charlie Tellett, and that is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. I'm John Tucker, along with Molly Smith. This is Bloomberg Markets, and time now to take a closer look. Let's look under the hood at the markets right now. Stocks on the move, some of the companies that will launch. More of Melinda joins us from Bloomberg News. Start off with Schwab, and I guess it's a story about assets under management.
Right. I mean, we talked about this earlier this morning. I'm sure you guys have been talking about it throughout the day, but Schwab is still in focus this afternoon. It's down as much as 7.2% for its biggest plunge in 10 months. The firm reported a decline in net new assets for the fourth quarter, and the CEO and the company have pretty much marked last year as one of the most challenging years. He specifically flagged it as the most challenging time for him since 2000.
Long time ago, yeah, he was flagging then since the internet bubble burst. So, not a great day over at Schwab. Let's stick in the financial space a little bit and shift over to PayPal. Interesting interview that the CEO had with CNBC this morning.
Definitely. So PayPal was earlier down as much as 3.4% for its lowest intraday level since November. Its CEO was speaking on CNBC and said that PayPal has completed too many acquisitions over the past few years and will now prioritize profitable growth, like its Venmo business. It says the company will be moving away from unprofitable businesses, and shares of PayPal have plunged almost 30% over the past year as earnings faltered and the company lowered its full-year guidance for adjusted operating margin.
Okay, let's move on to our next stock. I forgot it was called Maple Bear. Hey, remember the show Starsky and Hutch? The character who was like the pimp. He was Huggy Bear, so I confuse
Not
Huggy
Pooh Bear?
Bear and Maple. What is Maple Bear?
I mean, Molly and I were just talking about this. Did not know that that's what it was called. So news to us both. Instacart shares are climbing as much as 7.6% for their best day in nearly 2 months, after an analyst at Wolf Research said that Instacart could be an attractive takeover target for Uber. The analyst upgraded Instacart to outperform from peer perform with a $35 price target on the prospect of a potential deal. Now, while all of this is maybe like, some speculation, shares are really popping this morning or this afternoon after that thought.
Okay, so what are shares of Uber on the other side of this?
Yeah, I mean, on the other side, Uber today has been down as much as 3.1%. So, not seeing the same lift that we were seeing with Instacart.
I gotta say, antitrust. Are we not looking at this? I don't know. I feel like this is the only thing I can think about.
But these aren't
people bring up
airlines.
So topical.
Yes, but this is, I'm just gotta say, I mean, it seems like that is, the real theme of the Biden administration is just striking down a lot of M&A and antitrust grounds. So I'm not really sure why this keeps coming up. A lot of these deals just are not going through.
And the analyst, mentions DoorDash and Amazon as some of the rising competition that Instacart has had to deal with as Instacart has been slumping in recent months. So I think investors may think that this is a little bit more interesting as to why these shares are popping today. But as you mentioned, lots of things to be thinking about when you think about antitrust and M&A.
A couple of curveballs, I guess. We saw those figures on mortgages coming down, so I guess more transactions coming through. Did you look at home builders? What, if anything's happening on that front?
Yes, so that's a space that I cover very closely as I look at real estate.
That's right.
Ding, ding, ding.
Yes, my space. But we did talk about earlier how MBA mortgage applications climbed to an almost 6-month high last week as buyers move off of the sidelines. Molly wrote that one up. But Redfin also said that Gen Z's home ownership rate has stagnated in 2023. But millennials and Gen X saw gains, which, as you can expect, was pretty expected. But sad day for Gen Zers like myself.
That's why John's giving me a face right
What's
now.
the cutoff for Gen Z?
What are you guys, 25?
15?
I don't know. I'll have to get back
I
to you
think
later
I
on
am
that
on
one.
the side of a younger millennial, and I am newly 30.
Yeah, rub it in, why don't you? Nora
We'll say
Belinda,
that.
thanks so much for stopping by. Don't come back. Too young. Anyway, okay. I swear this actually just happened a few minutes ago. This is an email I got. Hi, Jay Tucker. You have won an Club Car golf cart. Congratulations. Your name came up for a get brand new Club Car golf cart from Lowe's. I didn't know Lowe's sold these things. Hurry up, your reward is ready. Claim reward. Should I click on this?
This sounds like fishing to me.
Okay. What's the cybersecurity?
Fishing with a PH, that is.
Okay. What's the cybersecurity outlook? Let's see. Wendy Whitmore is head of Unit 42 at Palo Alto Networks. Our next guest in studio with us. Thanks for stopping. Why would you leave Palo Alto to come to New York? It's like 20 below here.
It is cold here. There's no doubt about that.
Annie, tell us what is Unit? Do I have that right? Unit 42.
Unit 42 is really Palo Alto Networks Special Forces on the ground, if you will. So we consult, we solve our clients' crises, so incident response and breach investigations, threat intelligence, and threat hunting throughout the world.
And tell us a little bit about your clients. Who are they? What kind of work do they do?
Our clients really do a bit of everything, right? They are global 2,000 companies, they're smaller organizations, of governments throughout the world. We partner with a tremendous amount of intelligence organizations to share information throughout the world as well related to cyber threats and attacks.
Okay, what's the landscape right now in terms of cyber security? I mean, it's just like, I also get at least once a month, it seems now, a letter from whatever organization. Last month it was from Robert Wood Johnson University Hospital System saying they had a breach of their security, their computer systems, and some data, patient data, was leaked out. And here's a consolation prize. We're going to give you a year free of cyber security threat detection,
Credit monitoring,
or
right?
whatever it is,
Yeah.
credit monitoring. What's the landscape right now? Things seem to have gotten a lot worse.
The landscape is a bit chaotic, especially going into 2024, where we're going to have over 60 major elections throughout the world happening in this year alone, right? This will be the largest voting that's ever occurred. So I think an easy way to remember it is the 3 S's: speed, scale, and sophistication. We're seeing attacks happen faster than they've happened before. So when an attacker gets in an environment, they are stealing data within a matter of hours in some cases. From a scale perspective, you mentioned, maybe on a weekly basis that you're getting a letter, right, about another breach that's occurred. The scale, attackers for the first time in history, they're no longer doing only spear phishing, which is sending an email to an employee, right, and click on a link and they get infected that way. They're actually exploiting vulnerabilities at scale. So within hours, there could be hundreds of thousands of systems affected by a 3CS, Microsoft Exchange, for example. And then sophistication. It's long been certainly that nation-state actors are highly sophisticated, but now we're looking at cyber criminals who have a deeper understanding of business-to-business interactions and processes than we've ever seen before, and they're using that to their advantage.
So a few things.
Scary.
I'm scared. A few things you just mentioned there that definitely made me scared. You're mentioning cybersecurity, elections, and nation states. Of course, it makes me think 2016. We are heading toward another election here in the U.S. Very likely could have Trump on the ballot again. I don't know. Do we start thinking again about potential Russian interference in the U.S. election? I mean, where is your mind at right now in terms of threats with this election coming up?
I think that's a great question, but I think the reality is we have to be thinking about nation-state interference from countries throughout the world, right? We have now, with the onset and advent of generative AI, we have the ability to speed up written and verbal communications and make them sound more polished and genuine than we've ever seen before. So I would imagine from a disinformation campaign, we're going to see more of those emanating from throughout the world, and we really need to be, concerned about where information is coming from.
From a business perspective, and particularly one of the areas I cover, small businesses, and they are especially vulnerable because they just don't have the resources, I would imagine, to combat this on a regular basis. They're liable when a client's information is stolen, right? I mean, from a legal perspective, they have to keep that in mind.
Certainly, cybersecurity is really a team sport at this point, and you hit on a key factor of that, which is small businesses are not only responsible for their own information, but for those of their clients, and they may have a chain where they're part of a big supply chain for a large organization that does have no resources. So that is a huge challenge for executives throughout the world today, is to make sure that not only they're securing their own communications, but their clients, their consumers, and everyone they're doing business with.
Yeah, this was actually even like a really big topic heading into Davos this week, that the survey that some of these diplomats were conducted on for heading into the World Economic Forum, that they ranked misinformation and disinformation as the top risk out of 10 for the short term and the long term. So I thought the short term risk being being this misinformation. So that is really interesting. I mean, how does that then affect like the work that you do? Do you feel like this is even more like under a microscope and being scrutinized right now?
Well, I think the challenge with disinformation, for example, is it's not like a traditional cyber attack where you're necessarily stealing data from an organization and there's some piece of evidence to prove, right? It really relies on the reader, the viewer, the consumer of that information to be discerning and to understand and do their fact checking to really, get to the degree of, is this information legitimate or not? To the degree that it has impact on a business and the economy, I think that's a true factor. So 2024, we're likely to see more of that than we've seen before.
So with computing capacity, growing exponentially, et cetera, so forth, I would imagine it's not a question of when, but not a question of if, but when you're going to suffer a cyber attack, a devastating cyber attack. How do you protect yourself?
Yeah, no doubt. Organizations are aware this is happening at a faster pace, right, than we've ever seen before. So I think the keys there are really being able to understand what visibility into your environment, so understanding what are legitimate communications and interactions, what are not, and then what's something that everyone can do is practice in advance, right? Practice these plans, make sure you know how to get a hold of your employees and your team members, and in the event that you don't have access to your primary email and other types of communications, that you can really respond quickly. On a personal note, I cannot stress enough, do not reuse the same passwords for every single account, for every application.
Oops.
And for every application you can, make sure you have multi-factor authentication enabled so that you make yourself less of a target.
Don't click those emails, John. Stay alert.
Wendy, do you have just anecdotally, give us some horror stories that you've dealt with?
Well, so for an example, just last week, we're working for an incident response, meaning a breach investigation for a healthcare organization. And in this case, it's a ransomware actor. Not only did they reach out to try to extort the healthcare organization, they're reaching out individually to patients. And in this case, it's cancer patients. And they're saying, hey, for $3, you can preview the information that we've stolen about you. And for $50, you can pay us to make sure that we don't expose this further on the internet. This is horrific behavior. We're likely to see more of this as these ransomware actors continue to monetize their attacks.
Are they ever caught, the ransomware actors? Or are they in, Russia or some far-off place where you're never going to, you just can't reach them?
Well, the great news, I think, is there's a lot more information now. So multiple governments throughout the world are collaborating on these attacks. We have law enforcement actually going after disrupting these ransomware actors, their infrastructure, so the tools that they're using to host and wage these attacks. And then certainly we are moving to the point where we're now disrupting from an actual arrest standpoint too. So good news, but still slow going in that aspect.
So one more here for you, Wendy. We had some news out of JP Morgan this morning. They were saying that they've seen an increase in hackers that are trying to infiltrate their systems. And JP Morgan spends about $15 billion a year on technology as part of its attempts to bolster its cyber defenses. Obviously, we're not all JP Morgan, but this could get very expensive.
Oh, no doubt. I mean, this has a true economic impact, right? But I think the good news there and the silver lining is we're seeing so many more organizations really effectively prepare to detect these attacks. So in JP Morgan's case, they're detecting them, they're preventing them, they're gathering data that they're sharing with the community so that more others can also protect and defend themselves as well. So I think there's a good story there as well.
Okay, I'm changing my password from JBT 1234.
It's not password 123?
Oh, no, that was my old one.
Oh, okay.
Wendy, thanks so much. Wendy Whitmore is Senior Vice President, Head of Unit 42 at Palo Alto Networks in the studio. So she gets a gold start today. Right now, the S&P 500, 30 points lower. That's down 0.6%, 4735 in the index. The Dow Jones Industrial Average, 70 points lower. That's down 0.2% right now, 37,291. And the Nasdaq 100 is 148 points lower. That is down 0.9%. You are listening and watching Bloomberg Markets. I'm John Tucker with Molly Smith. And that brings us to 12:18. Let's get an update on the company news. And with that, here's Steve Rappaport.
John, operators of Boeing 737 MAX 9 have completed inspections on an initial batch of 40 planes. It's a key step to eventually end the grounding of the aircraft. Bloomberg's Karen Moscow reports.
The FAA will now review the findings from those 40 checks to determine whether the Boeing-drafted procedures are appropriate to return the fleet of 171 parked MAX 9s to service. The agency ordered the grounding after a MAX 9 operated by Alaska Airlines suddenly lost a fuselage section shortly after takeoff earlier this month. That sparked a crisis in confidence in Boeing's manufacturing processes and a flurry of investigations. Once the FAA approves an inspection and maintenance process, it'll be required on every one of the grounded jets prior to future operation. Karen Moscow, Bloomberg Radio.
Thanks, Karen. Tesla slashed Model Y prices in European markets. That's according to Investors Business Daily. Bloomberg's Ed Ludlow has more.
It's been an interesting 12 months because at times the market has viewed Tesla's ability to cut prices and open new pockets of demand, that lever, as a real positive, because operationally and on the bottom line, they are streets ahead of the legacy OEMs and other EV makers. They have some wiggle room on the bottom line to do that, though the other side of the coin is that there is a debate about whether these price cuts as a need to open new pockets of demand are indicative that the demand has gone away.
Bloomberg's Ed Ludlow reporting shares of Tesla now down more than 2%. I'm Steve Rappaport, and this is Bloomberg.
Wall Street. We do check markets all day long at Bloomberg. We have got losses right now for the Dow, the S&P, and NASDAQ as the selling continues. S&P down another 32 points today, lower by 0.7%. S&P now at 4733. We've got the Dow down 87, a decline there of 0.2%. The NASDAQ Composite Index down 142, a decline of 1%. Stocks join losses in risk assets as bond yields climbed on speculation the Fed will be in no rush to cut rates as the economy shows signs of resilience. 10-year at 4.10% with a 2-year that's yielding 4.36%. Gold down $23 the ounce, down 1.1%. And West Texas Intermediate crude down 0.5%, 72.04 for a barrel of WTI. Shares of Schwab are trading lower by 2.3%. Schwab tumbled after the brokerage reported declines in profit, new assets, and deposits. Navigated a tumultuous year of interest rate increases with dented the firm's balance sheet. Recapping, stocks are lower with the S&P now down 32 points, down by 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks, Charlie. Appreciate it. I'm John Tucker along with Molly Smith. We are in for Paul and Matt, and this is Bloomberg Markets. Goldman Sachs recently raised $650 million for investing in life sciences startups. Is this an area for you? Well, let's ask our next guest. Zoe Pendon is a partner at Ananda Impact Ventures. She's joining us from all these guests in locations like I want to be.
Harry
You
Trump.
go to Antarctica, then where? Then Mexico.
I'm telling you, the bachelorette parties are killer. But Zoe Pendon joining us from Spain today.
Nice.
Buenas tardes, Zoe. What's up?
Doing well here, thank you. Very warm.
So let's ask you on the risk spectrum, where do startups in health, nature, and biotech, where do they lie?
Risk. So when at Ananda, we invest in very early stage impact ventures across all those areas. And it is, we are very early stage, so it is high risk.
How much is...
But high reward if you get a home run on one of these. How many home runs do you get typically?
So in total, you're looking in a portfolio of 25 to 30, maybe 2. No? But that's the name of the game. And everybody who works in the business knows that.
The numbers game.
Yeah.
That's right. Well, I mean, tell us about some of the home runs you've had and like to what extent you can tell us about them.
So some of the areas that we've invested in terms of the life sciences that you're asking about, we've got a company called Closed Loop Medicine, and this one deals with dosage. So when you take a pill, everybody's taking the same dosage, which is the adult dosage and the child dosage, but we're not all made of the same things. Our biology is very unique to each of us, and as a result, many of us get side effects. And if you go back to how drugs were designed back in the 70s and 80s, there were not many women involved in those clinical trials. So many of the drugs that we take have much more exaggerated impact on female bodies too. So Closed Loop Medicine works with pharmaceutical companies to do personalised digital dosage. So that's using artificial intelligence and tracking lots of data. So that's one of the ones. And then another one called Resistant. It's a very recent one that we've done, so very, very early. But, with the recent pandemic, everybody's become much more aware of the need for biosecurity and how pathogens can be used as a weapon. It's quite worrying, really. And what is the next pandemic that nobody really talks about is antibiotic resistance. So what resistance is it's able to map all different strains and say where all over the world where you've got the worst antibiotic resistance and make people aware of this.
Yeah, we especially with my kids, it's like every time they went to the doctors, they'd get amoxicillin or some antibiotic, and you had to start wondering about like the resistance levels and what the ultimate result of that is. Hey, as an average Joe, can I get in on the ground floor?
Can you get in the ground floor in impact investing or life science?
Well, any of the companies that you're talking about. This is like, I want to get rich too.
It's incredible. Yeah, I'm sure. I think we all. But no, it's important, not just getting rich, it's about having impact as well, and making things a better place, better healthcare for everybody, more accessible, and better lives for everyone. That's what impact investing is all about.
Got to think that there's got to be some kind of AI application here. So tell us a little bit how that's coming into your space, and if that's
the intersection of AI and life sciences, etc.
I don't know. That seems
That's
right.
what got my attention.
All right. Well, Well, John wants to know about it. So tell John what's going on there.
Okay, so I mean, you've just seen this money all going into from Goldman Sachs, and I must say it's not the only big fund that they've got. They've also got a climate fund as well. So Goldman Sachs are making some interesting moves just generally, not just in the life sciences. But we've seen lots of people go into the life sciences 20 years ago, similarly as they did with clean tech, and get quite bruised. So the question is, why are we seeing this again? So yes, that's where the AI comes in, making it cheaper, quicker to build models using existing data and synthetic data. And then the previous person that we had in the studio talking about compute power too. So in relevance to life sciences, we've got the ability to build new biological and chemical models as well, having this extra compute power. But what's also interesting, and I think this is where Goldman Sachs are picking up, is with market forces as well. We're seeing this trickle-down effect and from the big tech players, the Magnificent Seven that we're calling them now, investing heavily into this space. So you've got 6 out of those 7 from the Magnificent Seven investing in healthcare and AI and life sciences. Just to give you one example, which I'm sure people are hearing about on the news, so Google DeepMind spin-out, Isomorphic Labs, so they're reducing the time for drug discovery, signed 2 large deals worth $3 billion with Eli Lilly and Novartis. So that's really interesting revenue apparently coming in quite early on, which we didn't see with that first trend 20 years ago in the early 2000s. They were mostly developing single assets, single drugs. So if it doesn't work out, you spend an awful lot of money at the beginning stage to then lose a lot. So extremely high risk. So what we're seeing is we're reducing that risk by being able to discover more potential drugs using artificial intelligence, increased data to reduce the risk at every single stage of a life science business. And I think that's why you're seeing now Goldman Sachs and many other people forging back into life sciences, which is a very, very impactful area. So the more money that goes into this and the more chance you have of success, this is a very good thing for everyone.
Zoe, do these companies come to you, or do you go scout these companies out? How does that work?
It's always a bit of both, actually. What we like to do at Anand is we have certain mega trends that we go for. So we've got certain fields or different areas of impact that we feel are the hot areas over the next 5 to 10 years. And for instance, we started to focus a lot of time now into tech bio companies. So this does come under life sciences, and it's one particular area which is more about computational biology. So using AI with biology. So it's the less capital intensive end of the life sciences, just let's say that. And that's where we're expanding our field, and we will often go out and look to the universities, work with the angel investors who have a background in this area, and go out and find as much as we do they come to us. So it's pretty much a half and half sourcing strategy.
So Zoe, you started out by telling us that, for every 25 or so strikes, maybe 2 or 3 of them hit. So it's obviously a lot of them that don't work out. I know we don't like to harp on our, misfortunes, but can you tell us about maybe some of these that haven't worked out for you guys?
Difficult to name names right now, but what will tend to happen is if they've gone for a single asset strategy. If you're talking about life sciences, you spend a lot of money up front, and if that one doesn't turn out to have the product market fit, then people are not willing to pay. At that point, you've had to spend a lot of money, and you run out of money. It's as simple as that with the life sciences. So that's why many of them haven't worked out in the past. But like I was saying, with everything that's happening now, you get more bites of the cherry. with artificial intelligence and with companies. So it's reducing that risk and being able to spot what's not going to make it. And just saying, time is the most precious thing for these entrepreneurs as well as investors. If it's not going to work out, let them go again. Let them build on the failures of that one, because all science is built on on the shoulders of many of those that have gone before. Let them roll again into another one. So failure is not the disaster as many see it would be painted. It's just the next stage.
Zoe, a pleasure to talk to you. Appreciate you stopping by. Zoe Bedden, a partner at Ananda Impact Ventures, joining us from Sojus, Spain. Investing in life sciences startups. What was the figure of the for every 20 there were like 3 home runs maybe?
That's what, wait, sorry, on home runs? What'd you say?
Home runs.
Home runs, sorry. Okay, yeah, home runs. My bad. Sorry, it's been a long day. It's my first day back to work in a while.
I know. You're still in vacation.
I'm back. Don't worry, everybody.
Let's do a market reset. S&P 500. 30. Am I too hard on you? 35 points lower. That's down 0.75%. 47.30 on the index. Dow down 103 points, and the Nasdaq 100 right now is 169 points lower. This is Bloomberg Markets. And that brings us to 12:33 on Wall Street. Let's get an update on news from around the world. And for that, here's Dan Schwartzman.
Thanks, Molly and John. President Biden has made the decision to reclassify the Houthi militants as a specially designated global terrorist organization. In the final days of his administration, former President Trump had labeled the Houthis as a terrorist organization only to have Biden revoke the designation early in his term. The Houthis have been firing missiles and harassing commercial ships transiting the Red Sea as their way to protest Israel's invasion of the Gaza Strip. Operators of Boeing's 737 MAX 9 jets have completed inspections on an initial batch of 40 planes. It's a key step to eventually ending the grounding of the aircraft. Bloomberg's Karen Moscow has all the details.
The FAA will now review the findings from those 40 checks to determine whether the Boeing-drafted procedures are appropriate to return the fleet of 171 parked MAX 9s to service. The agency ordered the grounding after a MAX 9 operated by Alaska Airlines suddenly lost a fuselage section shortly after takeoff earlier this month. That sparked a crisis in confidence in Boeing's manufacturing processes and a flurry of investigations. Once the FAA approves an inspection and maintenance process, it'll be required on every one of the grounded jets prior to future operation. Karen Moscow, Bloomberg Radio.
Thanks, Karen. The super PAC supporting Ron DeSantis, Never Back Down, has begun a round of layoffs, although the number of those losing their jobs was unclear. The layoffs come despite DeSantis' campaign claiming they have a path forward. The group had spent heavily in Iowa, where DeSantis finished second by 30 percentage points.